same kind of way in the city, and that's really problematic. It's making him feel really negative. So people say, well, it'll just take time for people to adjust to these.
여러분 안녕하세요. 안녕하세요. 오늘도 있으므로 여자입니다.
For consumers, it's about the price level. It's about the adjustment, the cumulative inflation we've seen since 2020, and we've talked about the scars of that. What Dan Swan said recently, we're all
오늘은 금요일이죠? 금요일이다 보니까 오늘 휴식 시즌 마지막 날이고 오늘은 열심히 달려보고 돈 많이 벌고 그리고 주말에 쉬면 돼요. 일단은 매매 시작하기에 앞서 차트 봐야 되는데 이게 무슨 상황일까요? 와 미쳤다 진짜 이렇게나 많이 떨어지다니. 와 진짜 여기에 매수 들어갔었으면 진짜 완전 망할 뻔. 주원씨 네 안녕하세요. 그쵸 어제 얘기하셨잖아요. 오늘은 PCE 발표 있는데 되게 중요한 발표인데 이런 발표에 들어간 돈 볼 수 있는지 아니면 잃을 수 있는지 이런 발표에 달려 있어요. 사실은 어제도 너무 어려웠어요. 어제 제가 레버리지를 원래 6대20으로 계속 했는데 어제는 6대10으로 바꿨는데 너무 조심스러워서 언제 들어가야 되나 계속 이런 생각을 했는데 계속 타이밍을 놓쳤어요. 지금 들어가야 하는 괜찮은 것 같기도 하고 근데 너무 소심한 편이라서 안 들어가게 됐어요. 그래도 결국엔 어떻게든 좀 들어가다가 타이밍을 괜찮은 타이밍을 잡아서 들어가다가 어제 한 9만원 정도? 9만원 정도 벌었는데 원래 한 30만원까지 벌었는데 근데 그때도 타이밍을 놓쳐버렸는데 결국엔 9만원으로 나가게 됐습니다.
Sure, John, thanks for having me on. They have to translate things that they've achieved and that the public doesn't appreciate.
어제도 런이었다가 지금 발표 이후 분위기가 완전 달라졌어요. 그러니까요. 어제 계속 올라가는데 그리고 갑자기 확 떨어지고 있잖아요 지금. 과연 오늘 어떤 기술을 보여줄지는 아직 예측하기 어려운데 타이밍을 좀 봐야죠. 오늘도 레버리지를 1대10으로 갈 거예요. 금요일이라서 돈 많이 벌어야 돼서 돈 많이 벌고 주말에 돈 쓰면 되잖아요.
I'd also argue, Mohammed, you need the labour market to hold up for the rest of this year to allow the scars of inflation to actually heal. Do you think the easing of financial conditions over the last few months going from the end of October, Mohammed, do you think that's sufficient to lay out weakness in the labour market?
I don't, because a lot of this is like pushing on a string. Corporates will be able to refinance at lower rates. Mortgages slightly better, but the reality is a structural issue. I mean, that is the big risk for the administration, is that the economy slows this year because some of the drivers of last year's growth are no longer there, including high savings. And secondly, inflation stops going down. You know, John, I've said we are in the sweetest spot of the inflation reduction right now. It's going to get tougher going forward. And we've already seen from Europe that it's not out of the question that not only does inflation stabilize, but once in a while you get the rate going up. And that would really impact perceptions.
The White House is so excited to lean into this, Mohammed, very soft landing expectation. The timeline may be on their side, but when you look out to November, where are the vulnerabilities to that soft landing?
So the vulnerability of the three of them. One is what the external world is imposing on the US. It is getting harder to grow in this global environment.
앨런
We have
마스크
disruptions of
지금
supply
뉴스를
chains,
보고
we
있는데
have cost pressures
야,
in the
앨런 마스크
pipeline,
또
we have delays in
어떤
shipments. All that has a market
이상한 거
Two,
시작하려는
the
것 같은데요.
consumer is going to be
뭐
under
어떤
more pressure.
AI
You talked about debt
스타트업인데
levels in the previous
뭐
hour.
물론 AI 지금
Savings
계속
have come down.
인기
We no longer
중이고
have the pandemic savings being utilized to the extent it was
나중에
before. So there's a real
많은 도움이
risk
될 수
that
있는데
growth slows to the 1.5% level
60억
with
달러
downside that we may slip
자금
into
조달
negative quarter.
목표.
And then thirdly, inflation.
아이고야 욕심쟁이야 진짜.
The market
이
expects
앨런 마스크
that
진짜
it will do so
욕심쟁이야.
in a much more orderly way than I think will materialize, unfortunately.
I'm struck by something. I keep thinking about this. Cameron Dawson said, Mohammed, where she was saying she's checking for pricing power among all companies that are going to be reporting earnings. If they don't have that much pricing power, that's great news for disinflation. That's very bad news for their bottom line in terms of just their margins. How much is this sweet spot for disinflation? Not necessarily a Goldilocks spot for a lot of the stocks that are getting bid up simply because it means margin compression down the line.
Oh, and you're seeing it. I mean, you know, my big theme for this year is dispersion. And just look today. We're realizing that not all tech is tech, and not all luxury is luxury. That is what the results are telling you.
테슬라
On the one hand for tech,
12%
on the other
하게 되네.
hand for LVMH. What you're seeing is growth dispersion. And some companies will have pricing power, others will not. And we are going to see this dispersion. Now, the market right now is betting on a very aggressive rate cycle, allowing for everything to go up, because that is the experience since the global financial crisis. As long as the Fed loosens, everybody benefits.
그러니까 지금 테슬라도 비트코인만큼 되게 위험한 주식인 것 같아요.
They're looking to say 10% downside on the S&P 500 is not particularly
예측할
unusual.
수 없어요.
Are you expecting that kind of reality check, Mohammed, anytime soon? The market's given where stocks are at all-time
그냥
highs,
진짜
spreads, global
비트코인이나
spreads.
테슬라가 그냥 카지노랑 아예 다를 게 없어요. 그냥 이 주식을 하면서 에이씨 모르겠다 일단 해보자. 잭팟도 할 수 있잖아요. 아니면 아예 망할 수 있으니까 약간 이런 느낌이라서 되게 위험한 주식인 것 같아요.
Disappoint with a downward risk, the balance of risk on the downside. This comes against the universal romance with the softest of all soft landing. And then secondly, a recognition that the Fed is not going to validate what's being priced in right now in terms of cuts.
Chairman Powell next week, what kind of message are you expecting? And what we heard from Williams a few days after we spoke in December, of what we heard from Powell at the December news conference?
Or the one we'll hear at the beginning of the press conference versus the one we'll hear at the end of the press conference. I don't know.
True.
You know,
Confusing.
sorry?
It's been confusing.
It has been confusing. Part of that is that this is a confusing time. You know, people that I talk to privately, expectations, John, are all over the place. There are people who think they won't stop, that they won't cut rates until the summer, and then we get 75 basis points. There are people who think they'll start in March and they'll front load it because of the elections. There are people who think like me that they're likely to wait until near much nearer to the summer and start 25 basis points. Expectations are all
아닌 것
over.
같아요.
Really interesting is that forward guidance have not, as last
조금 더 기다려보고 어떤 추세를 보일지는 보고 어느 정도 파악하고
You said you're not in the
그때
business of
그때
predicting the
좀
future. Can I just
들어가는
jump in and get you to
듯?
predict the future? When's that first rate cut coming, Mohammed?
My own gut feeling is that it will come in the beginning of the summer,
그거보다
so
또한
call it June, maybe
밈코인
July, and it will be 25 basis points. And not only do I think that
주식도
that's
많죠.
what's going to
밈코인
happen,
잠시만요.
I think that that's what should
이름이 되게
Mohammed,
신기하네요. 밈코인.
thank you, sir. That's always
다시 좀
Mohammed.
들어봐요.
Parent of Bloomberg Opinion and Queen.
봅시다.
Lisa, what do you make of that?
The idea that this is what they should and this is what they will do, which means pushback, and frankly, it means a lot of repricing the market. That's all I can say. Because right now, you have a significant lean, about a 0.5% chance, 50% chance
제가 아는
of a rate cut.
밈인가요?
Not the business predicting the future, but we're going to. Just a little bit
아,
into the conversation.
아 이런 거요? 아 알죠 알죠. 근데 이거 밈코인 말고 이거 도기코인 이름이 가지고 있는 건가요? 밈코인인가? 아, 도기코인, 도지코인. 아, 한국말로 되겠구나. 위험한 코인 거지만 좋은 코인도 되는 거죠. 그쵸? 아무래도. 그리고 최근에 되게 이상한 코인들이 많이 생겼는데 되게 뭘 사야 할지 잘 모르겠어요. 그러니까 매수 들어가면 좀 괜찮을 수도. 지금 테슬라로 올라가고 있잖아요.
So much lower before you see it turn back up to volatility. So higher volatility backdrop, both in terms of the macro conditions, including inflation, and the market, I think, should be part of the assumption as we continue this year.
Between mixed messages from the Federal Reserve on interest rates, geopolitical instability, and the presidential election less than a year away, investors are bracing for the unpredictable. Sarah Hunt of Alpine Saxon Woods writes in this: the growth in earnings and drop in rate scenarios needs to find a common narrative. At the moment, it seems difficult to square the circle of a market looking for both 10% plus earnings growth and deep cuts in interest rates. Sarah Hunt joins us around the table. Morning, Sarah.
Good morning.
So it's your job to square the circle, please.
I don't think we can, and I think this is the biggest issue right now, is you've had this big move up in multiples. You've got this expectation that the Fed is going to cut rates, at least from the market's perspective, more than the Fed is telling you. You've got this growth in earnings while you're seeing fourth quarter earnings coming in fine, but the expectations going forward so far have been a mixed bag, and for many people are just pulling guidance. So how do I square that and say, okay, that should all be fine, and risk assets should just be able to keep performing well in this environment? And I think Cameron made a really good point earlier on margins, which is one of those things that we've been looking at and saying all these things that we're doing are not positive for margins. How does that help?
So which part of the rally are you leaning against the most? Which has gotten ahead of itself?
Well, the parts that have gotten ahead of itself are still the parts that you can't ignore, like the tech sector, right? Because some of those earnings really are growing that quickly. So in some cases, something like NVIDIA, yes, it looks like it's had a huge move and it's grown enormously, but you look at the cash flow that they're supposed to generate and you go, okay, actually, relatively speaking, it's not as crazy as it looks in some other areas. I just think the entire idea that you can just keep pushing risk assets higher while you're looking for all of these minutiae that's going on and the rest of the world not doing that well, it just seems a little difficult, but it's hard to pinpoint exactly where the problem is. Otherwise, you could just say, well, I'm going to short this or I'm going to short that, and it's tough.
Now for the psychology portion of the program. I'm curious how much this is just really a reversal of what we saw last year. That people were so pessimistic and they got it so wrong that now they feel like all of their sort of little voices in the backs of their heads saying, oh, this looks a little concerning. They got to kind of ignore that because it has been a nirvana economic outlook, at least so far this year.
Yeah, and isn't that usually where the narrative changes, when everybody decides that it's okay and it's really different this time and that's all right? I mean, we fight with that ourselves all the time, which is, are we really in a situation where you've got different drivers of market performance, you've got different buyers of equities, you've got hedge funds, you've got macro funds, does that really change the underneath finance? And when you finally start to say, yes, the fundamental picture has changed, well, the world tends to be,
타이밍을 놓쳤나?
well, maybe not exactly.
이번에도
So the answer is I'm not really sure. And I think that you've got some time in the near term, but you've got all this stuff coming up in March. Does the Fed really cut? What do they telegraph? What happens with the BTFP with it expiring? There's a whole lot of things in the underneath that also make it figuring. I think that you're going to see, to Liz Ann Saunders' point, some more volatility.
So Sarah, what do you like right now?
Well, like I said, we like some of those big tech names that people are that have moved a lot. I mean, the NVIDIA's been a big move, but there are some areas that we think that are really, you've got some good cash generation. Some of the other semiconductors are quite expensive relative to NVIDIA right now. And I think that even though we like them going forward, because we
아니
just
사실
think that we're
지금
going to continue to increase
시간이 너무
technology,
애매해서
some of those areas are
시장에도 별 평화가 없고 뉴스도 보니까 지금 별 재밌는 뉴스가 없고 그냥 기다려야 될 것 같아요.
Lisa and I were talking about the conflict in the data and also the conflict in the earnings. I think it's really important just to look at Visa yesterday. Consumer spending, resilient. Then you go to Capital One and they're talking about borrowers falling behind on their credit cards and auto loans. And I'm trying to work out, if I was an investor right now, do I want to own consumer discretionary in America? Is that a story I want to buy?
Well, this is exactly goes to the point of LVMH just having great numbers, and people like Capital One who have on the credit side are starting to see some issues. Discovery started to see some issues on the credit side, the auto loan side. You've got a huge bifurcation in the consumer, and you've got a high-end consumer that's doing fairly well, and you've got a low-end consumer. That to the whole point of this
주원 씨도
economic
지금
backdrop,
계속 기다리고
price levels are
계세요.
still very high. You know, yes, all those things that
아니요,
Pamela
벌써
Rand was talking
들어왔어요.
about in the economy that are good are good. It
궁금하네요.
doesn't matter if I'm struggling to put groceries in my cart and everything is so much more expensive than it was.
Just to build on that kind of narrative, we also got American Express just moments ago, and they said that, yes, write-offs not so great, but they expect much better earnings because of robust sign-up to some of the premium cards. So again, it's catering to that richer kind of class. I want to go back to this idea of margins then, and sort of the margin compression and pricing power. At what point is disinflation, which is good for the economy and particularly for lower income families, at what point is that very negative for a certain slew of stocks in terms of their margins that you're watching?
There's always an issue when you've got price level changes for somebody. It's good for somebody, it's bad for somebody else, right? You drop oil prices down, all of a sudden refiners have a good couple of quarters. There's always the input depends on who the input people are and who the output people are and which prices are actually falling. So it's going to be an issue, but I think that margins in general, you've got a lot of cost structures that are going higher. Wages are going higher. They might not be going as high as inflation, but they're going higher. If you can't get continued price increases, which I would argue the automakers are having trouble doing. I mean, look at what Tesla just did. Look at some of the areas that are big. Some of the tech stocks, it's not so much of an issue because if your input into something's ultimate manufacture is a small part of that price, it's much less of an issue than if it's a big part of that price because everyone's trying to cut costs.
What about some of the winners, the airlines, the cruise liners, some of those kinds of areas where it is discretionary spending and there's a real big mix of potential clients?
Well, on the airline side, it's tough because you've got capacity changes all over the globe that are sometimes hard to track and sometimes conflict with where people think that they should be, right? So the U.S. domestic has not been as good as international because there's been additions in capacity on the airline side. There's plenty of places where people are spending money. The question is there enough capacity restriction to make that price for people able to raise prices, which I'm losing my words, but you know what I mean.
Don't worry, it's early in the morning. Let's finish on the autos if we can. We've been doing a round trip. It's like stock market roulette at the moment, so let's finish on the autos. Tesla was down 12% yesterday. This feels like a really difficult moment, and I don't want to just say just for Tesla, I mean the whole industry in America right now, going against the low-cost producers out of China at a time when labour costs, particularly for Ford, Stellantis and GM, are moving in the wrong direction for them. How investable is that sector at the moment, from your perspective?
I think it's very difficult because I think you're looking at an area where you haven't had as much consumer demand because interest rates have gone up, so now cars are even less affordable. Insurance is going higher. There was a story on insurance because cars are more expensive to fix and there's a lot more technology in them. All of these things are driving it to be a much more expensive proposition than it used to be. I think for Tesla, you've got this interim period where they're now promising a more low-cost vehicle to compete with other things, but also because I think you had a huge range of first adopters in EVs, and now EVs seem a little bit stuck, and all the automakers went all in on EVs because they were told to, mostly by the government and everything else. I think you've got a lot of cross currents. It makes it very difficult to parse what the underlying real financial fundamentals are.
Bramo, January 26th, and I think we're down about 26% year to date for Tesla. It's been a brutal start to the year.
And that press conference didn't really help, especially with Dan Ives saying that basically it was a train wreck, and then a plane crash, and then he just said, it's an understatement. So
But
at
he's
this
still
point,
bullish.
Well, for now.
Yeah.
Wedbush just removed Tesla from their best ideas list. Just
Interesting.
wanna
So
throw
that's
that
a
out there.
subtle
So there's
shift.
like
I
a
missed that.
subtle shift that's
Interesting.
going on under the cover.
Hey Sarah, it's good to see you. As always, thanks for being with us in the new studio. Sarah Huntner of Alpine Sexton Woods. Coming up next on the programme, looking ahead to the Fed meeting, Bob Michael, JP Morgan Asset Management for the next 30 minutes on Bloomberg Surveillance.
기다리는 중인데 지금 시간이 너무 애매해가지고 지금 한 9시 30분도 안 됐어요. 그러니까 지금 들어가기엔 별 의미 없을 것 같고 조금 기다려다가 확 들어가면 돼요. 근데 금요일이라서 너무 위험하지 않을까요? 제가 사실 금요일인 그 주식시장에 관련된 거는 그 금요일이 되게 무서워요. 지금 잠시만요. 뉴스 보니까 나스닥 계속 올라가고 있네. 올라가고 있는 추세인데 설마 오늘도 매수? 롱으로 들어가야 될 듯. 신이시여 도와주세요. 방법을 알려주세요.
That was really smart too because they were able to leverage that number as high as possible. So they always zagged where the money was and where the opportunity was.
그러니까요. 지금 뉴스 보고 있는데 별 그러니까 재밌는 것보다는 다 쓸데없는 뉴스인 것 같아요. 그냥 재밌는 거 있으면 바로 알려드릴게요. 어제 검색하다가도 사실
Brace yourself. Bob Michael, JP Morgan, showing up with attitude. Real
저희
attitude.
대머리 아저씨 나왔네? 한 들어봅시다.
S&P 500 look a little something like this. We're negative here by 0.07%.
나스닥 들어주고 있네. 좀 많이 들어줬네. 0.33%.
On the Nasdaq, we're down about a third of 1%. The Russell of small caps up by 0.4. In the bond market, 2-year, 10-year, 30-year, much more on treasuries a little bit later in this segment. We're unchanged on a 10-year, 412, on a 2-year, higher by a basis point or two, 430.97. And just to finish on foreign exchange, ending the week basically where we started the week and ended last week, around 109, 108.70 on the euro, positive by 0.2%. Under surveillance this morning, Treasury Secretary Janet Yellen touting the US economy, telling the Economic Club of Chicago that inflation is, quote, well under control, and that most Americans would agree.
People are getting ahead, they're seeing their fortunes improve, and I believe if inflation stays low,
근데 주원 씨 오늘 의외로 뉴님 되게 피곤하게 보이세요, 되게 무섭게 보이세요 이런 말이 없는데 저 오늘도 메이크업을 좀 했는데 원래 이런 소리 나오잖아요. 오늘은 좀 메이크업을 잘못 건나 보다.
So it's not catching up to Americans just yet, but maybe it will. And I think she was leaning into that. I also thought her comments on tax cuts were really interesting. They prolonged them, especially given some of the focus on reducing the deficit and how to distinguish from the former President Trump. But only with a nuance. If you make $400,000 or less, which we've heard Biden say this a lot, but if you're a little bit above that bracket and Biden's reelected, it's going to be very difficult to get those Trump-era tax cuts through.
Speaking of Donald Trump, going after Nikki Haley and Nikki Haley's campaign donors, saying anyone that makes a contribution to his GOP rival will be, quote, permanently barred from the MAGA camp. I'm not sure how many people believe this. Losses in Iowa and New Hampshire leaving Haley with little chance of winning the GOP nomination, but that's not stopping the former president going after her donors, who contributed around $50 million to her campaign in the second half of last year, slightly more than what Trump received. Anne-Marie, we heard from Greg Valier of HF Investments, and I said, will he actually follow through with this? And he just said flat out, no. not a chance.
What politician is going to follow through when a
Turn down
billionaire
money.
calls you and says, I can help fund your campaign? And campaigns in America are very, very expensive. What was so interesting about the campaign
네,
financing of both the
20분간
super PACs is
휴식하면서
Hillary
보시죠.
brought in more, $5 million more than Trump did, but
네.
potentially that's going to start to evaporate.
The other unusual dimension of this, of course, if you look at the lessons of New Hampshire, the inability of the former president to attract moderates, there are some people who believe the perfect running mate would be Nikki Haley. How much do you want to poison the water over the next few weeks?
It seems like Greg Valliere, just to lean on his comments, didn't seem to think that was a likelihood.
Not happening.
And honestly, after some of the commentary back and forth, it doesn't seem likely. That said, the problem with independents really raises some questions for the Trump campaign.
Well, if Trump wants to win, he might have to look outside a potential MAGA running mate and get someone that's more in the middle so they can actually
지금
encompass the entire party.
가격은
If he has Nikki Haley,
17,500원.
she can go out and talk to women living in suburbs. That would help him a lot.
That's the politics. Let's pick out a single name. We've been talking about LVMH. We've talked about Intel as well. LVMH is
좀
rallying hard.
올라가고
Intel
계속
is not.
올라가고
It's down about
있는데
11%. Shares of Intel tumbling
역시 오늘
after the chipmaker delivered a
매수 많은
disappointing
것 같아요.
forecast, renewing doubts about a comeback for the once dominant company. Intel expecting first quarter sales to come in around $1 billion shy of estimates. The CEO, Pat Gausinger, saying the company has a lot of work to do. Gausinger joins Bloomberg Technology about 1 p.m.
분위기가
Eastern
매수
time.
분위기다.
What are your thoughts on that, Gramo? Intel's in a tough spot, isn't it?
Yeah, given the fact that profit they're expecting in the first quarter 13 cents a share versus the expectation of 34 cents a share. You know, we were talking about this with Ed, and it is a mix of what your products are. But to Mohamed El-Erian's point, the dispersion of the haves and the have-nots, it's not just to go into tech. It's to go into the technology that is most leveraged to the current, sort of feel in the business world. Those dispersions are getting greater and greater, which makes it more challenging to really have an overall call that percolates down to the smaller companies or bigger companies.
Well, for Intel, they're just not in the right space, in the right spot right now.
And they're not gaining traction. And how much can you really get a competitive edge when there is already that critical mass
일단
in some of the other chip makers and some of the other tech companies?
기다리면서 대응을 보면서 자종 드려볼게요. 지금 따뜻한 거 먹고 싶어서 좀 조금만 계시고 제 대신에 초밥밥 계실 거예요. 잠깐 갔다 올게요.
Bob Michael joins us now. Morning, Bob.
Good morning.
Good to catch up with you, sir. We're not going to talk about Liverpool yet. I'm going to save that for the end of the segment, okay? So just wait for that. Let's talk about bonds and the Federal Reserve first. And this economic backdrop, this is a big change for you. I remember being with you 12 months ago, anticipating that hard landing. Not anymore. Why do you think this can continue?
Well, 12 months ago, there was every reason to expect recession. There were rate shocks delivered. Everything looked frail. I would argue in March we had that recession with the collapse of the regional banking system. But the policy response was overwhelming at the time. And within a couple quarters, we realized it was more like a TARP moment than anything else. So things are stabilized, and we took off again. And I think as the year has gone by, businesses and households have managed to absorb the higher level of prices. Yes, they don't like the higher levels of prices, but we're in a disinflationary environment, not an inflationary one, and unfortunately not deflation just yet. So it looks good. I'm tempted to see how much of a high five Jay Powell wants to give himself in the Fed next.
You think there might be a victory lap?
They're entitled to it. When you look at it, it cannot possibly get better than this. You've had 25 consecutive months of unemployment at 4% or lower, and I guess we'll get another update in about 45 minutes or so. But when you look at the last 6 months of core personal consumption expenditures and annualize that, 1.9%, that's the 2% target. They are there.
I'm not expecting Chairman Powell to walk into the room and start high-fiving Mike McKee anytime soon. I don't think that's ever happening. But Bob Michael, what do you expect he will do next week? Is he going to tee up rate cuts in March, given what you've just said?
I don't think in March. I think June is where the market has gravitated to, and I think that's a good marker for him to put out there. I like what Christine Lagarde did, which is to acknowledge that there has been improvement, that they can think about things, that the level of rates is substantially pulling inflation down, and there's an opportunity to make a shift. When you look at the real Fed funds rate, the Fed funds rate's 5.25% to 5.5%. And if you're around your 2% target, the real Fed funds rate is 3.25%, 3.5%. That's way above what the Fed is telling us is normal.
So how much is your whole idea predicated on the idea that the new normal looks a lot like the pre-pandemic old normal? You push back against the idea that we're in a structurally higher inflation world that's going to force the Fed, even if they start cutting rates, they can't cut them that far.
I think that's probably true. I think the last 15 or so years were the anomaly. For sure, us baby boomers blew things up in 2007, 2008, when we learned to leverage everything in the housing market, and it's taken a long time to recover from that. But now there's a new generation coming along. Start with the millennials and the surrounding cohorts, and then suddenly they're not 17, 18 years old anymore. They're in their 30s, and they're the dominant earner, spender, and saver, and that's the environment we're in. Now, you just don't go up to 5, 6, 7, 8% and stay there. We've gone a long way. Things are slowing down. You can take some of the pressure off the system, let things stabilize in there, and then see where the economy goes and what you have to do with rates after that. That's more normal to me.
So if the Fed can't cut rates as far as maybe in the past, or even as people previously thought, just simply because the economy is managing with rates where they are, how do you reason around
저도
getting
사실
more
아직
aggressive
감이
in
안 나요.
bonds, which have both a credit component that has gotten very tight and have the rate component
분명히
which
올라가고
may not be
있는데,
able to compress as much as some
근데
people expect.
정확히
So we
어디쯤
think they could
들어가야
bring rates
되는지
easily down to 3%.
파악이 도저히 안
they'll
되겠어.
only do that if they're at their 2% inflation target. That's a real Fed funds rate of 1%, and they've guided us to a real Fed funds rate of 0.5% is normal. We'll see as we head there whether that starts to shift. So that's 225 basis points of rate cuts. That's a lot. That takes a lot of pressure off of corporate America. And a lot of corporate America funds itself in the floating rate market, either through banks directly or through private credit markets or bank loans that are syndicated, things like that. It also takes a lot of pressure off of the consumer. Things like housing, maybe that starts to pick up in earnest again. And a lot of the borrowing that's gone on to revolving rate credit cards, that pressure comes down. So you do get a good level of consumption. It does remind me of 1995. And credit spreads can go to 300 basis points in high yield, trade from 275 to 325, and stay there for years.
Bob Michael, you're going to stick with us. We'll expand on that conversation. Some big calls and a big change for Bob Michael at JP Morgan Asset Management. Constructive on credit. Here's a snapshot of financial markets for you. Equity futures on the S&P 500, almost totally unchanged. Let's get you an update on stories. Elsewhere this morning, here's your Bloomberg Brief with Yahira Hakers. Hey, Yahira.
Hi, John. Shares of American Express jumping after posting its fourth quarter earnings. The credit card giant is sticking to its long-term revenue goal while missing profit and revenue estimates. Amex is still aiming for annual revenue growth exceeding 10%. Meanwhile, Visa saw an 8% profit increase in the last quarter. Apple is revamping its App Store and iPhone features in the European Union. The overhaul is an effort to appease regulators in the region, which are set to impose new antitrust rules. Still, the tech giant is mounting a legal challenge against the Digital Markets Act through the EU courts. And Liverpool manager Jurgen Klopp is stepping down. The football club chief said in an interview posted on X he will leave the club at the end of the English Premier League season. Klopp has been at Liverpool since 2015, winning 6 trophies, including the coveted Champions League. He said he is, quote, running out of energy. That's your Bloomberg Brief. John?
Yahira, thank you. Had a tweet moments ago.
무서우신지
Could we get a moment of
피곤해
silence this
보이신지
morning
둘 다,
for Klopp leaving
둘
Liverpool?
다.
Massive shout out to Anne-Marie wearing red in
역시
solidarity.
금열은
She definitely knows.
그럴 수밖에
Hey,
없죠.
mate. Bob Michael, tell us your thoughts,
일주일
Liverpool fan.
동안 열심히
The
살다가
first thought is shock and horror.
결국엔
It's brutal, particularly when you're
금요일에
a bond
완전
fund manager and
지쳐요.
been through a 2-year bear market. Now this. But the reality is, he did us proud. He brought us back to the top. You heard 6 trophies. So I wish him the best. I don't think he's done. I think he winds up managing a national team.
Oh, really? You think that's where this is heading? Germany?
I'm hoping the U.S. or
Oh,
England.
that's where you think this is going.
I don't know where, but
Okay.
someone with his talent, he'll get restless after a period of time. And I think a national team's a good spot for him.
Well, he's still young. Unbelievable manager for Liverpool Football Club over the last 8 years or so. Bob Michael's going to stick with us. Up next on the programme, the outlook for credit.
One of the really interesting things from my perspective is this kind of significant demand for corporate credit to start the year.
Constructive on credit, not just BlackRock, but JP Morgan Asset Management as well. That conversation up next.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
Future. I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money, we made our shareholders a lot of money. More importantly, we've grown the business and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges next.
Was going to keep winning the World Cup. This is a three as the economic picture.
Covering the intersections of Hollywood.
보시죠. 사실 지금 들어와도 별 소용이 없겠죠? I have no idea.
Live from New York City, good morning to you. Equities on the S&P 500 shaping up as follows. On the S&P, we're negative by just 0.03% after a 6-day winning streak on the S&P. Under surveillance this morning, the outlook for credit.
One of the really interesting things from my perspective is this kind of significant demand for corporate credit to start the year. Some folks are rotating out of short-term cash products into corporate credit. Some are rotating out of other asset classes. Some are kind of bringing their allocations back to neutral where they may have been underweight. So I do think that there's a broad-based kind of appetite to lock in all-in yields.
There is a lot of appetite. Bob Michael writing this: we retain a significant core holding in investment-grade corporate bonds and securitized credit. Credit spreads have narrowed, but history shows us they can stay there for a period of years. Bob Michael's back with us. Bob, we mentioned this just briefly. Let's build on it. What's changed for you in the last few months to become constructive now on various places in credit?
What's become constructive for us is that the probability of recession has pretty much vanished over the last couple of quarters. And if you're in a soft landing and in an environment where inflation is moderate and the Fed can bring down rates, that's great for corporate America. The financing pressure comes down, consumers are outspending. We've seen that the last
조은 씨, 제가 봤을 때 진실이 하는데요. 지금 라이브 보시는 거 아닌 것 같고 그 녹음된 거는 지금 보고 계시는 것 같아요. 그 반응이 너무 늦어요. 반응이 한 5분 정도 늦어요. 자세히 확인해 보세요. 과연 지금 라이브 보고 계시는지 아니면 녹음된 거 보시는 건지. 왜냐면 큰일 나요. 혹시 제가 지금이야 들어가도 근데 주원 씨 저 달아오고
so
뭐,
much money
그
looking to come
뭐지 매매할
into
수
this market.
없을
You
거잖아요.
look where levels got to. Levels got here in credit spreads and yields simply with the money that's already in the
확인해
market.
보시고
I've not had a
매매를
single
같이 합시다.
conversation over the last couple quarters with the client who said, "Oh, get me out of bonds." Every single one is saying, "How do I get in? When do I get in? Where do I get in?" And you see it everywhere. You see it in money market fund assets. They're still at $6 trillion. You talk to corporate treasurers and pension fund CIOs. They're looking to de-risk. Everyone wants higher yields.
So this is a fascinating idea, the scarcity of bonds question, which has come to the fore a number of times in history. How much is this because a large chunk of corporate America are going to private markets to borrow and not to the public markets, so that there's sort of a limited pool of these types of securities?
I think that's some of it. I think the other thing that's happened is the backup in yields happened pretty quickly. Everyone wanted a bit higher, thought we would spend some time there, and then it's starting to reverse, so it feels a little like this time last year. So a lot of plan sponsors are a bit frozen, and rightly so. You look at the Treasury. The Treasury has moved a lot of its issuance to the front end of the curve. I would argue, put it out in 10 and 30 years, get those rates up or keep them where they are, allow people to get into this market who are going to be long-term holders. I think also private credit has served a lot of purposes. The most important one from our perspective, it's another avenue of non-bank lending that's materialized. And that's created a fantastic pool of capital that's available to backstop corporate America as well. So if you're a company, you can go to your bank. If you're large enough, you can go to the public markets. And the private credit markets are amply large as well.
What happened to all the zombies out there that were supposed to collapse in the wake of higher rates?
Well, you see it. There's just, look at the bun fight going on to finance Macy's now. There are so many different things that are happening that tell you there's so much committed capital that's waiting to be called and invested that nothing can really default. It just gets rolled over and restructured. I know it's insane to say that.
아무래도 10시 30분이나 장시작 할때 장스가 나올 듯 하네요. 그쵸? 저도 지금 계속 보고 있는데 지금 너무 애매해서 계속 기다리는 중이에요. 뭐 발표 때 물론 변동이 생길 수밖에 없고 그리고 장이 열릴 때 그때 롤러코스터 제대로 시작할 수도 있으니까 그때까지 좀 기다려야 되나 싶어요. 근데 아직은 타이밍 그 괜찮은 타이밍이 없는 것 같아요.
You just have to ignore it. But if you go back to September, there was still a lot of concern that maybe the Fed would come back and hike rates again. It was unclear what the Fed's message was. Now you've gone another quarter and a half, 2 quarters. The economy has done better than anyone anticipated, and inflation has actually done better than anyone had anticipated. And you've got that momentum heading into 2024.
You don't sound concerned about America's financing needs. This monster budget deficit, which could become a bigger monster in years to come, depending on who gets into power. But basically, whoever gets into power, it's a massive deficit. Are you not concerned about that?
Not today, only because I saw the need for it. We had a pandemic. We needed an overwhelming policy response. We had that fiscal and monetary. Now we're coming out of the other side. We're still in the shadow of COVID policies. You have to work them out. You can't keep piling up on them. You've got to let them come down. So I'm all for that. But I don't think you bring it down all at once.
Let's build on that, this idea that maybe it's not this year, but next year, that people start to get a little bit more nervous, especially as interest expenses continue to rise and some of the expenditures that are just baked in continue to increase. At what point do you care about supply, or is it never really an issue? It's just a matter of what the yield is and the fact that people want to lock in income.
Well, we're in economic nirvana right now, and one of the things the Fed can do to keep us there is to start to bring rates down. And if you go back to 1995, that was critical to have a soft landing. They cut rates 3 times by 25 basis points, and that took some of the funding pressure off of businesses and households, and that allowed things to stabilize. So I do think that's a necessary ingredient. We can't just assume everything's fine now, let's not touch anything. We've got to start bringing rates down at some point in time. And then I think things look pretty good.
To John's point about fiscal deficits, we've seen a 79% increase since 2019 of debt to GDP. The CBO says it's going to be 118% in
오케이, 제 간식 먹방이 끝났으니까 그러니까 귀여운 주먹밥이 안녕.
I hope not. I think every household, including all of ours, we have to balance our budgets every year, and I hope our federal government will do the same thing. I also think that ship has sailed. Coming out of the financial crisis, there was a lot of talk about financial repression and debt to GDP at over 80%, 100% takes so much off of GDP.
그럼 그 주먹밥이 그 주먹밥에 나오면 아 누님도 먹고 있구나 라고 생각하시면 돼요.
I hope that's not the case. I hope there is fiscal responsibility in place over the
뭐 차는 괜찮으니까.
and we bring it down, but I understand how we got here.
Mike McKee writes in, just subject header, nothing else. Ask Bob what my question should be. Next week in the Federal Reserve. This is a monthly
일단은 지금이야. 조금 타이밍 괜찮은데 일단 매도로 들어왔는데 일단 발표 시작하기 전에 매도로 계속 가보고 그리고 사실 왠지 발표 시작하면 확 떨어질 것 같아서 좀 괜찮은 결과 볼 수 있지 않을까 싶어.
Both certainly help. If you think there are two very large sellers of treasuries out there.
주원 씨랑 똑같은 타이밍에 했나 보다. 오늘 같이 가는 거죠? 오늘 같은 경우는 여트를 같이 탑시다. 여트 같이 타고 거기 위에 그 파티도 하고 그럽시다.
Well, where do you see yields coming down to? I remember the call of 3.0 right through the curve, 2s out to 30s. Is that still the call?
So, we're in the markets. We're investing client capital. We have to have a view. I can't sit here and tell clients, I'm sorry, we have no view. We've just plunked $800 billion into whatever happened to come across our doorstep. And our view is there is a soft landing. There's capacity for the Fed to bring rates down over time to 3%. That will still look historically high on a real basis. And in that environment, you can see the 2-year somewhere around 2 3/4 to 3%, and the 10-year 3 1/4 to 3.5%. So threes maybe not quite down to the 3% across the board when recession was a much higher probability.
Year end or year end next year?
No, I think once the Fed starts cutting rates with the money that's going to come into the market, it's going to happen this year.
Bob, this was fun. Economic Nirvana with Bob Michael of JP Morgan Asset Management and a whole lot more. Just a little sprinkle of Liverpool for the Liverpool fans out there. Bramo, we're going back to 3.
오,
going back to 3. Not
오케이,
quite
역시.
right the way through the curve, but getting close.
역시 떨어지고
When was the last time that
Yeah,
we
that's
heard that?
shocking, right?
The idea that everyone was worried about supply, it's the opposite issue. Everyone wants to get in, and there just isn't enough of it. To me, that really is a massive takeaway.
And that is a non-consensus contrarian call, I would say, based on what we've heard over the last 4 months.
Yeah, but a lot of people are going into credit, so they're buying it whether or not they know why.
Yep. Coming up in the next hour, Wally Adeyemo, the Deputy Treasury Secretary, Peter Chair of Academy Securities, Tiffany Wilding of PIMCO, and Ellen Wald.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
To learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services. And who are going to drive the wealth of the future? It's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But
사실은 오늘 날씨가
ticket pricing?
너무 춥고 건조했기 때문에 목에 카레가 계속 생겨요. 그러니까 오늘 좀 이상한 목소리 나오면 좀 이해해 주세요. 계속 따뜻한 물로 따뜻한 차로 계속 이 카레를 죽이고 있는데 결과가 별로 없어요. 지금 분위기가 괜찮은 것 같고요. 이렇게 조금씩 돈을 모아서 창이 열릴 때 팍 보는 데죠. 그쵸. 가습기 있으면 좋죠. 가습기가 제가 옛날에 가습기가 뭐 별로 소용이 없다 생각했는데 근데 역시 그렇지 않아요.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
아니면 그냥 어디 따뜻한 나라에 가면 되지 않을까요? 뭐 어디 대국이나 인도네시아 뭐 그쪽 나라? 조금 여행을 다니면서 몸을 좀 회복시키고
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington
매매를
headquarters.
잘하시니 수익분하고 편하게 여행도 하시고 부럽다. 저도 사실 그냥 여유를 부리는 척 사실 여유를 부리고 싶은데 실제로는 그렇지 않아요. 실제로 고민이 너무 많고 하고 싶은 일이 많은데 계속 못 하고 있어요.
that it's going to be pushed out further.
We are pushing back against
그래도 사실 좀 이거 해외 선물로 돈을 좀 많이 벌고 여행 갔으면 좋겠어요 진짜.
A higher volatility backdrop, both in terms of the macro conditions, including inflation, and the market, I think should be part of the assumption.
People still worry about inflation. And there's just not a lot of data.
한 2년, 3년 동안 고생을 좀 많이 해가지고 저도 이제 좀 쉬고 싶어요.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance alongside Lisa Abramowitz together with Anne-Marie Horder and I'm Jonathan Ferro. Your equity market totally unchanged on the S&P 500. What a difference a few months makes for the equity market. 6-day winning streak on the S&P 500.
경제적 자유도 필요하고 시간도 필요하고 마음적인 여유도 필요하는데
amazing. Bob Michael, JP Morgan Asset Management. There's not enough bonds.
This comes after
그렇지
last
않아서
year when he was
좀
expecting recession. Now we're in this sort of Goldilocks
안타깝네요.
moment, this economic nirvana, as he called it. Look, everyone's done a 180, or a lot of people have. A year ago, people were talking about the impossibility of a soft landing. Dream on. And now people are saying, not only is it a soft landing, this is a no landing with disinflation and some cherries on top. I mean, at a certain point, you have to wonder how much more optimistic can people get.
That phrase, economic nirvana, we did not hear that phrase 12
아이고
months ago.
주한 씨,
It's all you
아니
hear
뭐
at the moment. In
물론
about 29 minutes, 28
저는
minutes or so,
중요한데
another read on US
그래도
inflation
좀
just around the corner.
쉬어야죠.
Anne-Marie, that's one to watch going into the Fed next week.
Absolutely, especially when you have the polls continuously show that
안
the
그러면
data
좀
is not hitting how
걸려요.
people feel about their pricing power when they still go to the grocery stores. One thing that is helping the administration, and Amos Hochstein was very proud of this yesterday, and we're going to speak to another U.S. official, is gasoline prices coming down. But will all of this be enough to change the perception of voters when it comes to November?
The whole idea of core PCE, the deflator figure that the Fed has been looking for, what do they need for an all clear? Right? How do they know that we're not going to get some sort of 1967, 1968 type of appearance of a soft landing with a resurgence on top? Not to be gloomy, but I do wonder, how do they sort of understand where the trajectories are going at a time where people are still spending on LVMH handbags and champagne?
It's not out of character at all, don't worry, to be gloomy. To pick up on what Bob said, Bob thinks they should be high-fiving doing victory laps at the FOMC meeting next week. When I hear a lot of that,
주한 씨 또
doesn't that make you feel a
철학적인
little bit uncomfortable
말을
about how quickly the
하시네요.
pendulum swung from one side to the other?
If they do that, I
대단하세요.
guarantee they will be pilloried. They're not going to do that. That would not be very popular. I will say that at this moment, though, there seems to be a real acceptance. The fact that Christine Lagarde did not push against the market pricing the same way that Jay Powell did in December, he also did not push
아이고야
back.
잠시만요. 저
뉴스
뉴스 보다가 지금 차트 못 보거든요. 오늘 갑자기 왜 이거 갑자기 왜 올라가고 있어? 어이?
It gives you a sense of how much things have shifted.
That's why, or at least part of the reason, stocks are close to all-time highs this morning. Equity futures on the S&P 500 negative here by almost 0.1%, but coming off the back of the longest daily winning streak of the year so far. Longest winning streak actually down back to December on the S&P 500, 6 days of it, down by not even a tenth of 1%. Yields higher by, let's call it half a basis point on a 10-year 412.
레버리지도 바꿨는데 조심해야지. 이구.
On the state of the economy. Kimco's Tiffany Wilding reacting to today's inflation data and what it means for the Fed. And we'll touch base with Ellen Wald at the Atlantic Council on the politically charged EV debate and a little bit
떨어져라.
energy exports in this country.
지옥으로 떨어져라.
There's a review the administration put out. They're
오케이,
basically
오,
kicking the can down the road.
내 말 똥냈나?
And this is very political. Within the administration, there's individuals like Podesta, Granholm, who wanted the climate side to win. And then you have the national security concerns of individuals like Jake Sullivan, Amos Hochstein with us yesterday. Biden made a pledge to the Europeans
그러니까 발표 때 잘못되면 저도 완전 나다리 될 거예요. 그러면 안 돼요.
LNG leaving the United States today, but it sends a different sentiment to that market.
We begin with our top story this morning. The Biden
은근슬쩍
administration
다른
appearing to declare victory
유튜버분들이
on inflation.
지금 뭘 하고 있는지 한번 볼까요? 하, 대부분 지금 다 매수로 들어가는데? 역시 저는 항상 반대예요.
Close to the lowest levels we've seen in that survey. So I think Americans do believe inflation's under control.
누구의 촉이
Secretary Yellen making the
많은지
case for a
한번
soft
봅시다.
landing as fourth quarter GDP tops estimates and inflation continues to cool. I'm pleased to say, joining us on this program exclusively, the US Deputy Treasury Secretary Wally Adeyemo. Deputy Treasury Secretary, wonderful to catch up with you again, sir, and to have a longer conversation about the US economy. Was that a declaration of victory on inflation yesterday?
So I was listening to the show before I came on, and you talked about all the people who have changed their mind. The truth is Secretary Yellen's been consistent. If you go back a year ago, she made very clear that we could grow the economy, bring down inflation, and keep a tight labor market, and that's exactly what we're doing. What she was saying yesterday was that we have seen progress made in terms of making sure that the middle class has more money to spend at the end of the month because gas prices are down
조금 잘못하고 있는 것
We know that there's more
같은데.
that we need to do in terms of trying to make sure that we put more more money in the pockets of the middle class in America, and that's exactly what the President and Secretary are committed to doing. We're not declaring victory, rather we're saying we've made progress.
오케이. 네, 여러분 제가 지금 너무 슬프거든요. 그러니까 좋아요 좀 눌러주세요. 좋아요, 구독 눌러주시면 제 마음이 좀 조금이나마 편해지지 않을까 싶어요. 눌러주세요. 좋아요. 좋아요. 큰 좋아요.
But the thing we have going for us in the United States is that because of the work that our businesses have done, the American people have done, we're better positioned as an economy to deal with that. You think about the investments we made in things like the advanced child tax credit, which gave American families tax relief in the midst of the pandemic, and the relief that we gave to small businesses. And today we've seen 16 million applications for new small businesses in America. We're seeing progress, but what I know that has happened to the American people, but people around the world, is that the pandemic had an impact that has in lots of ways still continuing, but our economy is better positioned today than any economy of a major country around the world because of the decisions and choices the President and the Secretary have made, and our goal is to make sure that we continue from that position of strength to invest in the American economy.
Deputy Secretary, you're talking about getting more dollars in people's pockets, and we heard Janet Yellen, Treasury Secretary, yesterday talking about the potential for prolonging some of the tax cuts for people making less than $400,000 a year. How concerned are you that getting additional dollars in people's pockets will just fuel another round of inflation, which really gave people a lot of the negativity to start with?
I think the most important thing that we should look at is
돌아줘라. 지옥으로 돌아줘라.
On the supply side, supply chains were snarled, and you've seen a huge decrease in supply chain challenges in the economy. Energy is a great place to start. Just look at what we've seen in terms of the $1.90 reduction in the cost of gas. But throughout our supply chains, we've seen them improve to put us in a better position to meet the demand in the economy. And it's important to remember what the Secretary said. For the middle class, we're not going to increase their taxes. We're going to look for ways to provide relief to families. But we're also going to look to modestly increase taxes on the wealthy, on large corporations, because the Secretary and the President believe that over the medium term, we need to make sure that we have a fiscally sustainable outlook, which is very different than the last administration.
Well, you just got back from Japan, and I understand that CFIUS is still under review for Japan's takeover of U.S. Steel. We have the Prime Minister of Japan joining U.S.
진짜 많이 떨어져야 되는데.
Coming in April. Will we get a decision on this soon?
So as you know, we don't talk about any CFIUS cases if they exist or if they don't publicly. It's a private matter if there's a CFIUS case. What I can say is that CFIUS is a process that's been set up to look at national security risk and make sure that we in the United States, as we support foreign direct investment in the United States, we're also very mindful of the national security risk that some foreign direct investment presents. Stepping away from a specific case, one of the things that we believe deeply in is the importance of a strong U.S. industry. That's why we've made investments like the Inflation Reduction Act and the investments that we've made in rebuilding our infrastructure. And ultimately what we want to see is more companies like U.S.
벌써 발표 10분 전이야? 어떡해 진짜 잘못 들었나 보다.
And that's exactly why we're making the investments.
아니 조금 더 들어줘라 제발.
I'm looking at your readout, and it says the Deputy Secretary thanked his government counterparts for Japan's leadership. How is this a national security concern when it's one of the United States' strongest allies in the Asia Pacific?
So as I said, I'm not able to talk about whether there is a case or isn't there a case when it comes to CFIUS. The CFIUS process is one that we'll work through and take some time, and I expect that any CFIUS case that comes through will be treated in a manner that's consistent with the law. And ultimately, Congress passed a law that gave CFIUS certain authorities, and we plan to do our job in terms of reviewing the national security risk of any transaction that comes before CFIUS.
One of the policies you were discussing, of course, in Japan was
계속 마이너스네.
what is going on with
제
Russia's
방법이
invasion
계속
of Ukraine. Where are you in the
사라지고
status of
있네.
talks with your partners about
안
Russia's
돼요.
assets? Do you see a legal path forward
얼마나 열심히
to
벌었는데.
Russia's stranded assets to give them to Ukraine?
Emery, as you mentioned, one of the topics of conversation
돈 가지고 여행을 가야 되는데.
coalition more broadly is how we make sure that Russia compensates Ukraine for the damage they've done to their economy. Our leaders at the beginning of the war immobilized Russia's sovereign assets that were held in our countries, so Putin couldn't use them to fund his illegal war. Now they've
저도 이제 조한 씨를 아예 그냥 믿고 있어서 저도 시간 안 보고 그냥
experts amongst the G7 to think about what we can do to try and compensate the Ukrainians for the damage that's been done. In Europe, they're talking about things like windfall profit taxes. We're debating a number of other
$19분이면 아직 시간이 좀 충분해요.
pays to help rebuild Ukraine in order to make sure they have a thriving economy.
축구에만 봤을 때 19분이면 엄청 많은 시간, 엄청 긴 시간이잖아요. 뭐 한 3-4골 정도 들어갈 수 있지 않을까?
Tariffs on imports into the United States. This administration has maintained tariffs
저도
on China from the previous
이런
administration. What is your position on that now?
가지고 기다릴 수밖에 없어요.
Would hurt the American people. And what we've done, instead of looking to simply do blanket tariffs, is try to work with our allies and partners to hold China accountable for the things that they are doing that violate trade rules going forward. Because ultimately what we know is that the best way to make sure that China lives by the rules of the road that we've all set is by doing that with our allies and partners rather than taking a go-it-alone approach. And that's exactly what the president's going to continue to do.
Do you think that US car manufacturers can compete with Chinese automakers without those tariffs?
I think the U.S. car manufacturers can compete with anyone in the world if they're playing on a level playing field. And the problem
이 상태 멈추면 어떡해
is that in
진짜.
China, there are subsidies that are being given to not only car companies but throughout the ecosystem that are making it possible to produce cars that are loss leaders. And ultimately, the reason that in the United States, but also in Europe, people are concerned about Chinese vehicles flooding the market is because they're being produced in ways that violate basic trade rules, and it's why we're looking at our options here. But I know that Europe is also looking at their options to ensure that we don't end up in a place where Chinese overcapacity floods our markets.
What do those options look like, sir?
So I'm not going to get into them with you here, but we're having conversations with our allies and partners.
오늘도 어김없이 한숨이 나오네요.
That's why we do those interviews, Wally. We try and make it happen. Wally, appreciate your time. Wally Adeyemo there, the US Deputy Treasury Secretary on the latest. Tell you what, that final point, this is going to be a big issue on the campaign trail. Can automakers in this country compete? Yes, if there's a level playing field, but let's face it, there isn't one. So what can they do? What are the options?
주사위는 아 죄송해요. 제가 앞으로 안경 같은 거 써야 될 것 같아요. 글을 못 읽어요. 너무 피곤했나.
Here's your Bloomberg Brief with Yahara Hackers. Hey Yahara.
Hi John. The Biden
주사위보다는
administration has halted the
그냥
approval of
올리기로
new
들어갔어요.
licenses to export liquefied natural gas. The U.S. Energy Department will study its effects on climate and the economy, according to a White House statement. The pause could potentially impact more than a dozen proposals now awaiting review at the agency. Senior officials have not put a firm timeline on the process. Blackstone is out to direct lenders for help financing its $2.3 billion acquisition of the online pet care company Rover Group. The firm saw about $250 million of private debt that would pay interest of about 475 basis points over the secured overnight financing rate. If successful, the borrowing would mark one of the cheapest private credit deals on record. And LVMH rallying after posting results that beat estimates. The luxury giant saw 10% growth in revenue in the last quarter, proving resilience amid a slowdown in the wider sector. Shares rose the most in almost 4 years as its billionaire CEO said he's, quote, very confident for this year. That's your Bloomberg Brief. John?
Yahira, thank you very much. Coming up on this program up next, the rush into bonds.
Between Treasury supply and corporate supply, I'm worried there's simply not enough.
There's simply not enough bonds. That conversation up next. Live from New York City, you're watching Bloomberg Surveillance.
그러니까 쉽게 안 되죠, 진짜. 오케이. 지금 조금 떨어지고 있어. 오케이.
What happened was you were offered a money-losing women's basketball team,
좋아.
I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
파란색 좋아요. 들어와. 밑으로 들어와. 좋아.
A little more than 1 hour away from the opening bell in New York City. Equity futures on the S&P 500 look like this. We're negative by 0.08%. Bonds are totally unchanged in fixed income in the Treasury market, 411.81 on a US 10-year. Under surveillance this morning, the rush into bonds.
Between Treasury supply and corporate supply, I'm worried there's simply not enough. I've not had a single conversation over the last couple quarters with the client who said, oh, get me out of bonds. Every single one is saying, how do I get in?
Compare and contrast that with this from Peter Chi of Academy Securities. I remain convinced that none of the issues that made markets wonder who will ever buy treasuries again have been resolved and are likely to push longer yields higher. That is why I'm thinking that a 4.3% 10-year, which seemed bold at 3.8%, seems insufficient. Peter Chi, I'm pleased to say, joined us now. Pete, good morning.
Morning.
Compare and contrast your thoughts with what we heard from Bob Michael 30 minutes ago.
You know, I trade like much more as a contrarian style. So when we were at 450, we like 380. We got down there. We actually got below that. But I think some of the problems that were there back in the fall that were pushing yields higher are still there. I think it's going to be much more this time again about risk premium, term premium. I think 2s, 10s goes back to flat and maybe actually positive.
어떻게 될지는
And
모르겠다,
that's
진짜.
5-year, 10-year, and 30-year bonds.
This is something that people are watching at a time when it seems like the enthusiasm just can't really be beaten out. What do you make of that? I mean, how do you basically say that the mood can shift that quickly if the data keeps confirming it?
One, go back when every single day we were looking at Chinese tick data. No one looks at Chinese tick data and it continues to come down. So why did we stop looking at that? Nothing about the deficit increasing has really gone away. The cost of funds that it's going to cost, you know, the amount that's going to be spent on interest is still going up. So all those things are still there. People just forgot about it. Remember, we were watching every auction with trepidation. Ooh, is this going to be a good auction or not? Now we're going on, no one cares. And to me as a contrarian, right? Whenever there's
올라가면 담보금이 지금 사라질 텐데.
Yeah, so I would not be surprised to see a little bit nastiness on the new 10s and
그러고
30s when they
싶지
come out in
않거든요.
February, and that could be maybe what triggers, oh shoot, we got carried away with where we are in yields, and the front end is definitely controlled by the Fed, but I think the long end is going to be risk premium, fears, deficits, etc.
This is treasuries. You don't have this view on credit, do you? It's quite different.
No, I really like corporate credit. One, I think they did such a good job managing their interest profile, issuing longer dated bonds. And I really have been encouraging clients, especially in the 5-year and in, to be heavily overweight. If you manage a bond portfolio, say, against the ag index or a broad index, I want you to be heavily overweight corporates. I think from a governance standpoint, from all sorts of perspectives, you're still getting paid almost free money to own some of these really high-quality corporates in a world where the U.S. can't seem to get its act together on deficit, where people talk much more cavalierly about not paying debt on time. They'll ultimately pay it, but why bother with that when you can buy commercial paper, other products, and get a spread to treasuries, and I think actually have better governance and feel safer at night.
Let's take a step back. Bob Michael was talking about how if the Fed cuts rates, that will help the deficit problem because suddenly interest expense will come down and that everything will be back to that economic nirvana that we keep talking about. How concerned are you that they cannot do that? Because the more that we're talking about rate cuts, the more longer-term inflation expectations just creep up just a little bit.
I'm fairly concerned, but even on that, it takes a long time to move the average coupon on the U.S. Treasury debt, right? So much of it's long dated. So when I got bullish, when everyone was scared at 5%. Part of it was, listen, it's going to take time for this to creep in, right? It's a lot of the debt's longer. The average maturity, I think, is close to 6 or 7 years. So it doesn't rise overnight. Similarly, okay, now even if we get back to 4% on Fed funds, that's still much higher than the current average coupon. So it will creep in. I think that creep is coming over time. We get fixated on what current rates are. You got to look at the average coupon, how long that takes to bleed in, and that's where we're headed.
Let's talk about the nature of Academy Securities. We do this often. You've got all this military intelligence there, generals sitting alongside you. Can you lean on some of that for us now? We're facing some real risk abroad, Middle East, in Ukraine, and I think there's some comfort with it. And the comfort with it comes from about looking at the commodity market, seeing crude in the 70s and not running it hard. And assuming that this isn't going to touch us, this is not a big deal. in US-based capital markets. Do you share that view, given what you hear every single day?
So let's run through it quickly. So we've got the 18 retired generals and admirals. I would say Russia, Ukraine, we're leaning towards that there might be some sort of a truce or something this summer. I actually think that's going to be inflationary. I think that's what people are missing. A year and a half ago, it might have been deflationary as Russia was going to sell in. Now you're going to have to really build up the infrastructure there. The one thing that I think doesn't get talked enough about in the U.S. is Europe is getting very concerned about the forced migration issue. And you're going to have people potentially putting their kids into school 3 years in a row in a foreign country. Are they ever going to go back to Ukraine? So I think there's a bigger urgency in Europe to get this resolved. We think that happens. I think the Middle East is going to drag on. It's ugly. What to me is the real tell is Iran is selling about 3.5 million barrels of oil a day, well above what the sanction level is. I think we've been turning a blind eye to that, and because it does keep oil prices down globally. If something happens that we are really forced to engage Iran directly and cut back on their production, that to me would be a price shock. And then the final thing, and we've been deciding a lot, what's hedged, what's not hedged. I think the flight to safety will not work. So we've been working with clients, and the natural reaction traditionally is geopolitical event, bond yields go lower. I do not think that will happen this time. Maybe at the front end, but not at the long end. And partly because I think everyone's very quickly saying, oh my gosh, geopolitical event, commodity prices probably going higher, deglobalization with China, increasing with every one of those. And finally, people are starting to realize war is going to be deficit spending. So I just think any sort of geopolitical event, you might get a small rally in treasuries. I would want to sell that because that I think pushes us above 450 when people realize the flight to safety is not the way to hedge this. I think it's supposed to be long commodity producers. That's my favorite part of the market right now.
When you look at inflation, you talk about the University of Consumer Confidence, and you say you haven't been able to figure out the value of the data as a reliable predictor of anything. We just played a soundbite of the Treasury Secretary yesterday talking about it. The White House has flooded our inboxes.
사실 이거 해외선물 거의 매일 하는데 매일 털려요. 왜냐면 이거 완전 뭐 아니면 돌아서 어떻게 될지는 알 수 없죠.
People know the answers, and the only thing I find ever interesting is how quickly because you can get it by party registration, how much that deviates and changes on a dime when one party's in power or not. So to me, it's kind of fun and games, but I don't trust it.
So Democrats feel better, but Republicans don't.
Correct, but when Trump was in charge, it was vice versa. So it's always that way. So I find the data a little bit dubious. It's kind of fun and interesting, something to do on Friday mornings when it comes out, but I'm not paying much attention to it.
Yeah, welcome to our life.
I think it's fun. I want to be part of the chorus for you, Mitch. I'm desperate to be part of the chorus. I want someone to call me
변동성이 너무 많아요.
and say, where do you think inflation is going to be?
여기까지 내려갔다가 쭉쭉쭉 올라가고 있고.
Right, and again, I'm not sure how many people are really thinking about these expectations, how it all comes about. So I don't find it. I know the Fed does like these inflation expectations. They rely heavily on the trend and expectations. I just don't think you go back even the last few years. They haven't done anything right, really. They haven't been horribly wrong. It's just
여기 한 번에 이렇게 쭉 내려갔으면 좋겠어요. 이게 쭉 내려가서 제가 빠져나가고 돈 엄청 많이 벌고 바로 여러분 안녕히 계세요. 전 여행 가려고요. 하면 얼마나 좋을까요?
Offer ends January 31st.
아니면 제가 사실 여행보다는 지금 어디 대학에 들어가야 되는지 지금 계속 생각 중이에요. 아무튼 이거 그냥 제 개인적인 얘기인데 예 봅시다. 지금 쭉 내려가고 있어요. 혹시 제 예상대로 아니야 근데 발표 시작 아직 3분 전인데 벌써 이렇게 내려가면 되는 거야? 일단 오케이. 마음에 들어요. 굉장히 마음에 들어요.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Investment cases for this in the world. 발표.
Access the financial world on demand.
잠깐만요.
Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. Only from Bloomberg.
발표 시작해.
Start exploring to see what's moving the markets. Visit Bloomberg.com.
뭐야 이거? 뭐야 이거?
The last big batch of economic data going into the Federal Reserve meeting next week. Equity futures going into it. The scores look like this. On the S&P 500, negative by 0.1%.
와,
On the Nasdaq 100, we're down by 0.4. In the bond market on a 2-year yield, shaping up as
야,
10-year,
뭐야? 너 뭐야?
single basis point on a 2-year, 4.30.
뭐야?
77, 4.30, 35. On a 10-year, 4.11. Yields lower than
아니야, 뭐야?
basis point. The economic data in America has dropped. Mike McKee around the table to break it down. Morning, Mike.
Good morning, John. Check the March Fed Funds futures because we
이거
just got
발표의
a
맛이
handle on the
깨 똥같은 맛이야, 진짜. 갑자기 이렇게 내려가네.
2.9, first time since before the pandemic that we have had PCE core inflation that low. PCE headline 2.6, also a 0.2 gain during the month. That's the same as the month before. Personal income comes in up 0.3 for the month. That's a little bit lower than last month. And personal spending, a strong 0.7%. The forecast was for 0.5%. So we got some real strength in personal spending. That's not really a surprise because we saw the retail sales numbers, but it does suggest
달려라. 밑으로 달려라.
services spending as well. So this will help ignite the debate again about how soon the Fed starts to cut rates.
No big moves in this market. I can tell you we're pulling back just a touch on the S&P.
오, 좋아.
If you check out the bond market, yields were a little bit higher at the front end, up another couple of basis points, up 3 basis points on a 2-year, 4.33 on a 10-year, up a single basis point, 4.13 in the FX market. The euro basically where it was before the data at 108.72. Mike McKee will catch up with Tiffany Wiley in just a moment. And a big focus for Tiffany and the team over at PIMCO and others too is the spread that seems to be emerging between what you get out of PCE and what you get from CPI. Can you walk us through both and talk to us about what this might mean for the Fed next week?
Well, it's an interesting thing because the public tends to focus on CPI. The Fed's official target is PCE. Fed likes PCE better as a measure of overall cost changes. And there are some things in there that are different from the CPI, particularly housing, a much lower weight PCE, and also some in the healthcare areas that comes in different ways. So you get generally about a 4 to 5 basis point spread between the two. And that has pretty much always been the case. But when the Fed says we want 2% inflation, they're talking about 2% that we're getting today with the PCE.
Bob Michael was on the program a little bit earlier. He asked us to ask him what he should ask or what you should ask. He talked about QT. QT was the focus for him, not rate cuts. Do you think we get some clarity on that?
이후로 계속 올라갈 것 같은데 그러니까 일단은 여기까지 하고 매도를 여기까지 하고 그래도 오늘도 성공. 12만원 K 충분해. 조금 있다가 아마 다시 타이밍을 기다리면서 시장 열 때쯤 다시 들어가서 근데 그때 왠지 매수 타임 해야 될 것 같아요.
Thank you, sir. Just to run through the markets, we'll go through stocks, bonds, and foreign exchange. At least there are no big moves here on the S&P 500, down about 0.2% in the bond market. Checking out a 2-year, 10-year, 30-year Treasury shaping up as follows. Yields are higher by 2 basis points. 10-year 4.14.
일찍 내려갔나? 빠져나갔나? 계속 떨어지네. 아니다. 나는 더 심한 욕심쟁이라서 지금 딱 좋아요. 욕심 이럴 땐 욕심 부리면 안 돼요. 욕심 부리면 그때 안녕. 반복을 만년 할 수 있으니까 여러분도 조심하세요.
How do we sort of depart these ideas or take apart these ideas of both more spending and less inflation? When does that sort of become incompatible?
And unemployment below 4%, but apparently not a reason to be hawkish anymore because you're not seeing wages run away.
So at what point is this a moment in time, to quote some of our guests, and not something that you can extrapolate out versus just basically the post-pandemic right-sizing that we're seeing just work through the system and create basically what we had before the pandemic?
What did Bob call it? Economic nirvana. For now, at least. Yeah. Tiffany Wilding with us, PIMCO economist and managing director. Tiffany, we would love your reaction to the data, and if we can build on the conversation that Mike and I were having, I know that you've been focused on this in a big way, the difference between PCE and CPI. What's your read of things?
Yeah, well, maybe just to start off by talking to what you guys were just focused on. You know, I think that one of the key questions is how much additional improvement, supply-side improvements can we get? And this gets back to how much additional normalization post-pandemic should we expect? And where will the economy be? What is the underlying trend of inflation once all of those pandemic-related effects fade? And we don't know that yet. We can try to estimate it, but we're not really sure what it is, and we're still kind of waiting to see that. And actually, in our minds, that plus the fact that demand in the U.S. economy still looks pretty strong might be enough to keep the Fed on hold for a little bit longer than maybe the markets were pricing. And then there's the other issue of this core CPI versus PCE. You know, as you guys suggested, the measures are calculated differently. CPI doesn't look as good. We're at 4% still on a year-over-year basis, even though we've gotten down into that 2-point-something range with PCE. There's a lot of non-market factors, non-market prices that go into the PCE, as Michael McKee sort of suggested. And those are the things that are kind of contributing to the good news. So the Fed's kind of just getting lucky, frankly, on the PCE. We think the optics of the CPI, plus the fact that demand just continues to look so strong, probably will keep the Fed on hold a little bit longer here.
Yeah, I gotta say, I was talking to Joe Davis of Vanguard, and he was saying he's worried about this market, this economy, being something of a 1967 economy, or basically it looked like a soft landing,
the Federal Reserve was able to cut rates, and then inflation picked back up again in a rapid way. What are you looking at to make sure that's not the case? What's the most accurate gauge?
Yeah, well, I mean, I think that's the thing, right? Like, you have to estimate it. You can't really observe it in some sense right now. And it gets down to how much inflationary pressures is a tight labor market producing. And as I said, because we've gotten a lot of tailwinds to inflation as a result of, these supply chain improvements, we're not really sure what that is. So the models, there's various models that have been devised since the pandemic to try to estimate this. When our look at all of them sort of suggests that
미국 채권 가격이 올라가고 있어서 잠시 관망해야 될 듯해요. 저 지금 좀 욕심을 부리고 여러분 커피타임 아니면 티타임 가진 게 어때요? 지금 좀 타이밍이 좀 애매해서
Why do you think that's going to change? And they're going to be less likely to cut rates in March, given that if you look at a year-over-year comp, at least in the past 6 months, you are seeing it back in that 2% range. And a lot of people are saying, you've got it. You could take a victory lap, as we were just hearing from Bob Michael.
Yeah, I mean, certainly their preferred inflation measure is definitely going to give them cover if they did want to if they did want to cut rates in March. We think it's going to be running at 2.7. They're going to be pretty sure it's running at 2.7, that February data, that we'll get right around that a little after the meeting, but we'll probably know the details of it. So there definitely is cover for them to start to cut. And I think one of the questions here is, so we've done some historical analysis on central banks and when they tend to cut, and it basically suggests that central banks always tend to be too late. And they're not really cutting until their economies are already in recession and unemployment rates are up. So maybe knowing this kind of historical analysis, the Federal Reserve, instead of that kind of behavioral, historical way, they want to actually push against that and say, you know what, maybe we're going to get going now, but we're going to go really slowly. It's certainly possible that they could do that. And I think Waller suggested that kind of more recently. So we definitely wouldn't rule out March. It's a live meeting. I guess just for us, the balance of risks, still it's become more balanced, but maybe still is a little bit more on the side of inflation risks reaccelerating, which suggests to us that maybe a mid-year cut is more reasonable. And by the way, that's what we think is in line with the median for when we look at the summary of economic projections from Fed officials.
Tiffany, what's the consequences of easier financial conditions? And I ask this because that's ultimately why it matters, right? Is that if they cut, it could potentially ease financial conditions all the more with people pricing in another 8 rate cuts, which just seems to be the way that things go these days. So how much is that really contributing to your concern about inflation reaccelerating?
Yeah, I mean, so we have a housing shortage right now, and you have to keep in mind that higher interest rates, does result in both supply and demand within the housing market slowing, and we've seen that. We've seen housing market activity really collapse. So, I mean, one of the things is that as rates fall, you're going to see housing market activity re-accelerate, and that's going to provide a growth boost. And so the broader inflationary effects of that, I think you have to take those into account. We do think you're going to get some reacceleration. So that's why, even though the Fed, does want to start to ease, they do see inflation down. The way they do it is they're still going to have to try to manage financial conditions. So they probably are going to tell us when they start easing, it's going to be very slow, very methodical, right? And we don't want financial conditions to ease too much. But of course, the markets will extrapolate as they always do.
I don't want to make this too circular, but just to go into this a little bit more. So
그거 봐요.
if the Fed
진짜 잘
doesn't ease
빠져나갔어.
or cut interest rates anytime soon, inflation keeps
엄청 많이
coming down.
올라가네.
Then Matt Lazzetti.
Well, I mean, so, if what is priced in to the bond market in terms of the path of the Fed funds rate, if that's not realized because the Fed's staying on hold longer, then that mechanically should tighten financial conditions. And I guess the question is, given how strong the economy looks, maybe financial conditions should be a little bit tighter. So, in our minds, that's a little bit of a reason to wait a little longer here. I mean, you don't want to get that premature reacceleration that could be inflationary.
Interesting. Tiffany, appreciate the update ahead of the Fed next week. in reaction to that data, in response to the data just moments ago. Tiffany Wilding there of PIMCO. Just to get you up to speed on some of the price action going into the opening.
아니요, 저는 저 말고 그 주한 씨 그리고 다른 진짜 시청자분들은 지금 너무 타이밍이 애매해가지고 그 지금 들어가는 게 좀 애매해서 그냥 기다리면서 좀 커피나 차 드세요. 이런 거예요.
Up by half a basis point to about 4.12. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. China's central bank has unveiled plans for targeted stimulus meant to guide money into specific sectors. The PBOC made the move after surprising investors this week with a bigger than expected cut to its reserve requirement ratio. Economists see the central bank following up by steering credit into select areas and making a handful of trims to the amount of cash banks must hold. And Salesforce is reportedly the latest tech firm planning to cut jobs. According to the Wall Street Journal, the company will lay off 700 employees, but is still looking to fill another 1,000 positions. Salesforce made more drastic cuts a year ago, reducing headcount by 8,000. The news comes as Google, Microsoft, and Amazon all announced layoffs in the tech industry this month. Liverpool manager Jurgen Klopp is stepping down. The football club chief said in an interview posted on X, he will leave the club at the end of the English Premier League season. Klopp has been at Liverpool since 2015, winning 6 trophies, including the coveted Champions League. He said he is, quote, running out of energy. And that's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Ramo on the phone right now, getting messages from home about Liverpool.
Yeah, just it's sad. He was a beast, evidently, and
you're forced to watch this every weekend.
I am, and forced to watch them win. And forced. Mohamed Salah is amazing.
To love it or not.
Excited to sit down and watch that. I mean, it's exciting. I used to play soccer, and it was called soccer.
So did I.
I'm not weighing in on that.
I was
not going to weigh in on that this morning.
Left forward.
All right, just going to.
Well, to Bob Michael's point, I'm reading now that the coach said he'll never manage a club in England other than Liverpool. However, he is still open to managing another team in the future.
Yeah, let's see if that's the national team. And that's what Bob Michael was talking about a little bit earlier. Coming up on this programme, less football, more on energy. The Biden administration keeping energy domestic.
It's an energy transition, and I believe that we've done that quite successfully and have allowed gasoline prices to come down.
A conversation just around the corner, live from New York City this morning. Good morning.
Regional sports networks. There's a lot of the business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So, I don't think I'm right on this, but this is, my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content, had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time, and they sold their content to, what was it, Peacock. Yeah. And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
multi-trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Live from New York City, equities totally unchanged on the S&P 500, just turning a little bit positive in the last couple of moments, going into the opening bell in about 44 minutes. Under surveillance this morning, the Biden administration keeping energy domestic.
I believe that we've done that quite successfully and have allowed gasoline prices to come down, which has helped food prices to come down because we are a farm to truck to table, not a farm to table. And we've also at the same time been able to accelerate the transition.
Here's the latest this morning. As US oil production hits a record high, the Biden administration is halting new exports of liquefied natural gas, saying in a statement, quote, "This pause on new LNG approvals sees the climate crisis for what it is, the existential threat of our lifetime." Alan Wald of the Atlantic Council warning against plans to stifle the US LNG boom. Running in Barron's, quote, "The plan would at worst halt future LNG exports that can strengthen our domestic economy and help our allies in Europe and Asia. At best, it will add unnecessary delays to America's LNG export growth." Alan Wald, Senior Fellow at the Atlantic Council and author of Saudi Inc., joins us now for more. And we've got to talk about that and EVs as well. But let's start with the latest story this morning and the breaking news this Friday. What's your base case? You gave us your worst case, your best case. What's your base case?
I don't really think there is a base case. It's either they freeze all approvals, basically probably until the election, maybe until the next administration actually takes effect, or they continue to approve LNG export terminals. I mean, this is an impressively, amazingly growing industry. If you look at the upward trajectory of U.S. LNG exports from 2016, it has grown faster than any other country in the world, and we're one of the only countries that has more room for growth. If you look at Qatar, if you look at Australia, they're all leveling off. If the world needs more natural gas, we're the ones who are going to provide it.
Even with this move, though, Ellen, when you look at the market, the U.S. will still maintain the prime spot for LNG exports, right?
It will, but we do need to continue with that upward trajectory. We've got over, there's $100 billion in investments that we're waiting, in investments in LNG export terminals that we're waiting to be approved at the beginning of 2023. We could double our export capacity just in a few years with the projects that are already underway awaiting final approval. So this pause to me seems to be incredibly politically motivated as opposed to based on any kind of environmental or climate concerns. We know that LNG displaces coal. We saw that with Pakistan. As soon as spot prices for LNG went up because Europe was buying more, Pakistan reverted to coal. So if we want countries to burn natural gas, which is a cleaner burning fuel than coal, then we've got to be prepared to actually supply it.
It does feel very political. And this morning, Senator Joe Manchin is saying he wants a hearing on it. Senior administrative officials who briefed us on the decision said that they won't put a firm timeline. So is it your understanding that this is obviously just going to go past the election so the campaign could go out and talk about doing more for the climate and try to get environmental votes?
That's my sense, which seems a little bit odd considering they've already got plenty to stand on when it comes to the environmental picture. I mean, if you look at the timeline for approvals on these projects anyway, we're talking 330 days as an average. That's the longest time frame for approval that we've ever seen. Even the Obama administration only took 155 days to approve these export terminals. So it seems to me like it's really just coming at the specific behest of some climate activists, and whether or not this is really even going to impress anyone or impress any kind of environmental votes, it seems to me is a bit misguided.
And it's not necessarily just this issue. You were talking about how there's sort of a misguided type of policy mix from the administration when it comes to electric vehicles as well. And you were responding in part what we heard from Amos Hochstein. You wrote this: current policies are hurting demand for electric vehicles. Washington needs to unleash the power of the U.S. market by removing barriers to accessing capital, fast-tracking manufacturing, and promote domestic demand. Can you elaborate on how different what you think is necessary versus what is actually in place?
Yeah, so what we have this year coming into effect in 2024 is a provision of the Inflation Reduction Act that makes only certain electric vehicles that have certain battery components that are made in the U.S. eligible for the full federal tax credit, which is a fairly significant tax credit that could be very important for people when they're deciding whether to buy an EV. And only, I think, about 2 cars actually qualify for this. And that's because we don't really have a domestic lithium battery cell refining or production industry in the United States. All of that, or almost all of that, comes from China. We want to create this. We don't want to be buying Chinese products, and that's a very important thing to encourage. But by putting in place a regulation now that forces you to basically, it says you can't really buy these cars and get the full tax credit, but we don't have that industry yet. So in my mind, they're killing demand for EVs before the domestic lithium battery refining and production industry even got a chance to get started. They need to encourage demand for EVs, which will then encourage the creation of this domestic refining industry. But by killing this tax credit now, they're going to kill demand, and no one's going to even want to build an industry because there's no demand for EVs.
This raises a deeper question, Ellen, which is this whole question of what happens if BYD is able to sell their cars freely with no taxes in the U.S. Would that be good or bad for the industry? Yes, it would demolish the U.S. car companies, but it would actually maybe increase demand. What's your take on what kind of barriers there should be to level the playing field, as this administration says?
I think that there should be barriers to buying cars that rely entirely on lithium and battery components from countries like China that, have terrible environmental practices, basically use slave labor, and also dominate the lithium industry through very unfair trade practices. But we can't just assume that we can create our own non-China lithium production industry out of thin air. It has to be cultivated. And so in addition to having these tax credits available to spur demand, we've got to also encourage lithium refining in the United States. We need to make capital available for smaller businesses. We need to be able to fast-track manufacturing for new innovative processes. If you look at the whole kind of ecosystem here, a lot of the innovation in battery technology actually comes from the U.S. It's just that China is doing all the grunt work. So what we do, though, is encourage that manufacturing to happen in the US where the innovation is also occurring.
계속
I just want to jump in
기다려봅시다.
quickly. In about 60 seconds, if I could get your view on this. Wally Adeyemo, the Deputy Treasury Secretary, was with us a little bit earlier on the programme, and we talked about options. How do they ensure that automakers in this country, Ford, GM, Stellantis, Tesla, can compete with Chinese manufacturers? Are we going down the road of much higher tariffs, and can they deliver those tariffs given how dependent we are on supply chains out of China?
Well, exactly. I think that we've got to kind of, you've got to kind of stop just putting tariffs on these products, and you've got to actually encourage us to have this domestic industry. You've got to make more capital available, more loans. There are all sorts of strings attached to getting these government loans and government funding to develop this lithium stuff in the U.S. Cut that red tape out so we can actually develop it so our cars can compete without the need for massive tariffs. Let's do that instead of just saying, oh, well, you only qualify for the full federal tax credit if your battery's made in the U.S. Oh, but by the way, we're making it really hard for you to actually make batteries in the U.S.
Ellen, appreciate your view on this subject. It's a subject we'll be talking about all year. Ellen Walder of the Atlantic Council. Ellen, thank you. AMH, big one for campaign season this year.
Absolutely, and there's a lot of hypocrisy in both these two stories. To Ellen's point, you cannot get those full tax credits if the batteries are not components made in the U.S. or allies, so basically China. At the same time, this LNG move is a win for another adversary, Russia. So what is the administration doing? Are they leaning into climate, or do they care about national security?
Well, they've got to clarify the message going into the election season, that's for sure, because President Trump, former President Donald Trump, has his own views on this situation. Big week ahead for next week. Before we get to the weekend, one more trading day. I'll give you a flavour of Monday's show. Coming up on Monday, Don Constant of Mizuho, Chris Harvey of Wells Fargo, PIMCO's Andrew Galls, and NYSE President Lynn Martin. All of that still to come next week, Bramo. Before we get to the weekend, we're looking ahead to the Federal Reserve.
Yeah, it's going to be a Fed meeting. It's also going to be a host of tech earnings, all of that coming out next week at a time where people are just really embracing economic nirvana fueled by an incredible tech boom that's going to keep the American exceptionalist dream continuing.
No snark there whatsoever. I'll say this, and I mean this. It's my favorite week for earnings, when tech earnings start to come through.
They come out after the bell.
Live from New York City, that's exactly why. That does it for us this morning. Thank you very much for being with us. Good morning. Enjoy your weekend.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can answer phrases or ask
꼬봐요.
questions.
지금
What do you want to know
너무
today?
머리가리하네.
Ask a question or visit SearchGo to find answers now.
I'm part of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we could deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly. We want to be there for her, but it's painful for us to see the toll dementia has taken on her. So this is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California, San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. And this is a promising area.
그쵸, 곧 시작인데. 그때도 타이밍을 기다리면서 잘 잡아야 되고, 아니면 진짜 망할 수 있어요. 그래도 지금 덤버글 보면서 제 마음이 좀 놓이네요.
Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable
좋아요.
future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly,
제가 지금 계속 그 타이밍을 기다리고 있는데
all the jobs we've created around the world, all the communities we've made better places, all the ownership groups that we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID, particularly. So I feel like we just have more to do. My job.
왠지 올라가지 않을까 싶어요. 봐요, 여기서부터 여기까지 이렇게 많이 내려갔다니. 요즘은 나스닥이 너무 완전 미쳤어요. 그러니까 왠지 계속 올라갈 듯. 물론 제 개인적인 생각이죠.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
미국도 미쳤죠. 지금 세상 자체가 미치고 있어요. 미쳐버리겠다. 오케이, 지금 확 떨어지면서 타이밍을 잡고 그리고 매수로 들어가야 될 것 같아요. 좋아. 지금 도와줘라. 지금 떨어지고 있어요.
The Federal Reserve. It's payrolls week. Max 7 tech earnings next week.
Tech earnings are supposed to be up in double digits.
From a profitability perspective, tech is likely going to be the sector that can deliver.
I think we're going to hear Powell more in this careful camp. Officials will more clearly outline how they're thinking about rate cuts over the next year. Is this a Fed that's looking to cut rates as early as March?
제 유튜브 친구들 지금 뭐 하고 있나?
They'll move to a more
kind of balanced language.
They're going to be taking a read on that macro outlook to figure out when to cut rates.
We're looking at the data, and the data looks strong.
One of the key pillars to economic activity remains the labor market.
The labor market has been rebalancing in the U.S.
Under the surface, the labor market is cooling.
Look at how much non-farm payrolls have come down from 6 months ago, from a year ago.
There's improving prospects for a soft landing.
There is a path to a soft landing.
저는 오늘 롱을 보고 있어요. 롱으로 들어가서 그리고 그냥 기다릴 완전 기다릴 거야.
Equity market needs a filler kill signal from tech earnings next week. As you look at the momentum in this market, record highs 6 days in a row, credit spreads are narrowing. Are you all in on risk from here? Vishy, let me take it to you first of all.
I think there's a lot. Yeah, I think a lot depends really on how the next week data on both tech earnings and the employment data show what
지금일까?
We are clearly firmly in the camp of a soft landing, and we have been for some time now, maybe early 2023. So that we continue to reinforce the notion
조심할
that
수밖에 없죠,
we are
사실.
in a soft landing territory. But the challenge for the markets is much of the soft landing is already in price.
잘못 들어오면 얼마인데 진짜 순시간이 다 잃어버릴 수 있으니까 조심해야죠.
It's important. I mean, of course, next week will be an important week because we have 40% of the S&P market cap.
그봐요. 지금 들어갔었으면
The macro and the micro data could cause some choppiness as the market really absorbs that. But we think that, pullbacks are going to be important, and pullbacks are quite healthy for a bull market. We do expect tech to be able to deliver on the earnings next week. Some of our early checks are already pointing to that. So we think that this market can continue to be a grind high. Now, in fairness, the market is not too far from our base case scenario for 5,000 on the S&P 500. But when we look across our scenario, and I glaze over at that Goldilocks scenario, we're starting to likely at least some of those boxes, especially if the surprisingly strong economic momentum that we saw at the end of the year can continue in the first half of the year. And of course, the inflation numbers continue to surprise to the downside.
와, 많이
You can see
떨어지네.
this market grind higher.
어머, 설마 오늘 매도인가?
Determine the slope of that angle for that grind higher.
Yeah, and it was a jolt from, Intel, wasn't it, overnight as well. I think the best line I've heard recently has been, I've never met a wealthy pessimist. That was an asset manager who chatted to me recently when I said, I'm a bit doubtful about all of this, and she said, I've never met a wealthy pessimist. Let's talk a little bit more about the numbers, the inflation data. Ahead of next week's Fed decision, we are equipped. Mike McKee has gone under the hood. Mike, what we got?
Well, what we got is good news, at least for those in the equity and bond markets who are worried about what the Fed might do. It certainly takes any rate increases off the table to see inflation in the PCE index core drop to a 2-handle for the first time since before the pandemic. We get 2.9%. And the question is, does that continue?
Wow.
If so, it'll raise a lot of further questions about what the Fed does, and we'll get to that in a second. Personal income up 0.3%, and personal spending a very high 0.7, very strong is what I wanted to say, 0.7%. So
설마
Americans are
주원 씨
still spending,
지금
incomes are
매수하시는 거
still rising,
아니죠?
and inflation is going down. That sets us up for what the Fed does, and of course we'll see their decision on Wednesday.
유감입니다.
Jay Powell at his last news conference suggested they're not waiting until they get to 2%. They'll start before that. The reason you wouldn't want to wait is policy would be too late. You'd want to be reducing restriction on the economy well before 2%, because if you get to 2%, you could overshoot, is basically what he's saying. So now that we're at 2.9 at least, and in the 2% range for both of the PCE indicators, is the Fed going to cut sooner? Well, the market doesn't think so. We've seen a reversal in the March rate cut odds, now down to the lowest that we've seen this week. Why might that be? Well, you look at the spending numbers and the savings rate, this personal income number, adjusted for inflation, only 0.1%, and the savings rate went down to 3.7%. So maybe there's an argument that Americans are going to peter out on their spending, but more likely it's the data next week. You guys were talking about how much we get, and of course we get consumer confidence on Tuesday, but it's Wednesday that's the big day because that's the Fed meeting, but also the employment cost index tell us more about wages and salaries and refunding.
아직은 알 수
What
없죠.
I'm told is that's going to be maybe the biggest indicator of the week. Friday is jobs, but refunding is going to really matter to the debt markets. They want to see what kind of demand there is going to be and what interest rates are going to be, and that will affect everybody going forward in terms of where they think the rates are going to be. Thursday, Friday, as I mentioned, busy days with ISM productivity claims and January jobs. And, so we'll keep ourselves quite busy next week.
Yeah, it is going to be a sort of a filler kill moment for both rates and equities. Mike, thank you very much. Let's see. It's going to be a busy week. Nadia Lovell and Vishy Tiruptar are with me as my guests. Nadia, I want to go to you. It's interesting. I was chatting to one of the people on IB this morning. This is what he says to me. We've taken a full cut from the Fed out of the market since January. Yet risk assets just don't turn a bit.
아직은
When you
하면
look
안
at the
될
flow
것 같아.
into American equities and into tech, that is true. Is there any sense of exhaustion?
You know, I think, as we know, the equity markets is pretty much forward-looking, and so it's the expectations that you will see rate cuts this year that's more important. We're looking for 100 basis points of cut this year, starting around May.
근데
And so we think
여기
that will be
진짜
positive for the
매수로
market.
안 들어갔던 거 진짜 너무 다행이다. 여기 기대 들어가려고 했는데 역시 제 감이 대단합니다. 아직은 아닌 것 같고 제가 매수로 계속 들어가고 싶은데 한 지금일까? 지금 좀 괜찮을 수도.
I mean, it's a question of which home do you go to? Do you go to a little bit of bonds, an IG, or whether you take the equity on board, Nadia, isn't it? Let's take that across to Vishy. When you look at credit spreads, they're the tightest in 2 years. Again, I'm keen to get a comprehension of the scale of flow into credit. This is how I know it's a contrarian indicator. I'm even talking to somebody about the BlackRock IG funds myself. That's how low it has got that I'm actually interested in diversifying. That's a contrarian signal if I ever had one.
I think it's a good point. I think Nadia makes a really important point. This reallocation of money that's currently sitting, that have been sitting in the money market funds, is going to be a major story this year. We think that a better opportunity, certainly for the institutional component of the money market fund that is sitting there. So, 2023, about $1 trillion got moved into money market funds. We think about 40% of that from institutional.
그쵸. 아마 조금 좀 기다려야 될 것 같고 그때 시장이 열 때쯤 그때 좀 다시 타이밍을 봐야 될 것 같아요.
Is actually not as tight as, say, the longer end of the trade. So we expect to see more money flowing into the 1 to 5 year part of the high quality investment grade credit.
Just to square it away, a 1-2 punch from each of you. The PCE comes in at 2.9%. That is the preferred measure of the Fed. What is the risk of a March cut? Nadia?
딱 20분도 기다리다가 뭐 필요하시면 화장실로 갔다 오시고.
The ECI is important because the Fed has been highlighting that wage growth still remains too strong, and we want to see wage growth come down closer to 3.5%. So that will be key. But at this moment, we'll see what the Fed chair says next week. We wouldn't be surprised, and we know that the Fed has been reluctant to wave the victory flag, but maybe they'll start to raise it and let it blow a little bit in the tailwinds of the economy.
20 seconds, Vishy. Is it live? Is it really live? Is March really live? Would they dare?
We still think June is a more likely outcome and perhaps a greater risk of May. There are some significant revisions to both employment data and to the inflation data coming up on February 9th. And also, I think the near-term data, the 3-month annualized, 6-month annualized numbers may show some uptick in the first quarter. All of that puts us in the camp of June.
저도 이만 그냥 한 15분 있다가 다시 올게요.
Okay, we change when the data changes. Nadia Lovell and Vishy. Tripper, stay with me, more work to do. Let's go under the hood, see what's moving. We've had some big moves from Intel. Abby, what have we got? Build the story.
We do indeed have some very big moves. It's interesting because the U.S. futures are very flat. But beneath the surface, to your point, let's start off with the shares of American Express. They're moving to the upside, up 1.5%. They missed in a small way for the quarter that was reported, but the 2020 forecast well above estimates, the range above the street profit estimate of $12.40 per share. Restaurants highlighted as a bright spot. You were just mentioning Intel, though. Look at that stock in the pre-market down 10%. It was a big beat for the quarter that was, but the first quarter coming in very short on both sales and profits. To give you an idea, 13 cents versus the estimate of 34 cents. So the turnaround maybe not sticking there. That could be the fear. Western Digital down 3.1%. They beat, but after a nearly 40% rally over the last 12 months, investors wanted more. And then we've had some breaking news in the last few minutes. If we take a look at the shares of JetBlue and Spirit Airlines, JetBlue popping, Spirit plunging. This after JetBlue warns that the Spirit deal may be terminable on or after January 28th. They informed Spirit Airlines that certain conditions to closing required by its merger agreement may not be satisfied on time, suggesting they do not want to go ahead with the appeal. We'll be, of course, waiting for more information on that story.
Yep, and also there's a whole host of debt rollovers to consider in that story. Abby, thank you very much. Coming up on the show, the White House taking a victory lap?
We have seen some turnaround in sentiment in recent months. I think Americans do believe inflation's under control.
From inflation to energy, the Biden administration tightening the U.S. economy and freezing approvals for LNG exports. Why now? That conversation up next.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
On the heartbeat of the tech sector
across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with
We have seen some turnaround in sentiment in recent months. The University of Michigan Consumer Sentiment Index has moved up quite a lot. Inflation is now near term at close to the lowest levels we've seen in that survey. So I think Americans do believe inflation's under control.
Secretary Yellen touting the U.S. economy. This is the White House hits the pause button on approving new natural gas exports. President Biden writing in a statement, this is what we had from him. We'll take a hard look at the impacts of LNG exports on energy costs, America's energy security, and our environment. Now, this pause on new LNG approvals sees the climate crisis for what it is, the existential threat of our time. Interesting time to make this decision. Kaylee Lyons is in D.C. Will Kennedy is in London. Kaylee, good day to you. This is a very interesting political moment to make a call like this. Bold and differentiating your take.
Yeah, Manis, it's interesting that this move is happening in an election year, and this is really the launch of a process that could take months, lead us up potentially to that election in November that is now just over 9.5 months away. Essentially what the Energy Department is doing here is reanalyzing energy, climate impact, economic impact, national security impact of these exports, because the current assumptions that they are using in this approval process haven't been updated since 2018, and officials say that there is evolving information on how exactly methane burning is impacting global warming, essentially. So that is what they're reanalyzing here. This is a process they are not putting a firm timeline on, but they have indicated it could take months. They're going to do it expeditiously. It's not going to affect current levels of LNG exports. It's not going to disrupt projects that have already gotten approval, but it could potentially delay approval for other projects that are out there. The real political calculation here for the president is a difficult one. On the one hand, there is pressure from the left, from environmentalists, to consider climate change more heavily, and the concern being that if you are putting infrastructure, long-term projects together for exporting LNG, that means you're going to be weaning off of it way later. This is something that's going to be taking place for generations to come, potentially. Then there's the pressure on the right to not put climate ahead of American jobs and the overall U.S. economy. So it's a very difficult calculation here. Clearly, though, this is something the administration is moving forward with. There's also the question about what ramifications it may have geopolitically, as the U.S. has made a commitment to help Europe essentially not be dependent on Russian gas in particular because of Russia's invasion of Ukraine. And there's a question as to how much this could disrupt those efforts.
Yep, Katie, thank you very much. As you say, those promises to Europe have massive political reverberations. Mr. Kennedy, how are you doing? Not only have you got OPEC to contend with, this must be music to the ears of the Qataris. I mean, they're side by side. They are with the U.S. in terms of the #1 exporter. So if the U.S. steps back, it's hello market share for the Qataris.
That's exactly right, because the Qataris are going full steam ahead to increase their export capacity by about 60% over the next few years, and they're looking to sell that gas around the world, including to Europe. I do think the decision, as Kaylee said, will be a major concern in Europe. Europe has successfully stopped importing Russian pipeline gas, but it's only been able to do that because of the flow of US LNG. And if those exports are capped at a lower level than people were expecting, that means that gas is going to be more expensive than it may well have been, and that will be good for Qatar, but another blow to the European economy, which is struggling to compete with other parts of the world on energy costs.
Okay, well, it's certainly going to have massive ramifications at the energy complex, the price of a gas at the pump here as we go towards the elections. Geopolitics, I don't think necessarily is a vote winner in this country. It's all about what's in your pocketbook. Katie Lyons, Will Kennedy, thank you very much. The energy complex discussed there, Nadia Lovell and Vishy tour with me this morning. I mean, translating those high-level policy moves at this stage is very much about how it'll play out, perhaps in the head-to-head with Trump. But I want to get a perspective from you, Nadia. First of all, we have this pressure on oil prices and pressure on OPEC Plus, perhaps to extend their cuts. Your view on the energy market as it stands right now?
Yeah, we have a modestly positive outlook on energy equities and oil at the moment. Of course, it's been a volatile time, and the conversation is shifted towards supply for this year and whether there will be an oversupply supply market. We don't think so. We still expect a slight deficit in the market for the first quarter. We think that OPEC Plus will extend those production cuts into the second quarter, and that should help support prices. And so we're looking for Brent price to get back to about $85 this year, and that should also help support the equities. But again, it's going to remain volatile and things are fluid, and a lot of it is going to depend on how the rest of the winter season progresses. We're already seeing some supply disruption from the U.S. side, but so far into January, it looks like OPEC Plus exports have been coming in lower than in December, and so that's flowing through.
And Vishy, from your perspective, from the fixed income perspective, the dissipation in oil prices in the back part of the quarter to a certain extent helped. I'm not saying it was the only reason, but helped with inflation expectations settling a little bit better. There is a risk here. We're ticking up 76.81 is where we are on WTI. There is geopolitical risk in this market. So to what extent can oil be an interrupter in the break-even or the inflation outlook?
We think not a tremendous amount. We think it's with our expectation, and oil is outside of my direct realm of expertise. My colleague, Martin Ratz's expectation, who is a commodity strategist, has a mid-80s price for Brent over the course of the year, and relative the range bound expectation there. And what I think is really where our market, the filter market, we focus on is really what the services come from. Perhaps core services, it's housing, OPC, core services, housing. In all of those calculations, at least directly, oil prices are not going to be that material. And in this range, as long as we're in this range, so with that material, I think that's what the market is most focused on, and looking at the potential upside. The road to the inflation going down is not going to be a linear, straightforward road. It's going to be a bumpy road. And the source of that bumpiness, we think, comes not so much from energy, probably more likely to come from core services, ex-housing.
Yeah, I mean, the services is where we are, so see that stickiness prevail. Thank you to both of you. That is Nadia Lovell and Vishy Tirupta joining me this morning on the markets. Coming up, your morning calls. A little bit later on, we've got Max Kettner, see whether he still has his Clarion reverse Goldilocks call. Why investors need to prepare. That conversation with Max in just a moment.
여러분 일단 시작하기 전에 5분 전 뉴스 보니까 지금 나스닥 계속 올라가고 있는 상태인데 근데 저한테 보니까 그렇지 않은 것 같은데 이후로 진짜 많이 떨어졌구나 오케이 매수로 들어가고 싶은데
to sustainability, which is why part of the big transformation of our RNI, where there's this €1 billion spent every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
기다리다 지쳤어.
Records interrupted. In the space of 30 minutes, we just sweep into the red on the S&P 500. Intel is just breaking the will to live on the Nasdaq, down 0.5%. Intel down 11%. Let's get you up to speed with your morning calls. Will it change your mind? What the analysts say. First up, TD Cowen upgrading American Airlines to outperform, expecting the shares to benefit from upcoming Investor Day. Next up, Deutsche Bank upgrades Snap to a buy, pointing to a strengthening in the outlook for the airline advertising. Finally, Oppenheimer upgrading Coinbase to outperform.
Coinbase 많이 올라갔구나.
On the horizon. Brace, brace, brace. I'll take you on a bumpy.
과연 오늘도 매수 많은 것 같아요. 오케이, 3분 전. 뭐 대략적으로 봤을 때 분위기 나쁘지 않은 것 같아요. 궁금한 건 나스닥이 올라가고 있어요. 오케이, 0.18%. 뭐 오늘도 매수로 가봅시다. (2분) 전. 두구두구두구두구두구두구두구두구.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going on. So we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
1분 전. 여러분 준비됐어요? 가봅시다.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
or other authorities.
얼마 안 남았어요.
This is as the economic picture.
Equity markets reflecting on services inflation, which is a little bit sticky. It's Friday, the day that records come to die. We've had 6 days in a row of rally. In the past 30 minutes, we're giving it back, down a tenth of 1% on the S&P 500. Intel is a car crash on the guidance. Gensler's got to do an awful lot to guide this market.
시작했어. 역시 바로 떨어지네. 오케이. 조금 더 떨어지다가 엄청 많이 올라가야죠.
They're a happy crew at the moment.
Okay.
We're up on yields, up by a pip. The headline PCE comes in sub 3%, but it is the services part, which is the highest monthly change in 3 months. You'd hardly call it exorbitant, ticking up on the 10 years. And crude is down by 0.5%, 76.98 is where we trade at the moment. One stock that I mentioned, it is Intel.
And
the chip maker is sinking. You've got disappointing forecasts. Renewing uncertainty around the stock. Abigail Doolittle has the deal.
Well, Manus, we have this stock plunging worst day since October of 2021, and it's one reason that we have both the S&P 500 and the Nasdaq snapping a 6-day winning streak, because it is the biggest weight dragging on both of those indexes. So they actually put up a good quarter, but to what you just said, the outlook, especially for the first quarter, very disappointing. They're talking about $12.2 billion to $13.2 billion in revenue versus the estimate of $14.25 billion. So a pretty significant miss there. Profits 13 cents versus 34 cents. So more than a 50% haircut there relative to expectations. Now the chip makers' personal computer business is recovering, but demand in the lucrative market for data center chips is not so strong. In addition, they are contending with a slowdown in programmable chips and components for self-driving vehicles. They've also talked about getting into the foundry business. That seems to be stalling. There's not a lot of information there. All of this puts that turnaround that you were talking about, a fledgling turnaround, into question. We have at least one downgrade on the stock to a hold from over at, I believe it is Raymond James. I'm just trying to pull that up right now. Needham, actually. And the stock up more than 60% into today over the last year. They need to put up more. They could not miss the outlook like this, and we have the stock again plunging on the day.
Yeah, and you've got their original customers designing their own chips, so
맞아요.
it's a tough world out there. Abby, thank you very much. Let's stick with the earnings theme. These are the robust results. They're being overshadowed by January's weak trends, but a more optimistic response to Amex. Simone Foxman has the details. Simone.
Yeah, Manus, the investors, at least this morning in early trading, seem to be more focused on the outlook than they are on the latest quarter results. We got news from both of these companies today. Visa actually performing a little bit better than expected in its last quarter, but some of these results and some of the trends that I was seeing in January may be related to some negative weather, kind of overshadowing the picture for the year. So it saw quarterly profit up 8% year on year. That was ahead of expectations. Revenue up 9%.
그러세요? 조은 씨 역시. 그럼 사실 부서는 그때 들어가지 않은 거 맞아요. 많은 욕심 부리면 안 돼요.
Boosting its quarterly dividend as well, so maybe we're seeing some of the response there. From a macro perspective, though, both companies saying they see a very strong consumer projecting that throughout the year with double-digit revenue
이거 진짜 전 아직
should be noted, Visa hit an all-time high yesterday, so maybe some of the responses, people just taking profits here.
전 지금도 그 지금의 레버리지로 1대 10으로 엄청 조심하고 있어요.
Is missing their estimates for the fourth quarter, marking an end of
물론
the CEO
빨리
challenging,
수익을
transformational.
보고 싶으면
Isabel Lee is with
1대5로 가면 되는데 저는 아직 담보금이 제 담보금이 그렇게 돈이 많지 않아서 혹시 잘못되면 그때 저는 완전 울 거예요. 저 아직은 그런 여유가 없어요.
Was lower than estimates. They reported $2.83. That's slightly lower than the $2.87. Its regular operating revenue also fell around 5%, as well as the merchandise revenue, which is around 1% lower. For the year, the company is targeting a revenue growth of about 3%. So maybe that's where the transformational part enters. On Thursday, we have some bad news. The company announced it's laying off 7% of its non-union workforce, and that's amid just a tough freight cycle. By some calculations, this would translate to around 330 people in their workforce. For now, Norfolk shares are down 3% in the past 12 months. It's also lower by 1%.
Well, thank you very much keeping a track of the earnings there. Excuse the pun. Let's turn to telecoms. T-Mobile's earnings missing the estimates. Despite strong gain in subscribers, Katie Greifeld has been tracking the mobile.
와, 여기 안 들어갔었다는 거 진짜 다행이다.
Right now, currently a little bit under pressure. You had fourth quarter EPS. It missed estimates. It came in at $1.67 in the quarter. Analysts had been looking for $1.91 there, so a bit light. And that's really overshadowing that good news that you mentioned on the subscriber front. T-Mobile actually added 934,000
담보금 구할 수 있는 소스가 별로 없어서 저 지금 만족 주시면 조심하고 있어요. 지금 망하면 그때 좀 끝이에요.
And Verizon, which also reported gains when it came to subscribers. While analysts are praising the growth and the quarter overall, they seem pretty rosy about this report overall. They did note that share buybacks did not meet expectations. You also had churn a little bit higher than expected. But to get into some of the commentary, you had Citi writing that while there were some, quote, bright spots and some wrinkles in this report, you know, more good than bad. You also had Morgan Stanley's Simon Flannery noting the less than robust expected buybacks as mentioned. But he also wrote that he continues to see T-Mobile as leading the industry with significant share gain potential to come in the smaller markets. Maybe that's helping the stock rebound a little bit right now, currently down about 1%. We had been closer to about 2% lower pre-market.
와,
Okay, Katie, thank you very
이거 뭐야
much.
진짜.
HSBC's Max Kettner listening in to the roll call of results and the
메트로
macro flow. But he delivers
가는
this
게
morning
맞아 오늘?
with this. While it may be tempting to chase the latest all-time
와 진짜 롱으로 들어가셨으면 진짜 완전 나가리.
If anything,
완전
2023
나가리.
has taught us not to chase, but to fade the trends. Max Kettner has never been one for the crowds, but I will challenge you. Good morning. How are you? Good to see you. So look.
Good morning, Hannes.
Record after record on the equities. Credit spreads are on the tide. Strong U.S. growth. China stimulus. Tell me where the cracks are.
Yeah, look, I think the cracks are perhaps that inflation is a bit stickier than we thought, right? In fact, when we look year to date at the risk asset rally, it is not similar to what we had last year. Last year, right, it was almost enough that we had this tech-driven rally in US equities and US large caps. And that was sort of propelling everything higher, from emerging market debt to high yield credit or high beta FX. When we look at those asset classes since the start of the year, well, the reality is when we look at emerging market debt spreads, they're up 20 basis points. High yield spreads are up 10, 15 basis points in the US. When we look at things like local currency debt, that's down 2.5%. The Russell is down 2.5%. So it's really just those handful of stocks that are driving the gains. But under the hood, we are starting to see some of those cracks. And I would say it's perhaps that we're getting a little bit too comfortable with inflation completely disappearing. And on the other hand, we see that in the pricing, right? We see that, for
저도 그렇게 생각해요. 아마 역성하지 않을까 싶어.
They came down from sort of 270 down to 2% in the last 2.5-3 months. We saw that when we look at, for example, global equity performance, compare that with earnings revisions. I would argue, look, even if the reporting season now is good,
나스닥, 근데 지금 뉴스 보니까 나스닥 계속 떨어지고 있잖아요.
Even if the guidance of most companies turns around and is actually much, much better from now on, most of that is down to price, right? Most of that, even if earnings revisions do pick up, that is now priced in.
지금 매수 들어가도 좀 나쁘지 않을 수도.
A function of lower yields and lower rates volatility, but that's been largely played out now. So I do question what is the catalyst up from here.
Okay, you question the catalyst up, which then makes me cautious about what I have in my exposure. My question is, do I de-risk from equity and take, you talked about the sort of the slightly pop, I wouldn't call it a hectic move, Max, on high yield, but do I de-risk in equity and high yield and go for IG over high yield until there's better clarity?
Yeah, I think so. I think that's probably the right strategy. So you want to sort of hide out in short duration stuff, right? Short duration IG credit, particularly in the US, because bear in mind, the environment that we foresee, which was sort of calling reverse Goldilocks, or call it bad news becoming good news, those sorts of backdrops, they typically
제가
are
봤을 땐 지금 들어가도 좀 나쁘지 않을 듯?
Credit, for example, in US dollars,
쭉 올라가고 있잖아요.
work quite well as a hedge. We do still think that energy prices can trend higher from here, right? So we're not bearish on all the risk assets per se. In fact, our view is not a classic risk. It's the exact opposite.
And you and I spoke about this before. So maybe the slightly more challenging question to frame to you is this: how long do you think? How enduring will reverse Goldilocks be, Max? Do you think it's going to be a period of time, Manus, until I see rate cuts, stabilization, syncopated drop in inflation? Does reverse Goldilocks is it a front-loaded 2024 scenario plan?
Yeah, I think that's true. It's not going to be a view that will pan out throughout the entire 2024, right? Look at the last year, for example. You were just reading some of the stuff that we put out in a note this week. You know, the fact is, when we look, for example, 12 months ago, people were playing US recession for a month or two, and then for 2 months we played banking crisis and credit crunch, and then for 2 months we played, you know, debt ceiling and Treasury general account. Then we played Goldilocks for 2 months. Then we played higher for longer. Yields can never go down anymore, right? We played that for 3 months, and now we played for 2-3 months. We played the whole Goldilocks theme, and you know, just going through that from the last 12 months, it really taught us, look. Probably this is not the environment anymore like it was in the 2010s, where you want to chase those trends, but where you want to say, look, the next one is going to be perhaps exactly the opposite, and that's not going to take 6, 9, or 12 months. It could easily become snapping back very, very quickly, perhaps even next week, right? With some of the, perhaps there'll be some more disappointing news from the tech sector because the expectations are so high. Maybe the Fed does put some wording in around the easing of financial conditions that makes them a little bit uncomfortable, right? What about the quarterly refunding announcement on Monday, for example? What about non-farm payrolls, wage growth, right? Wage growth also on the employment cost index. So there's quite a few things that under the hood.
맞아요. 지금 완전 기싸움이고 이 포지션을 이 타이밍을 좀 잘 봐야 되고.
So I hear you. I've got the lines from the report. Hide out in a bit of cash, short-dated credit, and you like Japan equities and energy. So that is what you like. What is it that would cause you to rewrite the top line on the research note, which goes, you know, prepare for reverse Goldilocks? What is it that backs that up? What is it that makes you rip that off and go, okay, I'm turning?
많은 것 같은데 아직은
Yeah, I think one of the things that we really need to look at is sentiment and positioning. When we look, for example, at our sentiment and positioning indicators, yes, they have gone down.
아니 오늘 제 귀가 죽었어요. 오늘은 진짜 도저히 모르겠어.
Since the start of the year, talking also to our clients around the world. I think most clients
거 봐요. 지금도 약간 좀 들어갈까 싶었는데 또 떨어지네. 아 진짜 재수없게. 오늘은 진짜 기운이 안 와요. 오늘은 아마 쉬는 날이에요. 제 기운에 쉬는 날.
The reality is, on our measures, that is almost maxed out long. So frankly, all I need right now is I need a bit of a turn in shorter term momentum, and once that turn in momentum comes, then you know those strategies, those systematic strategies really will turn very quickly from net buyers and buying pretty heavily to actually pretty heavy net selling, right? And that can go very, very quickly. And that really would be, for us, one of the triggers really on that.
기도발 떨어졌. 네, 맞아요. 이제 일주일 동안 다 떨어져요. 금요일에 이제 그만해 이런 느낌으로 적당히 해.
We're going to continue to see data like we had last week, right? Or even yesterday, when, you know, GDP rises more than expected. You look at the number and your first reaction is, oh God, like, can we see really 6 rate cuts this year with such a strong growth number? And then at second glance, you look at the inflation side and you're saying, it's great, right? We're back to target on some measures even below that. So if that continues, if in the next couple of months, we're going to continue to see better than expected growth, but inflation basically gradually going towards target without any kind of disruption, that I think it's basically Goldilocks on pretty much, you know, the next couple of months, and it still then argues for tech and for AI and a continued rally across everything.
So before I let you go, what's the style of jacket? This is the full kind of very beautiful German tailoring. Is it? What's the name on that?
It is underlying by Bavarian Nature. You know that.
Bavarian Nature. You just see
진짜 완전 기사한 중이네.
What's the name of the thing you drink out of a stein?
Oh yeah, that is called beer.
나보고 똑바라고.
Okay, this is going to descend. I'll see you soon.
들어가고
see you in America
싶은데.
for a beer soon. Max Kettner there.
넌 읽기 싫어.
But he's open to change. Coming up, wrapping up the big week of earnings.
LVMH is remarkable in that its fashion and leather goods segment added in incremental sales the entire top line of Tod's, Ferragamo, and Burberry put together. That's just how much it grew on top of a very big base already.
The monster that is Louis Vuitton. Earnings season heating up. Next week, big tech on the deck. That conversation next on Bloomberg.
아, 완전 잘못하고 있네.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
I do think what we are going to find is that outside of a very few industries and sectors, governments are not going to be willing to subsidize indefinitely production that brings a to allies. And so the benefits of international supply chains that we've seen over
제가 사실 오늘 결심했어요. 매수로 들어가려고 결심했는데 근데 맞는 타이밍이 없어. 조금 올라갔다가 요만큼 떨어져. 조금 올라갔다가 또 지금 떨어지고 있어. 어떡할 거야 진짜.
But certainly not one which is going to be closing down unnecessarily our trade and investment relationships with the rest of the world.
Globalization, that open supply chain, global supply chain is really important for the life science industry, particularly pharmaceutical supply chain. You think about the stress the pharmaceutical supply chain has been under since COVID-19, the war in Ukraine, not to mention the geopolitical tensions, if you will. We don't have the luxury of saying we can temporarily stock out on our product because these products, these medicines keep people alive.
여러분 잠시만요. 잠깐 좀 나갔다 와야 될 것 같아요. 일단 재미있는 타이밍을 좀 보면서 좀 계세요.
If we look at kind of scale, LVMH is remarkable in that its fashion and leather goods segment added in incremental sales the entire top line of Tod's, Ferragamo, and Burberry put together. That's just how much it grew on top of a very big base already. So that is what has insulated its operational leverage relative to its peers. And I think that's also important in that many companies in the sector delivered outsized margin expansion in the wake of the pandemic.
That is a heck of a moat around one brand name in the luxury sector, showing signs of resilience. It is LVMH delivering better than expected results. Shoppers treating themselves to the brand's luxury handbags and clothes. Organic growth was monumental there. Simone Foxman is with us. So much for the aspirational shopper. They're not interested in them right now.
Yeah, it seems that the luxury shopper is carrying the day and shares up the most since 2009 on the back of these results. Really reassurance for the street in the wake of some of these concerns about weakness in the high-end goods industry overall. Note that LVMH had hit a 14-month low yesterday, but fashion and leather, 9% organic growth in the fourth quarter. Wine and spirits expected to sink 7%, but then seeing an unexpected 4% surprise after 2 quarters of declines, especially on the back of that slowdown in the United States. So overall organic revenue growth up 10% year on year. The estimate had been for 8%. Management also hitting a very robust tone. A lot of analysts across the street noting that confident in their 2024 despite some of the geopolitical and macroeconomic headwinds. The CFO also said, though, that they don't plan further price increases in 2024. Citi says this tone indicative of the idea that 2024 could be a smooth normalization rather than the difficult one that many had been anticipating. Able to weather those winds of U.S. slowdown, able to weather those winds of Chinese consumer, and that's why we're seeing that positive bump in shares today, Manus.
Yeah, you call that normalization with swag. Simone Foxman there on Louis Vuitton numbers. From retailers to big tech, we get the results from 5 members of the Magnificent Seven next week. The preview, Katie Greifeld has the curtain raiser. Katie.
Manus, buckle up because we have a big week next week. In the coming 7 days, you have 108 companies in the S&P 500 taking the stage. That amounts to $16.8 trillion in market cap, making it the busiest week of earnings season. So let's name some names here because on Tuesday, you have Alphabet, you have Microsoft reporting, then you have Apple and Amazon on Thursday, as you can see on that calendar, and then Meta closes us out on Friday. And like you said, 5 of the Magnificent Seven just there alone. And traders will be watching to see if that group can overcome the ills of Tesla. The EV maker really whiffed on earnings this week. That's adding to a 25% loss already in 2024 for Tesla. And the Magnificent Seven as a whole, it's managed to actually hold up despite Tesla's performance. But obviously, the next few days are crucial to determining whether or not that dynamic is sustainable in the long haul. And don't forget, in addition to big tech earnings, we also have a Fed decision and a jobs report. So it's going to be a lot of fun, Dennis.
Yeah, a heck of a lot of fun, Katie. Thank you very much. Looking ahead to next week. For some of the sector price action, let's get back to Abigail Doolittle. Bit of a guess here. Maybe tech might be under pressure.
You're right about that. That, of course, is the worst sector on the day. On Intel having its worst day in more than 2 years. As a result, we have the S&P 500 actually looking at a small decline right now. The first time we've seen that in 7 days. To the upside, though, is consumer discretionary up 0.5%. Whirlpool, Tupperware, along with Tesla, all helping out there. As for the week, let's take a look at the best 2. And it's a little bit of a surprise here, actually, to me. Energy is the best sector on the week, followed by communication services. And then to the downside, we're looking at consumer discretionary. I think that has a lot to do with Tesla's fall yesterday. And then healthcare, a small decline. But on the week, Manus, we are looking at a 1% gain right now, at least, for the S&P 500.
Okay. Keeping the dream alive maybe for the week. Abigail, thank you very much. Coming up, the market-moving events that will dominate your diary. That's next.
Valentine's Day is almost here, and JCPenney Beauty has the most popular designer fragrance brands for gifting. Signature scents that hit all the right love notes. Earn rewards when you shop, plus use them to save. JCPenney, make it count.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% for 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of the summer, and obviously we had 2 big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
This is Bloomberg.
record run up on these stocks is interrupted. Do you really want to take that much risk going into next week when you've got the Mag 5 reporting and nearly over $60 trillion worth of market cap hitting the tape next week? Do you want that risk on your book? Well, let me tell you what you do need to know to focus for the week. Tuesday it is Tech Mountain. Earnings come in from Alphabet and Microsoft. Wednesday, you have the Fed's decision and Chairman Powell's news conference, guidance on the inflation and rates. The Bank of England, it's their turn on Thursday. And then more and more tech, Amazon and Apple and Meta earnings pile in. Finally, the crescendo of the week, the payrolls report with wages, jobs, and all you need to know about the health of the U.S. economy. It's Friday. We got there. Nothing quite broke. Perhaps interrupted on this equity rally for now. Countdown to the open Friday. That's it from me. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars. Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Friday morning from the Bloomberg Interactive Brokers studio in New York City to our worldwide audience. Alex Steele and Paul Sweeney with you here in the Bloomberg Interactive Brokers studio for another edition of Bloomberg Intelligence Radio. Over the next couple of hours, we're going to focus on markets, company news, where we're going to highlight the investment research of Bloomberg Intelligence and its analysts. BI's 400 analysts around the world cover more than 2,000 companies and 130 industries globally, so we get to tap into those fine folks throughout the next couple of hours. Coming up, we're going to take a look at regional banks, plus global transportation. I think we had a lot of railroad companies report earnings, and those companies are always a great vibe for what's happening in the economy. Plus, we're also talk about the municipal bond market because it's Friday, and that's what we do. We talk muni bonds. We'll also bring you an interview with Intel CEO Pat Gelsinger. That's going to be with Bloomberg's Ed Ludlow around 11:20 a.m. Wall Street time. But first, let's kick things off with a Bloomberg Business Flash. John Tucker.
All right, and this Bloomberg Business Flash being brought to you by Interactive Brokers. IBKR's redesigned Fundamentals Explorer provides comprehensive worldwide fundamentals data to clients at no cost. Take your research to the next level. Visit ibkr.com. Let's start you off with the data, and this is kind of an eye-opener. Pending home sales on a month-over-month basis coming in way better than expected for the month of December of 8.3%. Expectation was for 2%. Prior month, that was dead flat. Earlier, the Fed's preferred measure of underlying inflation, the PCE data, that reached an almost 3-year low. Bloomberg Economics says the stage is now set for the Fed to start cutting interest rates, perhaps in March. The major stock averages, they are mixed right now. We have 8 of the 11 major industry groups in the S&P 500 higher. Biggest drag is coming from information technology. Well, Intel's disappointing earnings shouldn't weigh on the rest of the market. At least that's according to Patrick Armstrong at Plurimi Wealth.
Not for me. I think it's an Intel issue. I think the market is really rewarding companies that are price setters. Unfortunately for Intel, they've fallen into a bracket where nobody's clamoring for their chips. They're producing commodities.
Right now, the S&P 500 4 points lower after another record close yesterday. 48.90 on the index. The Dow Jones Industrial Average 30 points higher. The Nasdaq 100 right now is down 94 points. That's a decline of 0.5%. And the 10-year yield, the benchmark, 4 basis points higher. We're at 416. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
Hey, John Tucker, thank you so much. Happy Friday,
guys.
We're all in on that.
5 days. I made it a whole week.
Yes.
And I'm still here.
Exactly. It's all working
It's a win, guys.
It's all working fine. Alex Steele, Paul Sweeney live with you here in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Alex, the economic data, I'm just thinking the last few days, I got a GDP print of 3.3%, much better than expected. And then when the PCE data comes out, people like Michael McKee and Lisa Bromwich, the smart people, tell me to focus on the PCE core deflator. That was 2.9%, better than the 3% forecast, and down from the 3.2% last period. So I've got a strong economy with GDP, inflation coming down. Is that a soft landing?
Well, also, what I like to look at, because I also like to shop, is the real personal spending, because that's the real underlying data that kind of goes in, and it's up by 0.5%. And also they revised November up too. Sure, there could be Christmas shopping. We don't know. Sure, but it's still growth, and it just defies all the expectations of a recession and a consumer slowdown that people are still clinging to, but yet we have not seen.
Haven't seen it here, and so the markets are kind of mixed on this data, as John was just reporting. Let's go under the cover a little bit and see what's happening on some of those equity markets. We welcome Nora Melinda. She covers equities for Bloomberg News, and she joins us here in our Bloomberg radio studio. Nora, what are you looking at?
Which John spoke a bit about earlier. Looking at Intel, that chipmaker is seeing a double-digit sell-off this morning after reporting a disappointing forecast on first quarter sales and profits after a long-promised turnaround from the once dominant chipmaker. Those shares are down as much as 12% for their worst single-day drop since June of 2020. This spillover is really causing a broad-based weakness among chipmaker stocks. We're looking at the SOX index being down, information technology being the worst performing group in the S&P 500. Though the chipmaker's personal computer business is recovering, demand is weakening in the lucrative market for data center chips. And, on the flip side, this has really been a struggling company. So some analysts are saying, maybe this should have been some expected news. But the company is still contending with a slowdown in chips and components for its self-driving vehicles. And of course, we'll have Ed Ludlow speaking to this later.
Yeah, that'll be about around 11:20 a.m. Wall Street time. Ed Ludlow, Bloomberg Television, sitting down with Pat Gelsinger, the CEO of Intel. So stay tuned for that.
It just seems like patience. Like if you want the stock, you just got to be patient. They're building out the foundries. That should be good for them. They said that they had $10 billion worth of, quote, lifetime deal value. I have no idea what that means, but you just got to be patient to wait for it, and then you get the margins back. What else are you looking at?
Let's take a look at T-Mobile. It's a bit of a mixed report here this morning. We have Citigroup analyst Michael Rollins describing it as some bright spots and some wrinkles. Shares were earlier under pressure, but are now rising as much as 1.6%. The phone company reported fourth quarter EPS that missed expectations, and there was some disappointment in regards to share buybacks. But the company has also reported some solid fourth quarter results, including postpaid phone net additions of 937K. Analysts were expecting 886K. This beat both AT&T and Verizon's results, suggesting that it's gaining share with its industry-leading 5G network. I don't know who you guys have, but I've heard fantastic things.
T-Mus.
Okay.
You're T-Mus?
And I need to get with you. I'm with Verizon.
Yeah, I've always been a Verizon person.
I was a Verizon user, and then I got sucked into T-Mobile because of the deals they were offering were really good, and it cut our bill in half.
Wow.
And then I got my dad on my plan for similar reasons. They had terrible customer service at Verizon, so we're part of this trend.
I need to get with you.
Interesting, because we just had a story about how parents are still supporting their kids. They're living at home longer. There's and I make the statement that my 3 working age children are all off the dole. They're all on their own. I feel pretty good about that, with one exception: the phone. We have that big family phone thing.
Yeah.
And I put out a text to the gang. I said, "Hey, you guys are all up on your own now. Do you want to, do your own phone gig, or do you want to stay on the?" And they all came back, even one, said, "Well, we'll stay."
And that's me. Yeah. I'll stay for as long as I can.
I'm the opposite. I got my dad on my plan.
Oh, good.
Yeah, so it's
I love
a different
that
kind of story. Okay, so you have a third stock. What's moving? What is it?
Really quickly, looking at Spirit, another double-digit move.
Spirit.
Yes. Those shares are tumbling as much as 21%. The airlines are really still in focus yet again after JetBlue finally filed a notice that its $3.8 billion deal with Spirit may terminate in the next 2 days. JetBlue said that it's still trying to evaluate other options, but this filing comes after both carriers did say earlier this month that they would appeal the federal judge's ruling that blocked the deal. And this is all just after days after JetBlue's new CEO clung to the deal with few other options. Her priority is really set on returning JetBlue to solid profitability.
Sure. Interesting. Well, my question is, if I'm an airline person, if this deal doesn't go through, what happens to Spirit? Like, did they go away, I think? Because that's what I understand about their balance sheet.
Compete
They've got balance sheet issues that if this deal doesn't happen, I don't know what happens to these guys. And if you're in those markets, that really depends upon Spirit Airlines. I don't know. These regulators are tough.
Yeah, I
on
mean,
deals in general.
Well, it's also just, unless they can hold on if we get a new administration in November.
Yes.
And then does that change the calculus?
Right. Yep.
But I don't know how you can hang on that long.
Yep, interesting. All right, great stuff. Nora, thanks so much for bringing us up to date here. It's time to take a look at some earnings, and some earnings for the regional banks, because around this time last year, there were some issues. And around that time last year, we met this guy named Herman Chan. And we haven't been able to get rid of him since. Herman Chan is the regional banks analyst on Wall Street, works for us at Bloomberg Intelligence. And boy, do we depend upon him over the last years. We're trying to really get a handle on what's happening with the regional banks in this country and what types of pressure are they under. Herman, thanks so much for joining us once again here in studio. We're back into earnings season for some of these banks. Tell us what you're seeing and maybe what you're hearing from investors in these regional banks.
Yeah, thanks. Regional banks have largely completed fourth quarter earnings at this point. I'd say it's more the same. Revenues are still off about 2% on average. Loan growth's not really there because there's lots of weaker demand, especially from commercial borrowers, and banks aren't really doing a lot of commercial real estate lending at this point, given a lot of potential risk ahead for that particular asset class. And so banks are focused on button down expenses and building capital. So there's not a lot of good news, at least in fourth quarter results, but banks are expecting a return of loan growth later in 2024, and that's really a function of lower interest rates increasing demand.
How are their deposits doing?
Deposits are pretty stable.
Because that feels like a big bright spot.
That has been an area of concern, particularly after the regional bank failures of SVB, First Republic, and Signature Bank. But at this point, banks have lifted interest costs and made deposit pricing more enticing for depositors across the board in money markets and CDs. So that's really the area of growth for the regional banks, but they're still seeing attrition in those zero cost deposits, the deposits that are in checking accounts that aren't generating any sort of interest for customers.
So one of the tickers I learned a year ago from Herman was KRE. That's the Spider S&P Regional Banking ETF, a great proxy for regional banking in the U.S. Year to date, that's flat. Right. Trailing 12 months down about 10-11%. So the question I always have for you is, I work for a hedge fund.
Right.
I want to go into my hedge fund manager. I'm a hotshot young analyst covering in regional banks. I want to go in and say, give me another $50, another $100 million, because I think it's time to go long regional banks.
Right.
Are we there yet?
If you went long at the end of October, that was like that was the
trade.
time, right?
Okay.
That was the time. That was like sort of the inflection point that the banks were at, the trough valuation levels, and then the market sort of turned around and expected robust interest rate cuts, and so the valuations of the banks have started reflecting those rate cuts, and the market's a bit more optimistic for regional banks, largely because when rate cuts happen, you have lower funding costs and sort of potential growth in the balance sheet, as I mentioned earlier. So that could help.
It's a
improve
35%
sentiment.
move off that October low.
That's right. So
okay.
that was the time to get in. At this point, a lot
Where
of
were you in October?
the easy money. You should have brought me in
Yes.
October. I would have talked about it.
No one wants to talk about when they're doing well.
Yeah,
right?
exactly.
So Herman, another issue was those hold-to-maturity bonds, right? And the
Right.
disconnect between deposit and the short versus long-term maturities. What are they doing to fix that? I mean, do they need to? Are they offloading loans to, say, other big banks? What are they doing?
Yeah, so there's a few dynamics going on. One is that with the longer term rates coming down, those unrealized losses are actually improving. So you've seen book value growth because of the lower paper losses across the board for the industry in the fourth quarter. A few of the banks have recently started selling these loans at a loss and then reinvesting at higher prevailing rates. So you take the upfront hit, but then you improve your net interest margin and your earnings power going forward by reinvesting at current yields. So that's a strategy that's happening. Maybe that happens a little bit less with interest rates potentially coming down going forward.
So other than that spate of a handful of banks roughly a year ago, have we had any other notable bank, I don't know, not failures, but just angst? Yeah.
Yeah, the angst was really relegated to those three. There were a couple banks like PacWest that was in the headlines, and that found a buyer in Bank of California. Another bank that was definitely in the headlines was a bank, as you recall, Western Alliance, that they have done a tremendous job of shoring up their deposits and really getting back to the good graces of the market. So there's no real concerns there, and they actually reported yesterday after the close, and the stock's up 2%. So favorable results in the fourth quarter. So at this point at the stage, it seems like the rest of the regional banks seem in pretty good standing.
All right, let's talk about one of my favorite topics, Basel III Endgame.
Oh, yeah.
Right.
Mostly because it just reminds me of the Avengers. I love that movie. But, okay, so this is basically higher capital requirements for certain banks. And if you're the big guys, you got to put in a certain amount. And if you're sort of the medium players, you got to put in a certain amount. What's going to be the hit to the let's call it $100 billion to $250 billion regional banks?
Yeah, that's a very good question. You hear of the bank CEOs like Jamie Dimon be very vocal about it being the Basel III Endgame being very negative for the U.S. economy and hurtful in areas like mortgage lending, etc. So, but for the regionals, it's fairly digestible. The big hit for the regionals is that their capital ratios will suffer from these unrealized paper losses that you asked about earlier. So that will be incorporated into their capital calculations, whereas that aspect is already in the big bank's capital. So some of the tailoring issues that happened during the Trump administration will go away and be detrimental for regional banks. But outside of that, the issues that the big banks complain about, it's more manageable for the regionals, and for the management teams for the regions have talked about, risk-weighted assets growing, in the low single digits to mid-single digits. So that's much more digestible relative to a 40% growth in RWAs that JP Morgan has talked about.
So you mentioned during a year ago when people were really concerned about this group, it's really going to be an earnings issue as opposed to a kind of a balance sheet issue. Where are we in kind of getting through that earnings pressure, if you will, and maybe getting back to more normalized earnings power for these companies?
Yeah, that's right. There's still pressure on the margin because even though short-term rates, the Fed stopped raising rates at this point, there is still a trickle-down effect where, as I mentioned before, there is a mix shift happening from your demand deposits, your checking accounts, and moving into areas like CDs. So that deposit remixing is a negative for earnings and revenues, but that's petering out. Offsetting that is fixed rate repricing of loans and securities, so that's beneficial. So overall, revenues are going to stabilize and are starting to stabilize. That's happening. Potentially, that's going to be a second half event. So you're going to still see some headwinds, but manageable, with the second half potentially growing from better margins and balance sheet growth.
Herman, so great, so smart, best stuff out there. We're sorry we only have you on when there's a disaster for the banks. Herman Chan, Bloomberg Intelligence Senior U.S. Regional Banks Analyst. Herman Chan joining us there. I do have to wonder, Paul, where's the M&A that we were all there's been some.
I know.
But I wonder why it hasn't materialized.
Again, I've got a buddy I ride the trade in with, and he's been a long-time M&A banker for regional banks for years. And he said he deferred his retirement for a few years because he thinks he's going to do a ton of business. His wife's not happy, but he's like, I think I'm going to make a lot of money.
When's that going to happen?
I don't know.
He's like riding the train. He's like, where's my M&A?
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, let's start off with the tale of two stocks. Intel, the worst performing stock in the S&P 500, down over 11% after its earnings report. And then you have American Express surging the most in a year. The credit card giant forecasting earnings for 2024. The topped estimates, Amex right now the best performing stock in the Dow Jones Industrial Average, up over 7%. Data today, the Fed's preferred gauge of underlying inflation cooling to an almost 3-year low, even with pretty robust holiday spending. And then there's a shuffle at the top. J.P. Morgan Chase Chief Executive Officer Jamie Dimon moving some of his top lieutenants into new senior roles, so he's positioning them for more experience running the firm's operation as he prepares potential successors. Right now, the S&P 500 dead flat, 48.93. Dow Jones Industrial Average up 61 points. The Nasdaq 173 points lower. And we check markets for you all day long, right here on Bloomberg Radio. And I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We're live here in the Bloomberg Interactive Broker Studio. We're streaming live. It's actually streaming now. After a little glitch this morning. So you just head over to youtube.com, search Bloomberg Radio, or go to the search Bloomberg Podcast. That's another way to find us as well. So, Alex, back in the day, I worked for a little investment bank, not a regional investment bank in Richmond, Virginia, Wheat First Securities. My office overlooked the beautiful James River and the railroad tracks running right along the James River. So all day, every day, trains carrying coal from West Virginia to Newport News for export to Europe would run by. So I love trains. So it was a great office, the top office of all time in my career. Down in
Alex, what
Virginia.
happened?
What happened? What happened?
Clearly,
Exactly.
what is better than that?
Exactly.
No, I would have loved that too.
It was
Planes,
awesome.
trains, automobiles, 100%.
Yep. We had a lot of the train companies reporting some earnings, so that means we have to check in with Lee Klaskow. He covers all the transportation stuff for us, trains, trucks, ships, the whole thing, air freight, does it all for Bloomberg Intelligence. So, hey, Lee, thanks so much for joining us here. Again, export coal, that's the dirty stuff. We'll send that to Europe. The clean stuff out of the Powder River Basin in Wyoming, which I've been to, by the way. That stays here. What are you hearing from the railroads this quarter, Lee, so far?
Yeah, so it's been I wouldn't really call it a mixed bag. We've had pretty much most of the rails meet expectations that have reported. There's one left that hasn't reported, Canadian Pacific, but Norfolk Southern reported this morning, and they missed by 4 cents, and you can see the stock is down around $6.50 right now. And really driving that weakness is not so much the miss, but it's their outlook. You know, they're expecting their margins to improve 100 and 150 basis points annually over the next 3 years, but consensus is at a 250 basis point improvement. So consensus is pretty much in line where management is expecting revenue to come in, which is around 3% growth, but it's really on the cost side. And you know, this railroad has been dealing with a lot of additional costs. They were made headlines, unfortunately, earlier last year due to that devastating derailment in Ohio, which created a lot of chaos. The good news for them is that, you know, they are really focused on improving their operations. With improving operations also comes improved service and safety. That's all been doing quite well, but it also comes with higher costs. Norfolk Southern is trying to build a more resilient network. So next time, you know, something like this happens, and let's hopefully it never does, but, you know, it's an outdoor sport, and things can happen when operating a railroad that are kind of beyond their control. But, you know, it allows them to kind of bounce back. And the management did mention on the call this morning that they got some kudos. You know, I guess they wanted to highlight some good news that they had from some of their customers, because a lot of rails faced serious weather in January, and they were able to snap back a lot sooner than maybe some of its peers because of this resiliency that they're building into their network. And again, that comes with higher costs.
So Lee, that's a Norfolk Southern story, which in some ways had idiosyncratic stuff going on. But you also had Union Pacific, you had CSX, and both of them had a cloudy outlook also for 2024. What's our macro read-through for that?
Yeah, so we've been in a freight recession for quite some time. There has been no soft landing for the freight markets. Weakness kind of hit in 2022. The good news is that we could have some growth this year in 2024, but that growth is going to be probably pretty anemic. It can be anywhere between low and mid-single digits. So the outlook is mixed because it really depends on the commodity type. So the demand for automotives is still strong. Intermodal.
I was going to say, aren't we spending and buying lots of stuff?
We are buying lots of stuff, but a lot of that stuff is coming from warehouses versus coming from overseas. So, while inventory levels are getting normalized and the destocking cycle appears to be over, it doesn't really seem that retailers or other businesses are looking to build inventories, just given the uncertainty that we're facing from an economic standpoint. I mean, we all know that, at least from consensus estimates, that economic activity is going to be moderating this year versus last year. And so, again, with the mixed bag, Paul mentioned export coal earlier. Export coal was a fantastic business for a lot of these carriers last year. That is expected to cool. Utility coal is really going to depend on the weather and where stockpiles are, so that there's a lot of uncertainty around that. And you mentioned the idiosyncratic story of Norfolk Southern. The thing about railroads is, while there are some macro overarching themes, each railroad operates a different network with a different mix of businesses and different benefits. And so, it really becomes a rail-on-rail story versus, an industry story. But, the one overarching theme that I would say is that volume is going to be better this year. Margins are probably going to be better this year. And that should drive earnings growth.
Alex, one of my first gigs back in the day was I covered the railroad and trucking industries.
How many jobs have you had?
Oh, I've been around. And my first
can't
earnings
hold the job, apparently.
I can't hold the job. That's very true. Lee, my first earnings models, you could still take a look at them, but they're on floppy disk, so I'm not sure how we necessarily get access to them. Lee, do you care? Do you have a preference, Eastern railroads versus Western?
That's a great question. What I would say is that I do like Union Pacific, which is the only pure play Western rail. The Eastern rails are Southern CSX. And the reason why we like Union Pacific, and that's one of our focus ideas in Bloomberg Intelligence, is that we believe that their new CEO, Jim Benna, can do a lot with the company. He joined, I believe, back in August. He was their COO, left, and he's really known for being a great operator at Canadian National. Canadian National was one of the first railroads to employ precision scheduling railroading. He's also a disciple of the legendary and late Hunter Harrison, who was kind of considered the godfather of PSR railroading. So, we think he's going to come in and do a lot in terms of really improving the operations. And not only do we like that aspect of it, but we also believe that company has maybe gotten a little bloated over the years, and we think there's some cost opportunities there on the corporate side. And it is not just about cost and operations. It's really about their network. They have a really fantastic network. They have exposure to cross-border freight between the U.S. and Mexico. While nearshoring is not going to happen overnight, it is a long-term secular trend that we really like. It might be like watching grass grow, or paint dry, whatever your analogy is. But in terms of that growing, but it is going to grow, and UP is really going to benefit from that. And then also, in addition to their intermodal business, Paul alluded to that they truck coal out of the Powder River Basin. It's lower sulfur coal, so it's quote unquote cleaner. We're not getting away from coal overnight, and that is a good foundation for them. Not to mention some of their other businesses that they're involved in.
Yeah, just don't tell the Biden administration that part. But so to that point, though, to politics for a second, if we get a second Trump presidency, what happens to the import-export world, and does that affect the railroads in the same kind of way if we're looking at maybe a 10% tax on all imports, for example?
Yeah, that's another great question. the reality is it just becomes a tax on the consumer, right? Because if there's not an alternative for a particular product, we are going to import it no matter what. So yes, increased tariffs are inflationary, so it's not necessarily a good thing, but it certainly complicates things. And what I would say on the West Coast is the West Coast could benefit, at least in the near term, from what's going on in the Panama Canal. As I'm sure you know, there's low water levels there. I think you've heard of something going on in the Red Sea in terms of the Suez Canal. Container liners are not going through the Suez, so they have to either go along Africa, and some of that that freight that was destined for the East Coast might just go trans-Pacific directly to the West Coast and then intermodal across the country. So, there's some pretty interesting near-term opportunities. And there's also, we like to talk about labor a lot. In September, there is a contract that expires for the workers all along the East Coast and Gulf ports. Shippers might want to divert freight to the West Coast to kind of avoid any labor disputes or labor issues that might arise, which would gum up supply chains on those ports.
Yep, we've seen that before. All right, Lee Klaskow, great stuff as always. Lee Klaskow, Senior Transportation Logistics Analyst, Bloomberg Intelligence. He was over in Asia last week meeting with shippers and investors, and so is it a global story that he follows there. Right now, let's head down to Washington, D.C., world and national news with Amy Mars.
All right, thank you, Paul and Alex. The International Court of Justice is demanding Israel take steps to prevent acts considered genocide. It stopped short of ordering an immediate halt of military operations in Gaza. ICJ President Joan Donoghue.
The State of Israel shall take immediate and effective measures to ensure the provision of urgently needed basic services and humanitarian assistance to address the adverse conditions of life faced by Palestinians in the Gaza Strip.
This was a preliminary ruling from a panel of judges in The Hague in a case brought by South Africa accusing Israel of genocide in Gaza. GOP frontrunner former President Trump is calling for Senate Republicans to not make a deal with Democrats on border security to deny President Biden a legislative victory ahead of the elections. That left one of the top Republican negotiators, Senator James Lankford, dismayed.
There are some that are saying, hey, to protect President Trump, we need to make sure we don't vote on this. I don't agree on that.
No plan has been finalized so far. No legislative text has been released, but negotiators had hoped to wrap up this agreement within just a few days. They've been working on this since before the holidays. A new organization called the Howie Liebengood Foundation is named for a Capitol Police officer who defended the building during the attack on January 6th. He died by suicide 3 days later. Attorney General Merrick Garland attended the unveiling of the new organization.
We know that law enforcement officers endured horrific physical violence on that day. They were punched, tackled, and tased as they defended the Capitol and those inside.
Attorney General Garland says the Justice Department has now expanded its coverage under the Public Safety Officers Benefits Program to include mental health support. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. Right now on the screen, it's a mix of green and red after another record close yesterday. S&P 500 kind of teetering between gains and losses. Investors weighing disappointing results from Intel against signs of cooling inflation. Intel right now the worst performing stock in the S&P 500 after they gave a weak forecast for first quarter sales. That, of course, weighing on other chip makers. Meantime, Cameron Dawson at New Edge Wealth says, tech has led markets for a pretty good reason.
So what you have is this really divergent market as well under the surface, where the only sectors that have had positive
역시 제가 예상대로 많이 올라갔죠.
So those are the sectors that, of course, have led the market.
Price figures show the Federal Reserve's preferred gauge of underlying inflation rose at the slowest annual pace in roughly about 3 years. So this bolsters hopes that officials are going to cut rates maybe sooner than expected. At the same time, a separate report shows a larger than expected jump in personal spending. S&P 500 6 points higher right now. That's up 0.1%, 4,900 on the index. Dow Jones Industrial Average up 108 points.
적당히 하고
The Nasdaq 100 38
주말에서
points lower.
좀 힘을 모아서
And we check the markets for you.
월요일부터
John Tucker.
다시
That is your Bloomberg Business Flash. Alex and Paul.
다시 벌면 돼.
John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Radio. Alex, we're talking about the good economic data. It seems like a soft landing is certainly in the cards here. And look at the WIRP function, the World Interest Rate Probability Function, WIRP, go. It's got like a 45% probability of a rate cut in March. I don't really care, I don't think. I don't care when it happens, because I know it's going to happen. I don't really need the when. But I don't. People still talking about that. I don't know. It just feels like, boy, if rates are going to be cut, I'm in good shape.
Well, yeah, but it's not the when now. It's the how much and how long.
Yep,
and then
absolutely.
that really matters to like the belly and the.
But for some people that actually do this for a living, it kind of does matter. Dana Dioria, she's one of those, I believe, co-CIO at Investnet in Berwyn.
아니 갑자기
I'm a big fan
연락
of
없이
Berwyn,
친구가
PA,
와가지고
Dana, thanks so much for
여태
joining us here.
친구가 왔는데
do you care
그때
when the Fed starts cutting rates? How do you viewing the Fed? Because we're going to hear from the Fed next Wednesday.
아쉽다.
I think given the fact that the market is pricing in to the point you just made, sort of this almost 50-50 at this point.
그래도 뭐 나름대로 좋은 거에 수익을 괜찮다고 생각해요. 12만 원?
Obviously, we started the year and
Not bad.
ended 2023 with much higher expectations of a March rate cut, which I never quite could square.
근데 혹시 주원씨 소액을 좀 보셨어요? 그때 진짜 타이밍이 좋았어. 완전 좋았는데. 지금도 계속 머리들이 하네. 아니 진짜 내가 이 차트 볼 때마다 계속 너무 애매한데 딱 내가 나가는 타이밍에 봐요. 계속 올라가고 있었잖아요. 이거 제게
Unemployment does not suggest that they need to be cutting rates right now. Right. So I'm not one who thinks the Fed is oblivious to what's going on in markets or that they're just. But at this point, they really have breathing room here.
대단하세요.
So Dana, I think it could go away, but I don't think
완전
they have.
So Dana,
제 우상이십니다.
Maybe whether they cut in March matters to certain parts of the market. Clearly, the front end, right? Maybe like 3-year notes. Does it matter to the stock market? I'm just trying to understand what's trading on what. So like what's going to be trading tomorrow,
아무래도 타이밍이 중요하죠.
2:15 p.m.
I do think it matters. I mean, there's just
타이밍이 중요하고 계속 긴장해야 되고.
So growthier stocks, for example, should tend to react negatively to higher rates because you are discounting longer-dated cash flows at a higher rate. And so if I'm doing just a basic intrinsic value calculation, It should matter a lot to me if I have longer dated cash flows, if I have a lot of that value of my company is in the terminal value, that these rates that are higher for longer should negatively impact. Of course, that's one input, right, in a million inputs. And then, you know, additionally, if we look at value stocks, for example, low price stocks, you know, they're shorter duration in nature, so maybe it shouldn't impact them as much. But they also
부려야 될 것 같은데.
you know, they tend to be
지금 욕심을 좀 부려도 조금 볼 수 있지 않을까.
You know, higher rates impacts there. But I think this is one of many things going on. I think, you know, growth stocks, you talked about tech, or you've been talking about tech, communications, etc. And just where those companies stand in terms of like the defensive posture, the fact that they are looking at higher income and that they're revising up, whereas other companies are not. So it's one input in many.
All right, Dan, you mentioned fixed income here. How do you feel about the bond market here? It was just brutally crushed in 2022. Got some positive performance in 23 thanks to the last couple of months of the year. Kind of soft so far this year. How do you think about your allocation to fixed income?
Yeah, I think the starting point is so different, and we tend to be talking about it the same way as when we were starting at rates being rock bottom, and it's not the same, right? I mean, it's a very different starting point, no matter how you cut it. Even you know, the route we kind of saw last year a little bit was short-lived, and to your point, you got the money back. If you're looking moment to moment at the correlation between stocks and bonds, then you're nervous about the patient to a certain extent because you're not seeing this hedging effect that maybe you're looking for. But if you just open the aperture a little bit in terms of the length of time you have, I'm a strong believer in still having a robust bond allocation, particularly now, because again, I mean, there's only so far rates to go one way or the other at this point. It's not like it was, you know, starting again from a rock bottom and, you know, massive increases that you have to stomach. So I see that allocation as being necessary, as being good ballast for portfolio.
또 진짜 들어가도 아니 지금 이거 차트 보고 계속 너무 애매하잖아요. 아 들어가고 싶은데.
I love the question. You can't not like tech. You know, I'm a person who says tilt a little because you're getting so much tech. Whether you're in an index or you're, you know, even actively managed, they can't get that far away. It's too big. It's too much a part of the index. So I am a person who will say tilt a little bit towards, you know, some companies, lower priced companies, just to offset some of that, you know, concentration risk. But you can't get away from tech. You need it, and you can't be too far on the tracking error.
So, Dana, we're kind of just getting to the teeth here of earnings. I haven't seen the actual numbers per se, but it just feels kind of meh to me. Some companies are doing okay, some companies not. What are you looking for this earnings season?
No, I think you're right. That's the exact right word that you know, and I don't think that's a super big surprise, right? Because even if we stick the landing, there to some extent, you know, we should expect corporate America to have some impact from the fact that you've had this massive increase in interest rates, that they have to contend with inflationary increases. A lot of these things can be lagged in terms of their effects. So, I mean, we can't expect to, you know, hit the lights out every single time. And, you know, even if the market is kind of absorbing this, and even if we're seeing that, wow, inflation actually is coming in, I mean, had another good print, you know, in terms of just where we want to be. We're moving our way to the 2%. I mean, it's almost too good to be true to a certain extent. But at the end of the day, corporations, it's a varied landscape. They're all dealing with different parts of that inflationary increase, parts of, you know, what it means to go back to bond markets. So I'm not surprised. I think the 2024 forecasts matter a lot. You know, what do we expect by the end of this year?
Yeah.
And that'll tell you something about whether we're trending toward recession after all.
All right. Dana, we're going to leave it there. Thank you so much. Appreciate it. Dana Dioria, co-CIO of InvestNet, joining us there. So here's a fun headline.
Yep.
Carnival down almost 2%.
I see this.
They issue a 10K. They warn the Red Sea instability could impact operations. That is spreading from industry to industry.
지금 타이밍이 좀 괜찮을 수도.
Although I would like to cruise through the Suez Canal, but what I'd really like to do is take a cruise through the Panama Canal and they do that.
Ooh, really?
Yeah. Great book on the Panama Canal.
I feel like that's weird because if you can't get goods through it because of water levels, you're going to take a cruise?
Yeah, I don't know how that happens, but they do that, and I would like to see that because I'd like to just see. I think it's like a bucket list thing. Go see the Panama Canal. That would be pretty cool. This is Bloomberg.
어머, 더 올라가네. 어머. 왠지 지금 좀 타이밍이 괜찮을 수도? 매수로 들어가기엔 참 맛있는 타이밍. 맛있으면 간식 먹어야죠.
Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with company news we're following this morning. Spirit pushing back against JetBlue's termination warning. In a statement, the company says, you know what, there's no basis for terminating their merger agreement. And Spirit says it will continue to abide by the agreement and expects JetBlue to do the same. JetBlue warned of terminating the agreement on or after January 28th. Save shares right now 16% lower. And then you have Intel. Those shares, they are down close to 11%, the most in more than 2 years. They delivered that disappointing forecast. So this renews doubts about a long-promised turnaround at the once dominant chip maker. One investor said this morning, you know what? All they produce at this point are commoditized chips. Intel's first quarter projection for both sales and profit coming in well short of Wall Street estimates. Executives struggling to soothe concerns during the conference call that they had with analysts. The outlook suggests that the chief officer, Pat Gelsinger, still has a long way to go in restoring their former prowess. The JP Morgan Chase CEO, Jamie Dimon, moving some of his top lieutenants into new senior roles, so he's positioning them for more experience running the firm's operation as he prepares potential successors. And data breaches, they continue at an alarming upsurge, an alarming pace. The financial and reputational harm suffered by targeted companies remains staggering. In the healthcare sector alone, there were was a 239% increase in the number of large data breaches in 2023. And on average, each data breach is costing firms $4.5 million. And that's a look at your company news. I'm John Tucker.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at these markets here, the S&P 500, we're seeing a little bit of a lift here, up 0.2%. The NASDAQ up about 0.1%, so a little bit of a lift off of some pretty good inflation data, I would say, here today. 2.9% on the core. That's below 3%, and that's getting close to the kind of Fed would like to see it closer to 2%. The 2-year Treasury is up 5 basis points, 4.34%, I should say. WTI crude oil taking a little bit of a pause here, off about 0.2%. Still elevated at $77, about 18 cents here. So we keep an eye on that. Bitcoin, let's call it out. Tom Keene's not here. Up 3.5%, 41,300 on Bitcoin. Right now, let's head down to Washington, D.C. World and National News with Amy Parse.
All right, thanks you, Paul. A few minutes after arriving in a New York courtroom, Donald Trump got up and left as closing statements began in his defamation trial versus writer E. Jean Carroll. Trump's departure drew the ire of the judge, who noted for the record that Trump had left and ordered his lawyers to stay. Earlier, Trump and his lawyer were actually late for the start of those proceedings. The United Nations Human Rights Office is speaking out about last night's execution of Alabama death row inmate Kenneth Smith by nitrogen gas. UN Human Rights spokesperson Ravina Shamdasani.
We are very worried that this could open the door to further executions, and this is why we feel the need to speak out again clearly that this is not acceptable.
This was the first time this new method of execution's been used. The UN says it could amount to torture in violation of international human rights law. A Moscow court has extended the pretrial detention of Evan Gershkovich through March. Gershkovich is an American citizen, a journalist who works for the Wall Street Journal. Russia has accused him of espionage but has not provided any evidence. Gershkovich and his employer deny it, and the U.S. has declared him to be wrongfully detained. NASA's space helicopter Ingenuity deployed to Mars back in 2021 and has now flown its last mission. The 4-pound solar-powered aircraft flew 72 times in its time on the Martian surface. It was only supposed to fly 5. NASA Administrator Bill Nelson.
What started as a technology demonstration with plans for only up to 5 flights has now completed a remarkable 72 flights on Mars.
Administrator Nelson posted a video message on social media to say Ingenuity has earned its place in history. King Charles III is at a London hospital to undergo surgery for an enlarged prostate. He was diagnosed last week and reportedly decided to go public so other men who may be experiencing similar symptoms would be inspired to seek medical attention. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Alex.
Amy Morris, thank you so much. We appreciate that. Hey, Alex, you know, when Russia invaded Ukraine, it highlighted the need that Europe's going to have for energy. One of the sources was liquefied natural gas. We have a lot of it. We're now an net exporter of energy in this country. We could step in.
We did.
We did.
We did step in.
That's cool. And that I learned all about LNG.
Mm-hmm.
That's pretty cool.
It is cool. And now the Biden administration is putting a little bit of wrench in this. So they announced on Friday that they halted the approval of new licenses to export U.S. LNG while it scrutinizes how shipments affect climate change, the economy, and national security. Okay, fine. Yep. The rules haven't been rethought since 2018. You want to rethink them? Okay, go ahead. The projects that are underway can still happen, but there's still a bunch of projects that are going to be waiting in the queue now. And I mean, it's hard to look at this and not think that it's political, right? So the environmentalists are going to get a little bit of love, particularly after President Biden approved the Alaska oil project with Conoco. So you have to wonder if this is just let's bide our time, give it 9 months, and then once the election's over, you can speed it up. Because honestly, my opinion here, it's bananas.
Yeah.
It's total bananas. Like, you want to work on methane leaks? Go for it. You want to plug some holes? Definitely do that. But like, what is Europe going to do if the U.S. can't export LNG?
That's right. I mean, and it comes from the shale, right? A lot of it comes from the shale. The natural gas comes from the fracking of the shale.
Yes, but also the Appalachian Basin. So the Northeast has a ton of gas fields. And it makes gas here so cheap. And you got to export it. And it takes a long time to build. And it's real expensive.
Yeah, I just love that. You know, and then over there, once you get it over to Europe, you have to put it back into a gas form, right?
You do.
And
You do. So you cool it down,
See, I
get
should have-
solid, you put it on a vessel, and then you put it on there, and then you put it back into the gas, and then you put it on a pipeline. Super cool.
Smart people in the energy field. All right, we're going to have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to finish it strong. It's Friday. That means we talk municipal bonds, Matt Miller's favorite segment of the week. We're keeping it, even though Matt's flown the coop. He's a attorney leave or something like that. Eric Kazatsky's going to join us. He covers all the muni stuff for Bloomberg Intelligence. And then the highlight of the morning, Bloomberg's Ed Ludlow is going to speak with Intel CEO Pat Gelsinger on the company's earnings. Disappointing earnings. The stock's trading off very heavily today, so we're going to get the lay of the land from the CEO. So that is a must-listen to segment, as is our next. It's John Tucker kicking this whole thing off with the Bloomberg Business Fund.
And let's start you with the major averages, all green right now. The S&P 500 had been bouncing between gains and losses. You have 9 of the 11 major industry groups in the index higher. Just 2 are lower. American Express is the leader in terms of index points. That's up over 8% after their earnings report. Intel, the big laggard, that's down almost 11% after the disappointing earnings report there. Over at CFRA, Sam Stovall is advising investors, you know what? Stick with the winners.
Communication services, consumer discretionary technology, which as a group was up more than 50%. Yet following an up year, you want to let your winners ride, which would include those 3 sectors. Also, financials is one that is doing well and would therefore be a let your winners ride candidate.
And the data, the Federal Reserve's preferred inflation measure, that has reached an almost 3-year low. The data cap a year that saw inflation retreat faster than the Fed officials had even anticipated. Right now, the S&P 500, 10 points higher. That's up 0.2%. 4904 on the index. The Dow Jones Industrial Average up 139 points. The NASDAQ 100 right now, that is down 13 points, down about 0.1%. 2-year yield, that's rising right now, 5 basis points higher, 434 on the 2-year. The 10-year, the benchmark, that's up 3 basis points. That's at 414. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker it is. Thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well. We're also in CarPlay, the Android Auto. I mean, the technology distribution is like crazy these days. Yeah, Sirius XM. So it's pretty much everywhere. If you want to listen to Bloomberg Radio, see Bloomberg Radio, no excuse because it's out there, baby. Looking at the markets here, as John was just mentioning, a little bit of green on the screen here. Not crazy, but certainly better than we saw earlier this morning. Let's dig under the hood and see where we're getting some stock-specific moves. We do that with our good buddy Nora Melinda. She's the equities reporter for Bloomberg News. Nora, what do you got?
So we are now into credit card earnings season. So I'm taking a look at American Express, as John mentioned a little bit earlier. It is the biggest gainer in the S&P 500 right now. That stock is jumping as much as 8.7%, surpassing an all-time high last set in 2022. The credit card company forecasts EPS for 2024 that beat the average analyst estimate. We've got an analyst over at HSBC saying that the quarterly results and guidance reflect the strength of American Express, their financial model, and that they acknowledge that the revenue growth is being increasingly driven by NII and that billed business growth is moderating.
I mean, but also isn't it just their customers are richer than other people's?
I mean,
like at the end of the day,
I'd say so.
Like they have like huge fees, right? The platinum card, etc. I mean, they're going to do better in a downturn. Like at the end of the day, it's just income inequality for Amex.
Right, and if you think about so many corporations that use Amex, you know, I think that there's so many customers, a large customer base there that's willing to pay.
I just pulled up the chart and did the max function.
You also have your wallet out right now. What's going on?
Because I couldn't even tell you what I had. Like, I got the gold card. I've had it since like forever. $80 something. But I don't use Amex that much.
I do, because of the Delta points.
So many perks.
The perks. See, I'm not a good perks person. My daughter's very good. She
What's
scams
the
everything.
yearly fee on that thing?
I don't know.
On the gold, I don't know. I think the platinum that we have is like 500, I think.
Oh.
But the perks, this is so crazy. The perks just go to my husband because the card's under his name. Because he is older and has been a customer longer. But then I don't get any of the perks, even though I do all the spending. And also because,
I don't have to work on that.
It's definitely biased to the men in a relationship, I'm just saying. What else you got? Intel.
Looking at Intel, the chip maker is seeing quite the sell-off after it forecast for the first quarter sales and profits that disappointed investors. We've really been talking about this all day, and as we know, our very own Ed Ledlow will be speaking with the CEO coming up shortly. But it was a long-promised turnaround for the once dominant chip maker, and essentially the market is disappointed that they're not seeing the results that they had expected to see in terms of forecasts. So shares of Intel are down as much as 13%, plunging for their worst single-day drop since July of 2020.
Wow. So I will hear from the CEO at 11:20, approximately.
He's going to be like, give me time. That's going to be the message.
All right, Stuart Paul writes in $250 annual fee on the gold card.
Oh, did you know that?
I did not know that.
Do you want me to show you how to do the rewards thing? I'll show you that in break. Okay. You got to download the app though first.
Everybody just takes my money. It's
We're
very
working on
easy.
it.
You're going to have to give a tutorial on air for everyone.
Yeah, but I got to cash. So
He does. You take it out and you look at it sometimes.
I look
You
at my
put it back
cash
in
because
your
I'm a
mouth.
Wall Street guy. I'll sit there and count money. What's a more fun thing to do than
Oh
count
my
your
gosh.
money? That's what we
It's
do
like
on Wall Street.
he's counting money live on air and on
First
Wow.
job.
love
at,
it.
First job at Payne Weber on the block trading desk. Johnny Coughlin, head trader. Never graduated college, but was one of the best traders on the street. Made a ton of money. Would pull out a wad like 4 or 5 inches thick. No kidding. All hundreds, all 50s. Rip them off. Throw them to the junior traders and say, "Hey, go out and get me some lunch." And we did. It worked great.
Now you're a cash guy.
Yeah,
You still like.
I am a cash guy, but I'll tell you, during the pandemic, I became less of a cash guy. But I'm
It's a
still
big
a cash
moment
guy.
for Paul.
I'm still a cash guy. You go down to the Jersey Shore bars, they don't do.
It's true.
They don't do this Apple Pay. You got to rip off a 50, put it on the bar, like you've been there before, and that's how you do it.
So he takes out his money, but then he's not giving it to us, John.
I know,
He's
share-
like,
share
go
the
buy us
wealth.
lunch. Like,
Really
what's up with
left out.
that?
Share
I
the
mean,
wealth, Paul.
Exactly.
All right, the last stock we're looking at here is Spirit and JetBlue.
Yes.
Spirit saying that they really think that the merger can happen. Wishful thinking.
Right. I mean, we just saw a headline come out saying that it believes that there is no basis for terminating that JetBlue deal. Really interesting stuff here. We've got Spirit shares tumbling as much as 21%. We know that this has really been in flux. Is the deal going to happen? Is it not? I mean, it's being blocked by judges, but they're saying that they think they can appeal. We'll see where all that settles. But we do have the CEO of JetBlue really trying to cling to this, and clearly Spirit as well.
All right, we're going to get Jen Rhee in here at some point soon on this. Jen Rhee covers all the antitrust issues. She's a lawyer, a reformed lawyer. She says she'll give us the latest on what's going on here. But it's been tough to get deals approved here. The regulators are they're not playing around anymore. So anyway, thanks very much, Nora. We appreciate that, Nora Melinda, giving us the latest on what's happening in the stock market. Eric Kazatsky, is he around? Do we have him?
Yeah, but say this is Bloomberg first. 'Cause we
Oh,
gotta
yeah,
play
we
the
gotta do
sound.
that.
It's a
Thank you very
fancy
much.
thing. You're
You're a
welcome.
professional. This is Bloomberg.
Now on Bloomberg Markets, Munis in Focus.
That's right. It is Friday. We talk municipal bonds, and I know we've probably got a billboard here, so it's in the chat.
It is brought to you by Build America Mutual, insures U.S. municipal bonds that finance essential American infrastructure and provides guaranteed income to improve any portfolio. Be part of Building America. Invest in BAM insured bonds.
No, that's BAM.
No, BAM insured bonds? Okay.
Yeah.
That's my first
and Matt
billboard,
would take
man.
the BAM to like the nth level. And we did go spend some time with our good friends at Build America Mutual. We did a remote broadcast from our good friends. They insure municipal bonds. So if you're concerned about the issuer, you buy insured municipal bonds. I didn't know that was
They're
a
like
thing.
the reinsurers of municipal bonds?
No, I mean, if you don't think the XYZ municipality is going to pay you back because maybe they're a little shady, maybe you don't think they're, you get insurance on it. And so, and apparently it's a thing. So we checked that with them. Eric Kazatsky joins us, Senior U.S. Municipal Strategist for Bloomberg Intelligence. Joins us here from the Bloomberg Intelligence HQ in Princeton, New Jersey. It used to be New York, which we fought so hard for, but now they've retreated to Princeton. Eric, thanks so much for joining us here. What's going on in the municipal bond market here these days? What are the headlines?
you know what? We're just enjoying the start to this new year and trying to noodle on the different headlines that we've been sort of thrown our way, right? So we had some speculation that there were some credit issues with Harvard. I think we've sort of safely put that to rest at this point, that they're going to be around for probably another several hundred years. And obviously we're getting a lot of questions on what's going on in the southern border and how that would impact the states. Obviously we're not of the opinion that there's going to be a secession issue on behalf of Texas, but it does bring up a larger conversation. What could happen when you have states sort of, going with battle to the federal government when there's so much at play as far as tax revenues going in each direction?
I love Eric because he can have energy and excitement about munis.
Sure.
Unrivaled
I try.
in my 17-year career covering stuff in the markets. Eric, can we go to the fun topic of the election? Because it also kind of ties into the border issue. And I'm just wondering, how are we sort of prepping? How's the muni market thinking about a possible President Trump again?
You know what? I don't think it would be the worst thing for the muni market in the fact that we already sort of know what we're going to get, right? So Tax Cuts and Jobs Act came into play 2017. We're still dealing with that. A lot of the provisions are set to sunset in 2025. So if the fact that we do have another dose of President Trump coming in, we can expect a lot of those provisions to, become permanent and stay in place. Not great for the muni market in the sense that corporate tax rates will stay low, and that really does tamper demand from some of those buyers who used to really play in our market.
Hey, Eric, talking to you and reading your research, I learned about taxable municipal bonds. I didn't know that was a thing until...
Wait, really?
Yes.
Mm-hmm.
Talk to us about that market. How's that performing here?
Yeah, on a performance basis, slightly outperforming corporates. But I think the real thing to focus on when you're looking at taxable munis is the different credit aspect, right? So totally asymmetric credit risk bucket to corporates, and the fact that you're picking up another 20, 30 basis points of yield right now. So if we think the Fed's going to cut, now's the time to sort of jump into bonds because of a scarcity issue. I want to be grabbing more yield in a safer area to play, and taxable munis would check off a bunch of those boxes.
What do you think the tax code will be that may or may not impact munis, though? I thought the whole point, wasn't they tax-free? Isn't that the whole point?
Well, sure, they are tax-free, right? But I think what we're expecting, regardless if it's a Republican or Democrat that come into the White House, is that individual tax rates are most likely going to go higher. With the amount of federal deficits that they're contending with, it really only makes sense that that's the path that we're going to head on. And at the end of the day, if taxes go higher, it's going to make municipal bonds a lot more desirable as sort of the last bastion of sort of, seeking a tax exemption for individuals.
You mentioned higher education here, and you have a note out. Munis might have 99 problems, but Ivy League schools aren't one of them. Talk to us about that part of the market, that issuance category. Higher education, how often do they use the muni market, and are they good investments?
Yeah, so, it really is sort of a bifurcated world when it comes to higher education. And it was one of the areas that we had a little bit of concern going into the year, but it's a story of have and have nots, right? So you have the AAA credits of the world, the Harvards, the Yales, who have tens of billions of dollars in endowments, and then you have schools like Penn State, who are not 501c3. No, I'm a state school guy myself, except it was Pitt.
I wrote a lot of tuition checks to Penn State.
There you go. So, look, I mean, the credit profile of those two different schools is very, very different. We think their concern is really the less funded private education four-year institutions who really can't withstand, sort of a drop in enrollment year after year after year. That's where we're going to see some spread widening.
Spread widening. I like that you took us there, because what we've seen in the investment grade market, for example, is just compression in the spread. Like no matter what, there's been that compression. Why are we seeing munis widening? Like what's going on there? Walk us through that.
Yeah, I mean, I think it's a race to quality this year, and that's why we're seeing, much of the grabbiness going on is going to be in the AA and AAA names that are coming to market. Washington Geo was an issue that just did very well, both in the primary and secondary. But I think what's happening in our market, and sort of echo with corporates, is that, you are seeing an overall tightening of spreads just due to supply and demand imbalance. And it's really been a theme for munis, I would say, dating back to 2017 at this point.
Eric, I'm thinking about my buddies on the new issuance market. How's the new issuance market look for 2024? How's the calendar look?
I mean, pretty full, and surprisingly so. I think a lot of the estimates for supply coming into this year across the board where it was going to be on the quieter side, but I've been surprised by the amount of preliminary new issue filings that have come out, and pretty sizable deals as well, right? We have some stuff in the high yield space, another bright line train issue coming, bridging the gap between California and Vegas, so that's going to be interesting to watch. Yeah, and the Massachusetts Children's Hospital deal, a subsector of healthcare that we always find interesting. So definitely something for everyone on the calendar.
What happens if the Fed cuts rates? More issuance? Like, what's the knock-on effect?
Yeah. Well, I mean, look, our market can't do advance refunding. So it's not like if I have a mortgage and rates drop, I can refi anything, right? So on that aspect, we're not going to see a lot. But I do think to some degree that there's market timing going on in our space. And a lot of people didn't like the market last year. So if we have, 3-4 rate cuts, you could definitely see some more stuff pop on the calendar.
So what's the credit quality like out there in municipal bond land? I haven't heard of any big blowups recently.
And you probably won't, right? At least from the credit raters' perspective. They continue to sort of march higher as far as positive outlooks on the credits that we long have held to sort of be the bad boys of the municipal space, right? The Illinois and Chicago's of the world. So as long as sort of the opinion over the next several fiscal periods is that they're going to continue to pay their bonds, I think all is going to be well when it comes to credit quality in our space.
Here's a question that may tie into politics also. So clearly the Inflation Reduction Act is trying to be a catalyst for investment, and you're seeing a lot of red states get a lot of that investment, whether it's even with the CHIPS Act or it's building a new facility or battery storage, etc. And I'm just wondering, with Republicans talking a lot about wanting to repeal that, whether or not it actually happens, what would like a South Carolina do if all of a sudden they lost all this investment helped by the IRA and the CHIPS Act?
Yeah, I mean, well, speaking to the fact that they haven't done a lot of issuance, even with those matching funds available to this point, speaks to the fact of that market timing we just mentioned. But if they had to go at it alone, I think they'd find a very receptive municipal market who'd be happy to finance them at very competitive rates. So, the availability of money to finance the amount of things that actually need to get financed in our space, there's no shortage of that.
So, what are the sectors you like here? I mean, do investors in your world, do they look at sectors like I want to be in healthcare or I want to be in transportation? How does that typically work?
Yeah, I mean, look, a lot of the products in our area, they're trying to be an index, right? And it's sort of broad-based. But yeah, there are definitely investment vehicles that are focused on sectors. Some of the sectors that we think are going to be more interesting this year are healthcare, right? Shaking off some of that pandemic pain they've been dealing with the past several periods, right? And hopefully what we think is going to happen is a little bit of spread tightening based on some, more normal margins coming back to the space.
All right, very good. Eric Kazatsky joins us, Senior U.S. Municipals Strategist for Bloomberg Intelligence, joining us off the Princeton desk. We appreciate that. Looking at Intel here, continues to trade off. We're going to have Pat Gelsinger, the CEO, coming on in just moments with Bloomberg's own Ed Ludlow. We want to get a little bit of a preview and kind of get a sense from the Wall Street perspective, kind of what's the view on Intel in the quarter, and we can do that with Bloomberg's senior semiconductor analyst Kunjan Sobhani. He's based out there in San Francisco, right in Silicon Valley. Kunjan, you've been covering this company, this space for a long time. What happened at Intel last night with their numbers?
Yeah, so the bottom line was the negatives more than offset the positives. We were not expecting such a grim outlook, especially in their PCs and their server business. That was more upsetting than the weakness across their networking or telco business, which we kind of were aware of a little bit.
Kunjan, how much of a plea are we going to get from Pat Gelsinger in just about a couple minutes' time? We talked to him on radio and TV about just, guys, give me time. I got this. Give me some time.
Exactly. I mean, look, we have seen this happen a couple of times over the last 2-3 years where there has been moments where they've asked to hit the reset button. We didn't expect it this time. There were some positives, right? They've been making good progress on the 5 nodes in 4 years. So I expect him to keep the conversation on the positives and forward-looking. I expect him to really tout the AI PC thing and their work they're doing in the Gaudi accelerators. So definitely he'll keep the focus on the long term and the outlook.
So where are they just competitively positioned? Do they have a good product offering?
Look, they are late to the game. That's a fact. And also the $2 billion pipeline, not revenue. For Intel scale, that's really small, while their peers are taking up significant billions of dollars right now in 2024 in the AI. And the more the wallet share goes to AI, it's taking away share from Intel's traditional server business.
Yeah, sounds like a challenger from a product line perspective.
Yeah, we have true. Kunjan, we 30 seconds. What's your question for Pat Gelsinger?
I would like to know more about the revenue ramp of the accelerator pipeline rather than just the pipeline increasing. I think that would really help raise confidence in that product. especially given the importance of AI right now.
All right, Kunjan, thanks so much for jumping on with us. Kunjan Sobhani, he is the technology analyst for Bloomberg Intelligence. He's out there in San Francisco. He covers the semiconductor, the chip makers for Bloomberg Intelligence, and just getting some thoughts there. The stock is off 10.7% today. It's the good news is up 50% on a trailing 12-month basis, but again, the street really disappointed with some of the numbers and the guidance they got last night. So let's get the latest right from the company itself. Bloomberg's own Ed Ludlow. He is out speaking with Intel CEO Pat Gelsinger, talking about the quarter, talking about the future for INTC.
Welcome to our Bloomberg television and radio audiences worldwide. The focus, Intel and the chip makers' earnings, a forecast for the current period that makes the market nervous about Pat Gelsinger's turnaround plan for Intel, some worry about its data center business and a fledgling foundry business. I'm delighted to say we are joined by Pat Gelsinger, Intel's CEO. Pat, the stock is down more than 10%. What is it that the market is not understanding here for Intel?
Well, thanks, Ed, and always a pleasure to be with you and Carolyn on the show. First, we finished a great year. We got Q4 beat on top and bottom line, finishing a year that was comfortably ahead, and showing the transformation journey that we're on. And we believe we're putting points on the board for a long-term transformation of this iconic company. In light of that, hey, the Q1, at the low end of seasonal. So we think the market reaction is a bit overstated in that respect. We understand it, but our company, our employees are doing an incredible job at delivering our process technology, restoring product leadership, defining new categories like the AI PC. We're on a multi-year journey, and we're not going to be judged on a 90-day shot clock.
여러분,
We are out to rebuild this company, and we had a great 23, and I'm confident in a great 24 for this company.
Pat, there were so many questions on the call about your foundry business, and for our global audience, that's the sort of contract manufacturing business where you make chips for others. And you seem to say that you didn't get as many committed dollars as you thought you might. And I wonder what's standing in the way of that. Customers committing to backing your foundry business.
Yeah, and we're very comfortable with the progress. We said that we'd have one on our leading edge node, 18A, as it's called, and we delivered 4 for the year. We also found that there was a lot of momentum in our packaging business, where we now have 5 major customers on our advanced packaging technology. And we said, hey, we went from $4 billion to over $10 billion of lifetime deal value. So good momentum, but most importantly is the process technology itself. Are we back to a leadership technology? And we're hitting all the milestones, this audacious 5 nodes and 4-year plan, and all the milestones are on track to have us back to process leadership in 25. And as I say, a foundry company, they want to know that if they design on us, they can build the best products, and we're gaining momentum in delivering on exactly that promise. And so proud of my teams for delivering on such an audacious plan. We're on track.
What about track for AI accelerators? Not just AI on the PC, but I put it bluntly, Pat, NVIDIA's run away with this. When or can you regain any sort of leadership in that space?
Yeah, and clearly that's been an area of strength for them. We appreciate that they've, as I say, focused on that for many years, and the market has come their way in a strong way. But our roadmap is gaining momentum. Gaudi 2, we said we're seeing a significant expansion in the customer pipeline that we have. We're ramping up supply, so I'll say we're chasing to have enough supply, to meet market, and we're well underway on our next generation Gaudi 3, as it's called, with 4x the compute, 2x the network in the lab, gaining really, really good early debug in bringing that product to market later this year. So we feel like, hey, yes, we have a lot of work to do here, but the momentum is building, the market is looking for alternatives, and our roadmap is strengthening as we go through the year. But more importantly, Carolyn, is this idea that last year was the year of high-end training. This year, it's about how do I use those models? And that's much more about the enterprise strength where Intel is at the edge, in the PC, and in the enterprise data center. So we see the market coming our way in AI in 24 and 25.
And let's go to that core segment. Let's go to data centers, because you have promised that you are not losing market share there. How do you show that evidence of that, Pat?
In Q4, our estimates are we are about flat in market share in Q4. So clearly we lost share, weakness of products, but that's now being overcome. We are executing on our product roadmap, and we're ahead of schedule on the products for 24. We're seeing great momentum for the 2024 product line, good execution, and I'm very happy to say we sent our first 2025 product on 18A already into fab ahead of schedule. So our execution momentum is building. We see that we've stabilized our market share, and now it's time for us to rebuild where we were before, and we have the products and the strength to go do it. Really proud of our team's progress here.
For our Bloomberg television and radio audience worldwide, we're speaking with the Intel CEO, Pat Gelsinger. And Pat, when I've been down to Santa Clara and sort of seen the reality of Intel, it always strikes me as being more multifaceted than, say, NVIDIA, right, on its high-end performance GPU. A part of that is the packaging. A part of that is your differentiation with Foundry. But I go back to Caroline's point on the core business. What seems to be happening in the context of data center is CPU. And I just wondered if you'd explain to our audience what you think is happening in that market, specifically on the CPU side.
Yeah, and then the CPU, last year was clearly a year there was more energy on the GPU, right, for these high-end training systems. But as we come into this year, we think there's going to be more balance between the CPU and the accelerator marketplace. Clearly, we're going to be participating more in the accelerator, but the strength of Intel has been our Xeon, the core data center CPU. And, you know, coming out of World Economic Forum and Davos and CES, I've probably met with 50 customers. And the enthusiasm that they have and the traditional strength that Intel has in the enterprise. And, you know, we're in year 20 of the cloud, Ed, and 60% of computing is in the cloud, but 80% of the data remains on-prem in the enterprise data center. That's where Intel is uniquely strong, and our CPUs and accelerators are going to unlock that capability for our customers. This is an exciting time for us to really enable them to use those models, and that's a strength for Intel and our CPUs.
Pat, when I look at the cloud and the hyperscalers themselves, the really interesting story is their in-house design work and their in-house silicon progress. Do you consider that a factor in how your own business in the data center and cloud side performed and how you think it will perform going forward?
Yeah, and one of the things that I said, Ed, is Intel has the opportunity of 100% of the AI market for it, because we're going to have our product offerings. Xeon is strong, showing up with greater improvement in our accelerator product line. But we're also going to be a foundry, and all of those internal programs that you see at Amazon and at Google and at Microsoft, hey, I want to be the foundry for those. And all of the competitors' products, I want to be the foundry for them, as well as we're seeing the momentum of our packaging technology. So when you think about it that way, Intel uniquely is the company that has the opportunity to participate in 100% of the AI market with our products and our foundry, and that's exactly what we're intent upon doing.
Has any of the weakness in demand thus far been because of this in-house design and build commitment from some of these companies, or have you already managed to sort of seal verbal approval that you'll be doing these for them from a foundry business?
You know, at this point, I'd say it's pretty early. I don't think it's really affected the market that much, Carolyn, so far. But I do think this forward-looking view is a unique one for Intel, that we do get to participate in both sides of that market. There's a lot of energy here, as the cloud vendors are saying, how do I have a more cost-effective solution for these large training and inferencing demands of generative AI? And for that, every one of them has these projects underway, and we're engaging with all of them as we speak. So I really see that as a long-term opportunity. It takes multiple years for those to materialize, but our technologies, as they gain momentum, are showing up at just the right time to satisfy a unique AI market for those cloud vendors.
And we've just been hearing how, you know, within this change that we see around AI, so comes a change in talent in many of these companies. Are you in any way having to reorientate your own workers, your own colleagues, Pat? Are you having to let go of people?
Well, every day it's focused on talent. And in the technology industry, Carolyn, talent, right, as one of our CFOs used to say, he said, we start with sand, right, the second most plentiful material on earth, and everything else is talent between then and delivering our products and technology. So this idea of talent is so critical to our markets. Now, Intel has a well-tenured and very capable base in both software and in hardware, but we're reorienting them very fast to the AI requirements, to data skills, to software skills, but we build on a very firm foundation, and we're making good moves to bring additional talent into the company as well, to continue to have the best people to do the best products, to enable the best customer experience that they could possibly have. And a great example of that is the AI PC, where we're unquestionably defining the category, have a strong roadmap, and delivering on it at scale with ISVs and our OEMs in the marketplace today.
Pat, before we let you go, you mentioned 18A. You in the past have been kind and explained to me what it takes to jump generation to generation on the manufacturing side and kind of the process to retain and regain technology leadership. So in the small time we have left, what evidence do you have that that beautiful chart you drew for me on the whiteboard is playing out the way that you expected to?
Well, we delivered the design collateral. It's called a PDK in Q4 of last year. We've seen our customers expand against that. And most importantly, we sent our first major product into the fab just before earnings call started ahead of schedule. And if you can take a big processor design like a server chip and send it with stable design rules into manufacturing, that's a pretty definitive statement of momentum. And we're adding customers, and we have 75 test chips in the plan right now. So lots of customers are saying, let me try my design. And importantly, we have our Foundry Day, this opening of the doors of Intel Foundry coming up in February. So a moment for the ecosystem, the EDA partners, the IP providers, and our customers to show up and see the progress that we're making. And for the first time, we'll talk about what comes after 18A. We're not finished. The Moore's Law, we are the stewards. Until the periodic table is exhausted, we ain't finished, and we're confident we're the company that's going to keep innovating in process technology for decades to come.
Moore's Law, indeed. Intel CEO Pat Gelsinger, thank you.
All right, that's Ed Ludlow, Caroline Hyde, Bloomberg Television, speaking with Pat Gelsinger, CEO of Intel, after their quarterly numbers. We're going to bring back Kunjan Sobhani. He's the tech analyst for Bloomberg Intelligence. Hey, Kunjan, just real quick here. You listen to that. Mr. Gelsinger seems pretty confident. What do you think? I guess Kunjan drops. That's okay. We'll get his opinion next time. But I'll tell you, I guess my takeaway was they feel confident in the product lineup. They feel confident that they can be a player in AI. The street, obviously, less so. Although I will note, over the trailing 12 months, stock is up 50%. The street was buying it.
Yeah.
But now, I guess what we're seeing in stock is just a reaction to their guidance.
Well, also, they had a 52-week high in December.
Yeah.
So,
if context.
Yeah,
context is important.
Context changes everything.
Yes,
Paul.
it does.
And in terms of the stock, maybe it actually does.
Absolutely. All right, we got the S&P 500 up 0.2%, the Dow up 0.3%, NASDAQ kind of unchanged here, we will call it. The 10-year Treasury 4.13%, up about 2 basis points here today. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Morris.
All right, thank you, Paul and Alex. The UN's top court has stopped short of ordering a ceasefire in Gaza, but in a case brought by South Africa accusing Israel of genocide, the International Court of Justice at The Hague has ruled that Israel must take steps to prevent such acts. ICJ President Justice Joan Donoghue says the court calls for the release of all Israeli hostages taken in the October attack.
It is gravely concerned about the fate of the hostages abducted during the attack in Israel and calls for their immediate and unconditional release.
Israeli Prime Minister Benjamin Netanyahu says Israel is fighting a just war. GOP frontrunner former President Donald Trump calling for Senate Republicans to not make a deal with Democrats on border security so he can deny President Biden a legislative victory ahead of the elections. West Virginia Senator Joe Manchin criticized Trump for discouraging a deal.
Former President Trump saying, don't fix the border, okay? Because that'll be something I can use for campaign. You're going to let people basically continue to our country because you don't want to fix something for your political purposes. that's not the right reason for running.
Senator Manchin has been the focus of speculation that he would run for president as part of a bipartisan unity ticket. Attorney General Merrick Garland says the Justice Department has expanded coverage under the Public Safety Officers Benefits Program to include mental health support.
Coverage through that program now extends to officers who are permanently and totally disabled due to certain mental health disorders, as well as to those who will die by suicide as a result of exposure to traumatic events that they encounter while on duty.
Howie Leaving Good Foundation is a new organization. It is designed and aimed at supporting mental health and wellness for law enforcement officers. It is named for a former Capitol police officer who was there on January 6th. Global news 24 hours a day, whenever you want it. With Bloomberg News Now, this is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages mixed right now. You had 9 of the 11 major industry groups in the S&P 500 higher. Now, Bloomberg Economics says the stage is set for the Fed to start cutting interest rates maybe as soon as March. The Federal Reserve's preferred gauge of underlying inflation cooling to an almost 3-year low. And despite the data that we got today, Phil Orlando at Federated Hermes is penciling in Fed rate cuts that'll be fewer and later than expected.
We are not in the 6-cut camp with the first cut coming in March. We're more on the 3-cut camp coming in the back half of the year. Personally, I like that first cut in July.
American Express said it's sticking to its long-term profit and revenue goals. Forecast earnings for 2024 topping analyst estimates. It's up about 7.5%, the best performing stock in the S&P 500. And then you have Intel, the disappointing earnings, meaning it's the worst performing stock right now in the S&P 500, down 11%. Overall, the S&P 500 up just 3 points right now, 48.97 on the index. The Dow Jones Industrial Average up 95 points. The NASDAQ 100, 48 points lower. Yields are higher, 2-year space. That's up 5 basis points, 434. The benchmark 10-year yield, 2 basis points higher. That's at 414. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and it's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Alex, I love the gaming business.
You do.
I like to roll some craps every once in a while. I'm not crazy, but I like to roll.
Were you like an M&A, like casino banker back in the day too?
I did a little bit of business there. And Steve Wynn, I'm not unfamiliar with Steve Wynn, and I invest anything that guy is building. And I did it alongside Ron Barron back in the day. So that was very good. Bellagio, still, if anybody needs room, just go there. Give him my name. Take care of you.
I'll 100% do that.
But our next guest really does it for a living. Brian Egger, he is our senior gaming analyst. He covers all the casinos, all the hotels, the cruise lines, all that kind of good stuff. He's been doing it for decades on Wall Street. We got a Super Bowl coming up. Super Bowl's in Vegas. That's got to be good for Vegas. Brian, how big?
Yeah, it's big. I mean, it's the first time Vegas is a host city. You know, I think if you look at other analogous types of big events, the Formula One Grand Prix back in November, what we saw for that event, November 23 versus 22, is you had table game revenue shot up, room rates shot up, slot revenue was a little weaker, but all the high-end business for both gaming and hotels certainly benefited. We'll see what it does to the bottom line in terms of how many rooms they gave away. We'll get a better sense of that during earnings season, but certainly from a top-line perspective, you know, these big events are really powerful, and the Super Bowl in Vegas we expect the same.
So Brian, we keep getting really solid economic data. The consumer is definitely spending. Are they still spending on experiences and stuff? Is that helping gambling in casinos?
They are. They're definitely spending on experiences. Vegas is a big beneficiary of that, both on the gaming side and the hotel side, and you know, the convention business being back as well. Vegas is certainly up. Vegas is up very significantly versus 2019, but it is up also year over year. The comps get tougher, but it's definitely benefiting.
I mean, so Vegas, one of my favorite towns of all time.
Really?
Oh, yeah. 3 nights, it is my favorite place in the world. 4th night, I'm like, I'm done. So, I mean, the convention business, that's how most people get introduced to Vegas here, this convention business. So I know that's such a big part, and I know that's back. Is Vegas at the point where it always seems like they can't possibly think about building another big resort, yet they do?
Yes.
And they sell the rooms, and they get the rates. It's just amazing. Where are we in kind of the development of Vegas?
So the big recent opening was the Fontainebleau opened in December 13th. So that's a recent opening.
And where is that?
That's also the north part of the Las Vegas Strip.
Okay.
Yeah. So it's you know, and also we had back 2 years earlier, We had another major opening with Genting's Resorts World.
Right.
So we are seeing some development. In percentage growth terms, each of those openings is maybe a 2% increase in room supply.
Yep.
So it's nothing like back in the 90s when we had several openings in a quarter. But nevertheless, it is kind of filling out some
And that's
of the
when
spaces.
he was at DLJ, killing it on the street, doing all kinds of.
This is the opening parties for the Luxor in 1984.
Okay, so speaking of the opening parties, Jody Laurie, who covers cruise lines and stuff, went on, what was it again?
Icon of the Seas.
Icon of the Seas, right? And when so the talk about like, here something's opening, come join us. And she was saying the whole point of these cruise lines is they want to be Vegas on the seas. I mean, I'm extrapolating, but is the cruise line industry eating away at Vegas?
Yeah, so they all. First of all, I have to say, Jody went on a cruise and all he got is this lousy T-shirt.
Yes,
that's like
we didn't
I
get
did
a
not go on
t-shirt.
that cruise, right? I didn't get a T-shirt actually. But I mean, to the point, yes. I mean, they're all competing for the same discretionary dollar. Cruise lines are doing well. Vegas is doing well. In essence, they compete for a similar customer. The penetration expansion is a lot lower for cruise lines, but they're all benefiting, and we've yet to see the consumer roll over. Comps do get tougher, but the appetite for experiences and leisure travel remains very strong.
Talk to us about the sports betting business. It's legalized in so many states now. It's gotten so big, and you listen to sports radio, it's every single ad. It's on television, on all the big sporting events. It's just exploding. Talk to us about that business as a business of itself, and then maybe is that impacting kind of the sports books at some of these casinos?
Yeah, I think first of all, in terms of the business, Vermont just started up mobile sports betting this month. North Carolina recently. We're filling in all the states. There's more and more of it. The big challenge has been gaining profitability. So what they are doing is targeting promotions more effectively. They're reaching now the point of actual profitability, a much better point than they were a year ago. Companies like DraftKings. I don't really think it competes directly against brick and mortar sports books. Maybe it does to some degree. But in markets where you do have both mobile and brick and mortar, mobile gets such a bigger part of the pie.
Can I just share my story about gambling?
Sure.
So I went to the Bahamas with my husband, and we were at an Ultimate Texas Hold'em table. 21-year-old got quad queens.
Wow.
And it was amazing. I know that's not sports betting, but that's like the moment you live for. Like, that's so cool. Like, he
Especially if you have
cried
a
and
big bet
called
out
his
there.
mom. It was so great. But for sports betting, how hard is it to understand, like, okay, it's legal here, it's not legal here? Like, does that get into difficulty when they're reporting their numbers?
It's true of the gaming industry generally. You're right that gaming is legalized and regulated on a state-by-state basis. It's true of casinos, it's true of sports books. Now we're seeing online sports books, online sports betting legal in north of 25 states, right? So it's really a significant, something like 45% of the U.S. population has access to an online sports book. There are some states where it's not there yet, but since the Supreme Court blockade against this was lifted a few years back in 2018, we really significantly expanded the industry. So it is maybe some confusion, but more and more it's becoming ubiquitous.
Yeah, I'm looking at the FA function for DraftKings. They're good. I guess finally turned EBITDA positive this year for the first time. So these guys aren't even making any net income.
It took a while, and what happens is you introduce a sports book, it takes a couple of years to reach maturation. You eventually build an audience, and you can take the promotions, giveaways down, and that's what they've done. So in states that are really mature, like New Jersey, they're around 5 years, they're much more profitable than a newer state. But overall, look in the UK and Europe, you've got online gaming is more profitable, but it's a much more mature business.
It's so interesting.
I know. So, I mean, how about you also do some work on the regional casino companies that aren't in Vegas? How's that business doing?
They're doing well. I mean, it's still up
think riverboat casinos.
Yeah,
right?
But not really, but usually not on riverboats anymore. But they're still.
Paul, we're Jersey guys.
They're still
you have
water
to ask
adjacent,
about Atlantic
right?
City.
Near the water.
So depressing.
No, I didn't find AC that depressing last time I went.
Okay.
Yeah, I went to see Amy Poehler and Tina Fey. It was really fun.
I saw Sinatra down there 8 times during high school and college. Go ahead.
Okay, that's okay.
Really?
Yes. It's easy. We drive down.
That's a whole other conversation.
That's a whole other conversation.
Yeah, we're from the same era, so
Yeah.
I'm sure I did too back then. I think the original game business is doing well. It's still up well over the pre-pandemic. It's up year over year. I think the comps do get tougher. Just because we've seen so much growth, particularly. So comps are a little tougher, but it's still doing well. I think the margin story gets tougher.
10 seconds on
labor,
AC. How's AC doing? 10 seconds.
AC is doing okay. I mean, it's like other regional markets. It's up year over year. The big challenge for all these regionals, I'll throw AC in there as well, is costs, competition.
All right.
Labor
You're okay,
costs.
John? I got a little AC talk in there for you?
It's not Vegas. I don't. The people there just aren't as friendly as the people in Vegas.
No, they're just, the pit bosses, the dealers, they yell at you and stuff. But I have a good time when I go down there, so it's all good. Brian Egger covers all the gaming stuff for Bloomberg Intelligence. S&P 500 up 0.1% to 1%. This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker in the Bloomberg Newsroom with a look at some of the company news. Well, we heard just a few minutes ago from CEO Pat Gelsinger. He sounded upbeat, but Intel tumbling the most in 2 years, delivering a disappointing forecast. Shares of Intel right now down close to 11%. This all renews doubts about a long-promised turnaround at the once dominant chipmaker. Intel's first quarter projection for both sales and profit coming in well short of estimates. Executives struggling to soothe concerns. That was during the conference call with analysts. It suggests that the CEO still has a long way to go in restoring Intel's former prowess. Well, this is company news because they have to deal with labor. The Labor Department reports union membership continuing a decades-long decline, sliding to a record low last year. The story from Bloomberg's Vinny Del Giudice. He says the data highlight a disconnect between strong public support for unions and the labor organization's ability to attract new members. That's even with major victories from Hollywood actors winning the biggest pay raise in 2 years, the gains at Detroit's big three automakers, and Spirit pushing back against JetBlue's termination warning. In a statement today, the company says there's no basis for terminating their merger agreement. Spirit says it's going to continue to abide by the agreement and expects JetBlue to do the same. JetBlue has a different tune. They're warning of terminating the agreement on or after January 28th. And a moratorium this morning for the White House. The Biden administration halting the approval of new licenses to export liquefied natural gas. Gives the administration time to look at how shipments affect climate change, among other things. Can affect a lot of projects, including Venture Global's CP2 export terminal planned for the Gulf Coast. That's a look at your company news. I'm John Tucker.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at these markets here, S&P 500 up 0.1%. The Dow's up 0.3%. The Nasdaq's pretty much unchanged here. Call out the Russell. The small cappers doing a little bit better as well, up 0.4%. WTI crude oil off more than 1%, $76.46. Yields a little bit higher here, lifting. 10-year Treasury's up about 2 basis points, 4.13%. And Tom Keane's not here, so let's talk Bitcoin, up 5%, just under $42,000. A little bit of a lift after a recent couple, maybe 10-day sell-off here. All right, right now, let's head down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. The Republican National Committee is withdrawing a draft resolution that would have declared former President Donald Trump the presumptive GOP nominee. The Trump campaign originally supported the resolution following the former president's victory in New Hampshire. The proposal, though, resulted in a backlash. Trump himself later announced he opposed the resolution. The United Nations Human Rights Office is speaking out about last night's execution of Alabama death row inmate Kenneth Smith by nitrogen gas. UN Human Rights spokesperson Ravina Shamdasani.
Rather than looking for novel, untested methods to execute people, let's just bring an end to the death penalty. This is an anachronism that doesn't belong in the 21st century.
This was the first time this new method of execution's been used. The UN says it could amount to torture in violation of international human rights law. The head of the FBI is warning about a rising trend of crime committed by kids. FBI Director Christopher Wray says something has to be done so serious offenders are not turned loose as soon as they turn 19 years old.
Repeat violent offenders need to be held accountable, even if they're juveniles.
He says the FBI is aware of kids who've been radicalized by online videos, and he says there have been instances where the FBI was able to stop a juvenile just before they put their plan in action. The Biden administration has given Texas a deadline to allow federal agents back into a riverfront park along the border with Mexico, which is currently surrounded by fencing and razor wire. It is not clear what will happen if the governor does not comply by the end of today, which is the deadline. Governor Greg Abbott has already put out a statement saying the state has the right to self-defense. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. All in Alex.
All right, Amy Morris, thank you so much. We appreciate it. Alex, I love the big take stories for Bloomberg every day. They're
So good.
really cool topics that you're interested in. They do some deep dives. A lot of great reporting, a lot of great sourcing, well written, of course. Lots of cool graphics too. This one's on, Eli Lilly's $600 billion weight loss empire was late but lucky. So apparently they, like decades ago, had identified this as an opportunity. Nobody was really paying attention to that researcher within Eli Lilly, but they're there now. The company's new obesity shot, Zepbound, is expected to be the best-selling drug of all time. So I'm looking at the Eli Lilly stock. It's up 9% year-to-date, up 85% on a trailing 12-month basis. So people are this obesity drugs, these GLP-1s, they're really the story that really came to the forefront last year.
Yeah.
And now investors are just looking for ways to play it. And Eli Lilly, even though maybe they missed the initial opportunity to own the market, they kind of got it now.
Well, it also shows too that there is a first mover advantage, but there can also be a second, third, fourth mover advantage too, and that basically their weight loss drug is said to be more effective. Like it causes more weight loss than Novo Nordisk, for example. On the other hand, you can take a look. Is this like the new AI? You have the AI thing, NVIDIA thing, and now it's the weight loss drug thing. And if you keep topping expectations or topping each other, then that stock is going to rally. It's just the new fad, new switch, or are we really genuinely valuing these companies appropriately?
Yeah, exactly. And so I'm just looking at there's some obviously some good numbers as typically in these big take stories and Bloomberg stories in general. Just kind of tracking the two big leaders in this GLP-1 market, the weight loss, which are really coming out of the diabetes treatment. Eli Lilly and Novo Nordisk both have just had moonshots, and we've got market caps to match here. So it's interesting. My guess is once they figure out how to put this in a pill,
oh my gosh,
I could just see this thing going crazy. So again, a lot of folks are saying this will be the biggest drug category ever.
Yeah.
It's just crazy to think about some of the numbers.
Lose 5 pounds, take a pill. I mean,
exactly.
come on.
Have a wedding coming up, take a pill.
Yeah, exactly.
Balance of Power. Joe Matthew, Washington, D.C. Guess what? That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
They've all left town again. Welcome to the fastest show in politics as lawmakers head for the hills with nothing to show for their work on the border, on Ukraine, on the budget. We'll pick up the pieces today with Jonathan Tamari from Bloomberg Government. He's with us live, along with new reporting on Donald Trump's increasing influence over Congress. We'll also get up to speed on the campaign trail with Bloomberg's Gregory Cordy. Later, the soft landing chorus growing louder. We're going to talk about it with Heather Boucher, presidential economic advisor, and we've got our signature panel here on a Friday. Rick Davis and Jeannie Shanzano are with us for the hour. So let's wind up the band, as always, starting with Charlie Pellet and a look at Wall Street from New York. Hey, Charlie.
Well, hello there, Joe Matthew. We have got the Dow, the S&P, NASDAQ, all in the green on this Friday. Right now, the S&P higher by 8. That is a gain of just about 0.2%. Wall Street, though, grappling with another mixed economic report. Sent treasuries down. Traders are betting that the Fed will signal patience before it decides to cut rates this year. Right now, as I mentioned, the S&P up 0.2%. The Dow up 128, higher by 0.4%, and the NASDAQ Composite Index up by 13. That is a gain of 0.1%. We've got the 10-year now yielding 4.13%, with a 2-year 4.35%. Gold down $3 the ounce. Spot gold 2017 the ounce lower by 0.2%. West Texas Intermediate crude a retreat from yesterday's advance down 1.5%. WTI right now 76.23 a barrel. The Federal Reserve's preferred measure of inflation has reached an almost 3-year low. And with that story, here's Bloomberg's Vinny Del Giudice.
Bloomberg Economics says the stage is set for the Fed to start cutting interest rates perhaps in March. Core PCE ran at 2.9% in December on a year-over-year basis. The data punctuate a year that saw inflation retreat at a much faster pace than Fed officials anticipated as low unemployment bolstered consumer spending. Footnote, spending topped Wall Street estimates last month. Vinny Del Giudice, Bloomberg Radio.
Salesforce.com cutting about 700 workers, adding to a brutal string of tech layoffs at the start of this year. Salesforce up today by 1.25%. After earnings, Intel shares, they are plunging. Intel down 10.6%. Among other chip makers, Advanced Micro Devices, which reports next week, down 0.9%, and Nvidia shares down now by 0.4%. But recapping here, we have got the Dow, the S&P, NASDAQ all advancing. Friday rally underway. S&P holding above 4,900, 49.03 on the S&P, up 8, gain there of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to the Friday edition of Bloomberg Balance of Power. Live from Washington. Yeah, it's really Friday, the threshold of the weekend. Here we are. We've survived Iowa, New Hampshire, and now at last, a moment to breathe. Especially if you're a Washington lawmaker, they're gone. Everybody home for the weekend. Early. You're working today, right? Without finishing the job on anything that we've been talking about here, beginning with a border deal. And that brings us to the Dear Colleague letter. Now, if you listen to this broadcast, you know what that means. Dear Colleague letter. Never good news. And this time from Speaker Mike Johnson. DOA reads the letter, talking about a border deal. He says that being negotiated by senators, of course, no text yet, but what he's hearing would be dead on arrival in the House if the rumored contents of that proposal were true. Also telling lawmakers in this letter, the House will hold a floor vote on impeaching the Homeland Security Secretary, Alejandro Mayorkas, quote, as soon as possible, unquote. That would, of course, be one of the people sitting at the negotiating table in the border deal, which you don't think would improve the vibe in the room. So let's get started with Jonathan Tamari, covering Congress, of course, for Bloomberg Government, with us now. I'm guessing you're working from home, Jonathan, because there's nobody on Capitol Hill today. Anybody talk about a working weekend to maybe chip away at any of this stuff?
Well, I think that the senators who are negotiating or trying to negotiate this border deal are probably going to be talking through the weekend. But most of the rest of Congress is basically watching and waiting to see what they come up with, what they propose, and if they can reach a deal, what the final details actually look like.
Well, just like that, just like at this time yesterday, as I'm trying to speak truth to what's going on here based on the little that we know, Jonathan, Kyrsten Sinema hits the send button again. We're close to clinching a deal on a bipartisan border plan, she writes. We're making good progress day by day. The tweet almost identical in timing and content to what we saw here yesterday. Is she talking to the leadership? They're just plowing ahead no matter what, it sounds like.
Yeah, I mean, I think she's probably talking to fellow senators and trying to keep some hope alive for this deal. You know, they're each day she's kind of basically fighting a fire where it seems like this deal is gonna go down in flames. A day ago was Mitch McConnell casting some doubt on whether it would be politically feasible to even pass the Senate. He and some other Republican senators tried to walk that back, and Sinema tweeted very similar, as you point out, yesterday. And today, Speaker Johnson kind of trying to put, trying to bury the deal himself by saying it's DOA in the House, basically telling senators, don't even bother with this. It's not going to go anywhere if it comes over here. So there's a lot of forces working against this. Sinema and Senator Langford, Senator Murphy, some of the other key negotiators, they still think they can get a deal that possibly can win bipartisan support in the Senate, but there's a lot of obstacles piling up, and the longer it takes, the more that you kind of see opposition grow. That's why when you see something take this long to come together, there's a lot of hurdles that come up along the way, and it makes it that much harder to get it over the line.
Well, you know the line, time kills deals, but I don't know here, Jonathan, maybe we're witnessing something important. Maybe we're actually, if we look at this in a different way, closer to a deal. As the negotiators continue their work, everybody's negotiating in public now, it sounds like. You've got Mitch McConnell saying, hey, we got to wait for Trump. Now Mike Johnson is talking about DOA in the House. We've heard that before. Are they just trying to motivate those in the negotiating room to cut a harder deal?
I think there's some of that going on, certainly from Johnson. I think he's trying to get the most conservative border provisions possible, but I also think there's just a very real chance that it doesn't go anywhere. The House is, run, the far right has significant influence in the House. They want a really conservative border deal. They don't want to help Ukraine. And they also want to use the border as a political weapon against President Biden. So there's a lot that piles up against it. And there are Democrats who might be willing to support a compromise. There's some Republicans who would be willing to support a compromise because they say, listen, this is our best chance to get conservative border policy passed in a generation, and it won't be there if Trump wins again. So there is a coalition possible, but we know that hard right exerts a lot of influence. We know Trump exerts a lot of influence in the House. That's, his signature is kind of chaos, and the House has been chaos. So I think it's not just negotiating. I think there's a real risk that even a deal in the Senate won't pass the House anyway.
Well, I want to ask you about that because you're doing some great reporting on it. The phone's ringing, and it's Donald Trump on the line. If you're Mike Johnson, certainly. And you've got the story on the terminal. Trump Senate support shows he doesn't need GOP. They need him. Why would anyone think that a border deal could pass the House when he's influencing the Speaker and the conference? He's not going to want Joe Biden or Democrats to get a win here. He wants to run on immigration, right?
That's right. And and that is, as we just said, one of the major hurdles. I think for somebody who wants the deal to pass, the argument is they get something in the Senate that has significant bipartisan support. And then you have the president, you have the Senate Democratic leader, the Senate Republican leader, the House Democratic leader, all supporting a deal with a big bipartisan vote behind it in the Senate. And there's one holdout faction in House Republicans that maybe that becomes politically untenable for them, even with Trump's influence. And they can say, hey, listen, we're trying to solve the border. And Republicans who've complained about the border for years are the ones who are blocking the solution. That is the hope that political pressure will build. But as we just said, against that is Donald Trump's influence and the idea that Republicans have that right now Biden is taking on water over the border, and they're happy to, some of them, not all, some of them are happy to leave that problem in his lap until the end of this election year.
Appreciate your being with us, Jonathan. I guess they'll be flying in then Monday evening, Tuesday morning, get back to work Tuesday afternoon. The government set to start shutting down a week from Thursday if you're playing along on your home game. Jonathan Tamari at Bloomberg Government, as we turn our attention to what's happening on the campaign trail with just top-notch reporting throughout the Iowa caucuses and New Hampshire primary from this guy, Gregory Cordy, our colleague in the trenches of covering the campaign here at Bloomberg. It's good to see you. Nice to see you back in Washington. Everybody got out alive somehow. By the way, did you notice today it's 100 degrees warmer in Washington today than it was when we were in Iowa?
Absolutely.
Consider that.
Yes.
We're data people at Bloomberg.
Yes.
It's on to South Carolina, Gregory. This is a real different feel, different contest than New Hampshire. Joe Biden and Donald Trump are on their way. Nikki Haley may already be there, but these two guys are acting like the general election has already begun. What's going to happen in South Carolina the next 4 weeks in a spot that is known for dirty pool and ugly politics?
Yeah, obviously, former President Trump and President Biden both have their own reasons for wanting to get at each other as early as possible. But there is Nikki Haley here still sticking around. And we saw out of New Hampshire a result that wasn't exactly the death blow that Trump was hoping for to get her out of the race. Not exactly the upset that she wanted to propel her. So we're kind of in limbo here, where the race is kind of unsettled. Everybody is watching Haley's donors. She had a good number of prominent donors, including Reid Hoffman of LinkedIn, who says now he's not going to support this cause any longer. The worry that among the big dollar donors that they're throwing good money after bad. And yet Haley is getting more money from small dollar donors that could propel her into South Carolina. And by the way, we have a whole month until the South Carolina primary, which is almost unprecedented in the primary calendar to have that long. We're kind of skipping over Nevada.
Yes, right.
For very complicated reasons. Yes. But a lot can happen in that month. But you got to say it's a big uphill climb for Nikki Haley, but it's technically still a race.
Fascinating, and a lot of things to ask you about here. You mentioned the money trail. She's got this big donor meeting next week. Donald Trump is threatening to blacklist, if you will, donors who move in her direction. Are they moved by that when he goes on Truth Social to try to intimidate the guys with the big money?
I think in some ways it might have backfired.
Does it inspire them to donate to her?
We'll have to see who these donors are, and we're not going to get the campaign finance reports on that for some time. But for the small dollar donors, if you're an independent or a Democrat and you'd like to see anybody but Trump, that's a motivating factor to say, you can blacklist me all you want. Yeah. I was never going to give you in the first place.
Maybe it's a point of pride for some.
I think it might be, and look, those small dollar donors do matter. You look at the calculus for a candidate dropout. It's either the two main decision factors are, can I get a job in the next administration? And how do I preserve my political capital to make that happen? I think Nikki Haley's sort of made the calculation that she's not working for Trump again.
Right.
That's not a big motivator for her. But then also, sometimes you run out of money. And it's not just the TV ads. It's literally the planes and the staff and the infrastructure and the campaign headquarters. All that costs money. So far, she has the money to sustain that. Maybe it's not the big air campaign that she would like, but it's just enough to get her through South Carolina, which is her home state. It's also a very Trumpy state.
Very different than New Hampshire. What do you make of the party's effort to bring this to a close? You've got Ronna McDaniel within 24 hours of the New Hampshire primary saying it's over. Nikki Haley should get out of the race. Donald Trump's the nominee. There was apparently a conversation within the RNC to start formally calling him the presumptive nominee. Heard of anything like this?
No, I haven't. And it's funny how we throw around terms like presumptive nominee, and we know what it means. But there's a power to that term, obviously, and Trump would love to cloak himself in that mantle. There was this idea floated within the DNC. Can we just shortcut this and go straight to presumptive nominee?
The RNC.
Within the RNC. It would be factually incorrect. We don't call a candidate of the presumptive nominee until they've reached the number of delegates to mathematically lock it in.
That's 1215.
That number is 1215, and until Trump gets there, and Trump might get there pretty soon.
Yeah,
by mid-March, it's mathematically possible that he's got the delegates to do that. Trump backed away from that, kind of threw a wet blanket on that last night, probably because he saw that there wasn't really the willingness within the RNC to do it anyway. Of course, he doesn't want to take the loss.
Yes.
So at least for the next month or so, this thing will limp along.
Remarkable. Her strategy then is to stay home. I'm assuming she's not going to have a lot of time to travel the country to prepare for Super Tuesday, which isn't that long after South Carolina. So how does she divvy that up, knowing that nothing's more important than South Carolina right now? If she loses her home state and loses badly, that's probably the end of this thing. But she's got to perform well on Super Tuesday to be taken seriously as well.
Yeah, I mean, you tend to take one state at a time in these primary elections, which, if you think about it, is a pretty weird way of doing elections. Every state sort of takes a turn. Some states go at the same time. New Hampshire and Iowa, because they are the first, you can kind of run simultaneous campaigns there, but really no one's been campaigning too much in South Carolina. Ron DeSantis had an eye on it. The problem with that is if you don't make it to South Carolina, all that effort in South Carolina is wasted because you didn't pass the bar in Iowa and New Hampshire. So I don't think she's looking too far into Super Tuesday. She's got to win South Carolina first. But then Super Tuesday is an awfully big elephant to bite off in one bite. So it's really got to be a very convincing performance in South Carolina. She set at the bar all along that she just needs to improve her performance state over state. And she did. She came in third in Iowa. She came in second in New Hampshire. Does that mean she has to come in first in South Carolina to make this a race? I don't think she's predicting that, but she at least needs to narrow that gap from 10 or 12 points to within a field goal.
Which would require a lot of work. I don't know when we get the next credible poll on New Hampshire, but she's down 30 based on the Emerson poll from earlier this month. Lastly, Gregory Cordy, we're talking about the RNC maybe circling the wagons here around Donald Trump. Is it any different the way the DNC is treating Dean Phillips?
Oh, not at all. You know, both parties' rules are designed to get a nominee quickly because it's to the party's benefit. The sooner you can pivot to the general election issues, moderate in your stance a little bit, take on the other guy, marshal your resources. If you're spending money in South Carolina, whichever Republican it is probably going to win South Carolina, you want to spend that money in North Carolina.
Yes.
You want to spend that money in Georgia.
Right.
And so the quicker you get a resolution to the nomination fight, the better. The difference between Biden is he is the president. He is the incumbent. And both parties really stack the rules in favor of the incumbent. Trump is kind of a de facto incumbent, but not the incumbent. And so there is a little bit of a question within the Republican Party of how much they want to force the issue to get Haley out of the race.
We're going to learn a lot in the next couple of weeks. We'll see if she gets to South Carolina before anything else. And Gregory Cordy will help us along the way. Great to see you. Thanks for the insights, as always, here on Bloomberg. I'm Joe Matthew in Washington on the fastest show in politics. Our conversation ahead with President Biden's economic advisor, Heather Boushey. She'll join us live from the White House here on Balance of Power. This is Bloomberg.
World Headquarters. I'm Charlie Pellet. We are looking at an up day on Wall Street right now for the Dow, the S&P, NASDAQ 100 index, so does remain lower. That index down now by 11 points, a decline of less than 0.1%. The S&P, though, in the green, pushing higher. Right now we have got the S&P up another 8 points. The S&P, by the way, trading above 4,900, 49.03 on the S&P 500 index, up now by about 0.2%. Dow Industrials up 120. That is a gain of 0.3%. NASDAQ up 18 points, gain there of just about 0.1%. Wall Street's grappling with another mixed economic report. Sent treasuries down. Traders betting that the Fed will signal patience before it decides to cut rates this year. 10-year at 4.13%, with a 2-year now 4.35%. Gold down $3 the ounce. 2017 dropped there of just about 0.1%. Bitcoin surging 5% right now, 41,885 on Bitcoin. And West Texas Intermediate crude oil is lower today, down 1.6%. WTI traded here in New York, $76.12 a barrel. JetBlue Airways says its planned $3.8 billion merger agreement with Spirit Airlines could be terminated in coming days. JetBlue says it continues to evaluate options. JetBlue shares, they're up 2.5% right now. As for Spirit, which by the way uses the ticker SAV, we've got Spirit down now by 12.4%. Recapping stocks higher. S&P up 8, gain there of 0.2%. I'm Charlie Pellet, Joe Matthew. That is a Bloomberg Business Flash.
All right, Charlie, we thank you. Welcome to the Friday edition of Bloomberg's Balance of Power. I'm Joe Matthew in Washington with another good round of headlines on the economy today. Just look at the terminal. This is the kind of stuff the White House was hoping for, and in many cases, planning for over the past months. Fed's preferred core price gauge, PCE, cools